Mahima Vachajani. Good morning, Mahima.
Good morning, welcome back.
Thank you. I don't know how long I'll be here, but at least for the next 1 hour, I can assure you that. And this show is geared towards getting you answers, as you know, to all of your questions, and you know how to send them to us. In fact, those numbers will be flashing on your screen in just a bit. On the top of the screen, you will see a number that you can use to WhatsApp us, and you can also use the number at the bottom of the screen to speak to us, and we'd love to hear from you. Before we get to that, let's take a look at where the markets are. And 25,900 is what you see on the screen for the benchmark Nifty 50 trading at the low point of the day. That indication was there that we would start off a little bit lower, and that indeed has panned out. Let's pull up the contributors list just to see what's pushing the envelope lower for the benchmark. And in fact, it is L&T, M&M. And you know what, you'll get a better sense if you pull up the heat map for the Nifty 50, because while there is more red on the screen than green, the moves are not really terrible on the downside. So you see declines, yes, but at the extent of 1.5% for the worst performer on the benchmark Nifty 50. Axis, Bharti, something like a Shriram Finance, BEL, Asian Paints in the green, not too much to speak of. The broader markets more or less moving in tandem with the benchmark Nifty 50. Let's pull those indices up as well. About 0.6% for the mid cap 150, about 0.9%, close to a percent for the small cap index. So there has been a relative underperformance in the recent past for the small cap index that has been visible over the course of last couple of weeks as well. Today, of course, is the expiry day for the Nifty 50, and so a little bit of volatility is par for the course. We've got Swati Hotkar joining in. She's AVP Technical Research at Nirmal Bang. And we've also got Astha Jain of Hem Securities. Ladies, thanks so much for taking the time, and good morning to you. You know what, we're going to break from tradition and go to Astha on a stock that has been breaking all records, and that is Groww. How far will it go is the question, Astha, and would you continue to hold, or would you take some money off the table? Now over 80% higher than the issue price.
Yeah, hi, good morning to everyone. Now talking about Groww, first of all, our recommendation was a subscribe on this counter for the long term as well as for listing gains. So yes, it did deliver listing gains, and now in the long term, not a fair long term horizon. It is just few days after listing that we are seeing that this counter is showing whopping stock returns. So now my idea here is, because when Groww IPO came at the price band of 95 to 100, so it was at a PE multiple of more than 41. So now from there, what we are seeing that 186. So definitely now the valuation starts looking a little bit stretched, although these valuations are justified when we see the kind of market share they are gaining as compared to their competitors. But my idea here is now not to make any fresh entry at this point of a time, although the prices are rising very, very high. In fact, what I am suggesting is start booking 10% of the allotment. If in any case, if a person has kept the allotment till now, 10% of the allotment can be kept and remain, 10% of the allotment can be booked as a profit, and remaining 90% can be kept for a long term. But yes, from here onwards, I'm expecting price to not move above 200, but we cannot say. Maybe the results can, again, give us some signal for more upside from there. But right now, 200 is the price cap which we are putting for this counter. So idea here is to start booking some profits in this counter.
Defying gravity, and speaking of defying gravity, physics wala is doing particularly well.
Yeah, I mean, a good listing for sure, and up 33%. I mean, even in these markets, it's interesting that it's growing around 33%. But for Groww, the recommendation that Astha has, of course, is book 10% of the profits, and of course, no fresh entry recommended right now. But moving on to the first question of the day, which is from Rajiv Jain, who's writing us from Delhi. He's bought 550 odd shares of NHPC, bought at the levels of 106.35 a piece. Wants to know from a longer term perspective, can he continue to hold or not, and what should be the target? Astha is sitting on loss of around 14,000 odd rupees. What is the recommendation?
Yes, right now he's having the losses, but I think one can keep this counter for a long-term perspective, and we are positive on this counter only for the long-term point of view. In the short term, we may see some sort of, negative moves. So be ready for that, and their reason behind it, what we feel that this quarter was sturdy and it was mainly led by the higher, generation. But still, I think going ahead, valuation plays an important role. First of all, we have to look after the valuation. And my idea here is that the company will resume operations in Q4 of FY26. This is, I'm expecting the resuming of operation of some of their power station, not fully company I'm talking about, but some of their power stations, they will resume operation. So definitely then we can see some more, upside momentum in the financials going ahead. So if horizon is long term, then remain invested in this counter, keeping in mind that in the short term, we can see some more downside from here.
All right, let's go to our first call of the day, and we've got Satish calling us from Tirupati. Satish, very good morning to you. How can we help you today?
Hey, very good morning, Alex. How are you?
Very well. What about you?
Oh, I'm doing great, Alex, except my stock portfolio.
That's okay. It'll get better. What can Asta or Swati help you with today?
See, I bought, for the very first time, I tried MTF and I bought 753 shares of Trent at a price of 43.90.
Okay.
So, assuming that it will go back to its 4,700 levels, 4,600 levels. But I don't know whether it will be able to touch those levels in the next at least a week, 2 weeks. So, I just wanted to check those technical levels. Can you please help me out?
Yes, absolutely. All right, Swati, I'm coming to you for the first question of the day. To you, Trent, only for the next couple of weeks, because it's a short-term trade, the buy price is 4390. What is the potential?
Currently, we have already seen very strong sell-off rally from this particular counter from almost 6200s to now 4250 levels. And now the counter is trading in the oversold zone. So downside depth is limited on the lower side. I believe that we likely to witness very strong pullback rally towards to 4700 levels, resistance provided by its 50 days moving average. Since your position is nearby the current level market price only, I would suggest to hold on by keeping a tight stop loss of 4300 levels on the downside. If it's break that level, then more selling pressure is likely to be intensified. So please maintain the stop loss of 4300 levels, and I believe this stock has a potential to reach up to 4700. Initial targets will be a 4500. Then beyond that level, 4700 levels can be seen. So you can definitely maintain the long positions in the trend.
Okay, all right. So that's the technical view with regards to where trend stands. We've got our next question from Ashok, who's writing us from Dehradun and asking about KFin Technologies, holding 200 odd shares at the levels of 1070. Wants to know from a 1 year perspective, can he continue to hold or not? Swati, from a slightly longer term charts, do you think KFin Technology is attractive enough to continue to hold?
Yes, for a long-term perspective, definitely, because we have already seen a very sharp sell-off in this particular stock. But the only interesting point that it is under the consolidation phase from the last 6 to 7 months, if we are witnessing, it is trading in the range bound of 1000 to 1100, 1150 levels. A breakout on either side will decide the clear trend of this particular counter. But looking towards the chart setup, the stock is just hovering nearby its important moving averages, say 50 and 100 DMA. It's facing a very strong resistance of those levels. I'm looking for a breakout of 1160. If it manages to give the breakout of that level, then the swift upside rally we can witness into this particular stock, which will take a counter towards to 1140 to 1150 levels. So looking towards the setup of technical setups of the KFin Tech, I will suggest to hold on by keeping a strict stop loss of 1050. More risk can be taken, and any pullback rally towards to 1150 to 1200, one should definitely exit the long position.
Okay, all right. So that's with regards to where KFin Tech is concerned. We've got a next caller. Kiran is calling us from Hyderabad. Kiran, hi. A very good morning to you. How can we help you today?
Hello, good morning, ma'am.
Good morning.
My query is regarding Keynes Technology, ma'am.
Okay.
I purchased 70 shares of Keynes Tech at 6010, ma'am.
Okay.
Actually, for a short-term trade, I have purchased these shares, ma'am.
Mm-hmm.
So, is it a good entry, ma'am? What sort of targets could I expect? Or if not this stock, any short-term trading ideas?
Got it.
Is my query, ma'am.
Can you define short-term for me, Kiran?
For the next 2 months, ma'am.
2 months. Okay, all right. Then I'll take this up with Swati. Swati, for 2 months, can he continue to hold Keynes Tech, or should he just book his losses and switch to something else that can, give him some gains?
See, the counter is under the selling pressure, but the interesting fact, it has entered into the oversold zone. So we might witness some sort of a pullback rally. I will suggest to maintain the today's low, that is 5880 levels, kept that as a stop loss. And any pullback rally towards to 6050, I will suggest to exit the long positions, because on a larger degree, the counter is not looking that much attractive, so that you can keep in your portfolio. And if you're looking for the another counter, I will suggest from the mid cap segment really looks good on the technical front. From the banking pack, Axis Bank really looks very good. If you're looking for a 1 to 2 months duration, I will suggest to take a long position in those counter on the Axis Bank. Why I'm suggesting that, because on the monthly chart, the stock is under the form breakout of the pennant pattern. So I believe that whenever the bank nifty is likely to extend its gain on the higher sides, this will be the counter who will participate in the bull rally. And my target, I'm looking for at least 1350 to 1400 levels in the Axis Bank. And on from the mid cap sector, sequence really looks very promising, because on the monthly chart, it is the 4-5 years breakout is likely to be seen into these particular stocks, which comes to nearby 238. On the intraday basis today, we have seen those particular highs, but any move towards to 238 levels on the closing basis will extend the gains towards to 275 to 300 levels. So please keep an eye on those two counters, and definitely you can encash the good amount of a profit from these two bonds.
Okay, all right. I'm looking at Keynes Tech. Pull up that stock just so that we tell you why it is facing a little bit of pressure today, down about 5%. I'm looking at the volume, 1.62 million trades taking place, and it is 3.35 times the 30-day volume, even at this stage, early stage of the market day. And that's because the lock-in period for the stock has ended. 20% of equity can be traded, and as a result of which you're seeing considerable volume and selling pressure coming through in the stock. Interestingly, we've got this lined up for you as a bull versus bear, and this is, of course, in case you didn't know, you should watch the closing show, India Market Close, and we've got our colleague Sharad who will be presenting this as a bull versus bear case at this point. There are several factors that you should bear in mind. All right, let's go to the next question, and it's an interesting one. It's Fortis on a 2-year time frame, and this is a question from Mohit from Ludhiana, and he's bought at levels of 270 rupees, quite a considerable gain that he's seeing, as much as 2.3 lakh rupees. It's a multi-bagger for sure. The question is, what is the upside potential from here? Asta, a lot has been said in the recent past about hospital stocks and the positivity around it, particularly for international patients, right? Because those revenues have been growing between 20-30%, sometimes even more than that. Would you hold on to Fortis?
Yes, definitely, because in fact we are very much, enthused by what management has also guided. So for H2 of FY26, the management has guided for a growth to remain at the H1 levels, and in fact they are expecting, this growth on the basis of the volume expansion. And in fact, I believe that ARPOB improvement will also play an important role. That is average revenue per occupied bed. So management guidance always holds a key for me, because when management is so confident, then definitely the counter is looking very, very much, we are very much optimistic and very much positive on this counter. So yes, there are various reasons due to which we are seeing the hospital space is looking very good to us, and in that Fortis is really looking good to us. I would recommend a hold as well as buy on dip strategy can also be applied for the price target of 1010, 1040.
By the way, we spoke with the management of Max Health as well as Narayana Healthcare earlier today. You'll find those conversations on YouTube shortly. Very interesting trends, to say the very least, about this hospital space. Mass Financial Services is what we're talking about next, and we've got Vivek from Mumbai who's calling us now. Vivek, how can we help you?
Yeah. Hi, Alex.
Hi.
And this question is for Aftaji.
Yeah.
And this is with regard to Mass Financial. I've been holding, this counter for the last 3 years. I have a holding of 1,900 shares at a price of 289, and the stock has been going up and down. So just, wanted to understand from a longer term perspective, and since rates are also expected to reduce, is this a hold from, the next 2 years perspective? What is Astaji's views on it?
Yeah, quick follow-up. It's a considerable quantity that you've bought. Is this a significant part of your portfolio or no? Less than 10%?
No, less than 10%.
It's less than 10.
Definitely.
It's less than 10%.
Yeah,
For
yeah.
sure. Okay.
Yeah.
Great. And kudos for having built that kind of a stock portfolio, Vivek. Let me go to Asta on this one then. Mass Financial Services, 289 is the buy price, so it's not a considerable upside, but because of the quantum that he's holding, he's made a gain of some 40,000 rupees or thereabouts. Would you hold, and what is the potential on the fundamentals?
So fundamental seems to be okay for this counter, because what we have seen, that company has posted a growth of around 18% in their asset under management, that is the AUM. In fact, if I talk about their bottom line growth also, then the bottom line growth was decent at around 18%. So I think this growth, we can say a very, very strong growth both in the AUM as well as profitability, which makes a case for a hold to this counter. So our idea here is that yes, one can remain positive for this counter for the longer term also, and price target can be set somewhere at around 340 to 350 odd levels.
Okay, all right. So that's the view with regards to where Mass Financials is concerned. The next one is from Kumud Seth. He was writing us from Dehradun and asking about HUL. Her question is that what is the target for HUL from a 3 years time frame perspective? Any chance of bonus or right issue is what she's asking. That is something, Asta, that probably we cannot gauge from here for the next 3 years at least. But dividend is something that HUL most certainly pays, right? But in terms of where the fundamentals are concerned, because we've seen volume recovery in Q1, Q2 has also been good for the counter. From here on, do you think it's a good counter to continue to maybe hold, accumulate, or maybe make fresh entries?
Yes, for HUL, we believe that we are, very much positive on this space. And in that FMCG space, I believe HUL is the one which can go till the levels of 2,500 to 2,600 odd levels. First of all, because here he was asking about the targets also. So I think 2,500 to 2,600 are the initial target which we are giving for this counter. Now talking about the fundamentals also, fundamental seems to be okay for this counter, because company's performance was stable during the whole quarter, and this stability which the companies posted in their financial was on the back of strong execution capabilities. In fact, GST adjustments have also played a moderate role, and yes, volume expansion is there. So we believe that FMCG is the space which will be going to perform strongly in the coming quarters. 2,600 as the initial target which I would like to recommend for this counter.
Got it. All right. So that's the view on HUL. Let's talk about Adani Power next. And it's a question from Sushila, who's writing in from Billari, asking for targets if you bought at levels of, let's pull up 162, which is slightly above the current market price. I believe, yes, it is 151 currently on the ticker. Significant quantity bought, 2,938 shares. Swati, on the charts, time frame has not been mentioned, but I'm assuming it's less than 1 year. What would you do with this?
Yeah, at the current levels, my view is a little bit cautious in this particular stock, because a few days back it has given the breakdown of the 20 days moving average, which was the very strong resistance support level at around 160 levels. I believe any pullback rally towards to 160, 162 levels, you should exit the long positions, because on the daily charts, the stock is showing that RSI is showing a negative crossovers from the nearby the overbought zone. So we might witness some sort of a profit bookings, which might take a stocks towards to 145 to 140 levels. So the selling pressure may be witnessed. I will suggest to exit on every right strategy should be implemented.
And a disclaimer, Adani Power is also a part of the Adani group of companies, and so is NDTV Profit. But moving on to our everyday segment that is dedicated towards the derivative space, Sharad joins us to give us what are the cues that are shaping up in trade today. Sharad?
Well, Mahima, we see put writing coming in and seeing global cues on the negative side, and profit booking also coming in. Let's pull up the Sensex heat chart to see how the overall the reds are performing. You see the majority of them are in the red. You could see Tech Mahindra, Tata Steel, Infosys, L&T all cracking in trade. Only Bharti Airtel and Axis Bank are there, but there's also marginal uptick coming in. So overall, we can see that the bears are showing strength. Picking the Sensex futures up also, it is down, you could say by almost, by 0.3 odd %. But overall, the open interest, that has also come down, and the much more focus is coming towards the put writing side. Initial trade, it was lesser side. Now it has gone up, and let's look at the BankX FNO snapshot also. The story remains the same, especially if you look at Yes Bank, IDFC First Bank, and even HDFC Bank actually not participating in the key constituents up move as well. It's almost, you could say, negative. And SBI also almost in a flattish trade. But let's look at the stocks which are very much important. The fresh long build-up, GMR Airports and Hoodco. And if you take the second stock, short covering, we are having PNB Housing Finance, some good upgrades coming in, rating agencies as well. Nykaa surprisingly also holding up. Long unwinding, sale and delivery, that is something which you'll be watching out for, especially metals. That's where the short build-up is also happening. And see, one metal name has come in, and Keynes Tech, that's down 4% on share lock-in expiry today. So these are the important stocks in the F&O segment.
All right, Sharad, thanks so much for getting us that quick update. I believe we've got Ravi on the phone line calling us from Hyderabad. Ravi, very good morning to you. How can we help you today?
Yeah, very good morning, Alan.
Please go ahead.
I have query on Tata Power.
Okay.
Currently, I'm holding 100 shares of Tata Power bought at 348.
Okay.
I bought this at February last year.
Uh-huh.
So since since 3 months, the stock is not moving beyond 400.
Right.
So shall I switch to some other counter or shall I wait for a few more months?
Okay. You've already held for quite a while. So am I right in assuming that this is a long-term portfolio stock, or are you looking for a trade here?
Yeah, trade.
You're looking for a trade. Okay. Swati, on the charts then, is it better to switch to something else? What's the view?
I will suggest at the current level, you can hold on by keeping a strict profit stop loss for 385. 385 is the strong support provided by its 200-day moving average. If you look towards the last 2-month data, the stock is taking a very strong support of 200 EMA, and again, it's bouncing back towards the swing highs. So 385 can be kept as your profit stop losses. Any momentum, if it rallies towards to 400 to 410 level, at that levels, you can definitely book your profits. So at the current level, you can hold this particular stock.
Okay, all right. So that's with regards to where Tata Power is concerned. The next one is from Venkat Reddy, who's writing us from Hyderabad and asking about IDFC First Bank. He's got 5,000 odd shares at the levels of 80 rupees a piece and wants to know from a 3-month perspective, can he hold or exit? Swati, on the charts?
To exit the hold the long positions at the current market price by keeping a stop loss of 78 rupees on a downside, because the counter is under the formation of the flag pattern and the breakout comes nearby 82 level. If it manages to give those breakouts of the pattern, then the very strong rally upside can be witnessed, which will take a stock towards to 86 to 88 rupees on a higher side. So at the current level, you can hold on but maintain the strict stop loss of 78 rupees on a downside.
Okay, all right. We've got our next caller. Tejpal is calling us from Hyderabad. Tejpal, hi, a very good morning to you. How can we help you today?
Hi, good morning. I hope you're all doing well.
We're all doing very well. How are you doing?
Great. I had 20,000 shares of Paradeep Phosphates.
Okay.
I sold 15,000 of them at more than 100% profit.
Okay.
Now I'm holding 5,000 shares at 90 rupees average price.
Okay.
I'm just thinking, should I sell them and get into their parent company, Zuari Agrochemical?
Okay. Tejpal, just want to understand, what was the thinking behind buying Paradeep Phosphate? Do you see the fundamentals of the company before buying it?
Yeah, I bought them long back, more than a year ago. At that time, it was just trading at 90, 100 rupees. So our India is still an agro-based country. That's a main source of income for many people.
Correct.
I thought it was very undervalued at that point of time.
Okay. All right. Tejpal, it's quite impressive that you've entered at the right levels. You made sure that you book profits also. You're still sitting on profits of over 3 lakh rupees. So that's quite impressive. But I'll take this up with Asta. Asta, do you think there's more steam left where Paradeep Phosphates is concerned, or should you book out and enter into something else?
I don't think that he should book out, because now, first of all, results were very, very strong. What we have seen that their sales growth was 30% up. And in fact, the company has a planned capacity expansion of around 3,600 crores also. Now, why these results are coming to be so strong? This is mainly led by the acquisition of one company, which I suppose it was like, if I'm not wrong with my memory, then it was Mangalore Chemical and Fertilizer, the name of the company. So with the acquisition, with the merger of that company, the company has started showing a very, very strong numbers. So I think still the company, the steam is left for this counter. So I don't think that there is any need to book out profits from here and go to Zuari. One can remain invested in this counter as well. So idea here is to hold this counter.
You're bang on about that merger. All right. So that's a view. Hold on Paradeep Phosphates is the view. Ambika is okay. Before we do that, actually, it is time for rapid fire, and this is where we take as many questions as possible over the course of 2 minutes, and both our experts know what this means. So the first question is from Ambika. In fact, CMS Info Systems is the name of the counter. She's bought at levels of 361, and she wants a long-term perspective. Should she hold or exit? Asta, what's the view?
Hold is recommended for this counter for the long-term perspective. Price target can be 380 to 400.
Okay, E2E Networks is the next one. Raghu Kiran has bought at the levels of 3,290 shares. What is what he has in his portfolio? Hold, exit, or average? Swati, your view on the charts?
The current levels you can hold on average can be done at 2400 levels for a target of 3000 to 3200.
IRFC is the name of the counter. Swati, coming to you. Bought at levels of 146 in Jan 2025. Significant quantity, 10,000. Would you hold or exit at this point? Mr. Rao wants to know.
At the current levels, I can definitely hold on because stock is trading the oversold zone. Upside levels can be seen up to 135 to 140. So it's hold from my end.
Okay, ITC Hotels is the next one. Gul wants to know whether he can continue to hold the counter for the next 1 year. He's got 20 shares at the levels of 182. Astha?
Yes, one can remain invested in this counter. Price target can be set at around 230 to 240 odd levels.
Siddharth wants to know about Quality Power and or Apollo Microsystems on the fundamentals. Both are in the loss. Would you hold on to both, Asta?
Apollo Power, I think the second the second counter is looking good. Apollo Micro, I'm sorry.
Yeah.
So yes, hold for Apollo Micro. Yeah.
Okay. Vahin wants to know about Asian Paints. He's got 2,400 shares at the levels of 60 rupees. I'm not sure about this. But Asian Paints is the counter. What's the view like, Swati, on the charts?
My view is definitely positive. I'm looking for a target of 3000 to 3100 levels. You can hold on. If you want to keep a profit stop loss, 2800 will act as a crucial support level. So can hold it the long position.
Swati, Saxoft, if you're holding with a decline of 8%, the question is, would you hold? Suraj wants to know.
At the current level, looking towards the momentums, yes, definitely hold on. You maintain the stop loss of 210 rupees. Upside 230 to 35 levels can be seen.
Okay, Meher is holding Ashok Leyland since it was 35 rupees. Now it's 147. Wants to know if you can continue to hold or not. Astha, your view?
Definitely a hold. Price target can be at 175 to 180 odd level in the long term.
Alright, okay. So that brings us to the end of first rapid fire round of Ask Profit. But viewers, we're going to take up a lot more query on the other side of the break. So do stay tuned.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
the NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that will be flashing on your screen in a bit. There you go. These are the numbers where you can either call us or WhatsApp us. We've got our next question from Chike Gowda, who's writing us from Bengaluru, asking about Bellrise. He's got at the levels of 129 and 4,000 shares is what he has in his portfolio. He says he can continue to hold this for the next 2 to 3 years. Asta is already sitting on profits of over a lakh rupees. Would you recommend him to continue to hold for the next 2 to 3 years?
Yes, I recommend a hold on this counter for coming 2 to 3 years, especially if the horizon is that long. Not talking about Bellrise, it came in the IPO. That was in the May 2025, if I remember correctly. And the issue price was around 85 to 90. But what was the major feature of this company is that, first of all, it was a very old company. It was established in 1988 only, and it is a leading automotive component manufacturer. The kind of numbers they are posting, the kind of hold they are into their market, I think it's really exceptional, and we still believe that this counter has left more upside from here. So definitely a hold is recommended for this counter for the price target of around 180 to 200 in the long term.
Got it. Okay. We've got Sanofi next that we're talking about, and this is a question from Rakesh, who's writing it from Bengaluru. He's bought at levels of 8,054, and he says that he's also gotten issued shares of Sanofi Consumer Healthcare. So he's asking whether he should hold both or sell one or both. Asta, on the fundamentals, coverage on this?
Sorry, Alex, I cannot comment on this counter because I don't cover Sanofi as of now.
Okay, no problem. Any view on the charts? And of course, I cannot ask about the acquisition price because it's considerably lower and there would have been corporate action. But maybe you can just give us a sense on the technicals, Swati.
Yes, Alex, whatever the charts, as of now I'm reading on the Sanofi, the counter witnessed a very strong selling pressure. It is trading in an oversold zone. So this, over a period of time, we might witness some sort of a cool off, or the stock will find out a support nearby 4,500 and levels. So, and then we might witness some sort of a consolidation, then turnaround can be seen. The price correction has already happened. I believe that the time correction will be witnessed in this particular stock. Immediate, and if any kind of a pullback rally we are witnessing, it will be continued towards to 5,050, 200. So I will not suggest to exit the long positions at the current market price because already selling pressure has been witnessed. Now it's a time to show some sort of a catch-up rally, which will take a stock towards to 5,000 levels. So I will suggest to hold on at the current market price.
Okay. All right. So that's the view on Satyan. On Sanofi. Satyan is one of our viewers who I was speaking to right now. But anyway, Mohan has got the next question. He's calling in from Bengaluru. Mohan, how can we help you today?
Good morning.
Good morning. Please go ahead.
I just wanted to know view on Poly Medicure. Can I buy the share for a long-term perspective?
Poly Medicure. And why do you like this stock?
Because I saw the EBITDA margins and the shares look to be there in a very good way. So I just thought I'd wonder, like, if you want to invest this amount in the shares in this company, long-term view, it will be good. So I just wanted to know whether.
Okay. In the healthcare space, manufacturer of medical devices, of course, trailing price to earnings of over 50 times. So the argument is whether or not it is currently attractively placed valuation-wise. Asa, is that the case, or are there better options in the healthcare space?
So if I look after the numbers also, Alex, numbers were not so encouraging, which I believe if I take out the other income or the exceptional item from their bottom line, then what we are seeing is there is a slight degrowth of around 6%. And in the bottom line, this is after taking all the other income and exceptional item. So I'm not very much, enthused by the numbers as of now. And hence my idea here is to book some profit in this counter because, and in fact, what you have told about the valuations also. So the valuation always looks, expensive when the numbers are also not on the positive side. So right now, idea here is to book some profits in this counter.
Okay, all right. So that's with regards to where Poly Medicure is concerned. The next one is from Thomas, who's writing us from Mumbai. He's holding 1,000 odd shares of Tata Investment Corp after splitting. What he's saying is that he's not sold at its high point. Now sitting on a loss of over. Let's try to pull up as to what his. Okay, he's not given us the buying price, but he's saying that he's sitting on a loss of over ₹1 lakh. Wants to know if he can continue to hold the counter or book his losses. Swati, on the charts.
I will suggest you should definitely hold on this particular counter if you're looking for a longer term horizon, because already after the split, we have seen a very strong sell off in this particular stock. Now, the stock will try to find out a support nearby 740 to 720 level. So the depth is limited from the current market price. A full catch up rally can be witnessed up to 840 to 850 levels. So I will suggest to hold on this particular stock.
All right, so that's with regards to where Tata Investment is concerned. We've got our next caller. Shashi is calling us from Dehradun. Shashi, hi, a very good morning to you. How can we help you today?
Yeah, good morning to you. I have Wipro. I have bought 1 year back at 275.
Okay. Do you want a short term, do you want a fundamental view on this one, or do you want a technical view on this one? What was the thinking behind buying Wipro?
I want to know whether I'll be able to get the same price in next 6 months, or should I switch to another counter?
Sure, okay. I'll take this up with Swati. Then Swati, do you think the 275 levels is achievable in the next 6 months for Wipro?
Yes, definitely. Wipro is the one counter from the IT pack. It has not participated in a very kind of a pullback rally as such. But the stock is under the consolidation phase from the last 4 to 5 months within the range of 230 to 250 levels. I believe over a period of time, we are likely to witness a very strong breakout in this particular stock whenever the IT sectors shows a very good performance. The stock has a caliber to reach up to 280 to 300 levels. So for a longer term horizon, definitely you can hold on this particular stock. If you want to keep any kind of a stop loss, 230 is acting as a crucial support level. So as long as it stays above that level, the view will remain a positive on the Wipro.
Okay, all right. So that's the view on Wipro on the charts. Mahindra is writing in from Bengaluru and asking about PG Electroplast. Significant quantity, I believe. No. Okay, so where's the... Okay, 580 is where it is right now. He's bought at levels of 696. Yes, that's right. And he's holding a significant quantity. It is in fact the case. He's asking whether to hold or sell, and he's not really told us about his time frame. So Swati, I'll come to you on the charts. Would you advise a hold?
Yes, Alex, definitely I will suggest to hold on this particular counter, because if you look towards the last 4-5 months data, the stock is very under the consolidation phase and it's on the verge of giving the breakout. If you look towards the retracement rally, whatever the rally we have seen in the 2024, the stock has already retraced 61%. It has taken a very strong support of a golden ratio which comes to nearby 480 levels, and as of now we are witnessing some sort of a positive momentums. The stock has a potential to reach up to at least 640 to 700 levels on the high side. So I will suggest to hold your long positions for a target of 640 to 700. If you want to keep any kind of a stop losses on the downside, 550 is acting as a crucial supports level. So that can be kept as a stop loss and hold your long positions.
Okay. All right. The next one is from Satyan. He's asking about India Nippon Electricals. It's a fairly small company with a market cap of around 1900 crore. He's saying that it's fallen quite significantly. If you can try to pull the chart up. And is saying, is it advisable to switch from something like a Voltas to something like a Indian Nippon Electricals? Asa, not sure if you have a coverage on this one. If at all, any view?
Yes, Mahima, we don't cover this counter because it is a very small.
It's very small. Swati, on the charts?
Yes, on the charts, if you look towards currently the stock is under the selling pressure, I will suggest 820 is acting as a good support level. So by keeping that as a stop loss, you can hold on the long positions. But if you are getting any pullback rallies towards 870 to 880 levels, I will suggest to exit the long position. My view is not that much bullish to keep into your portfolio assets. So sell on rise strategy should be implied.
Mm-hmm. Okay. All right. Let's talk about... so we don't normally do this, I must confess, but still it's a question, and so therefore I should ask it. Swati, the question is on Brightcom, and it's really seen its share of regulatory trouble, etc. And the question is about that. Is that, do you see any chances of it getting past that and moving up from here, or would you avoid it completely?
See, if you look towards the this particular counter, I will suggest not.
No, not Swati. Sorry, Asa on the fundamentals.
Sorry, Alex, can you repeat the question?
Brightcom is the name of the counter. It went through a suspension by SEBI and its management has faced issues. Regulatory challenges exist. The stock is currently trading at 13.7. Would you consider entering? And really, the bet from the retail investors' perspective is that if there is a turnaround, then there is a considerable upside. It has happened for certain counters. Is this one of those?
At this point of a time, it's a no from my side. Maybe it will turn around. Maybe we can see some more upside from here, but let it be stabilized around those level and then make any call. Right now, I don't think that it is the right time to enter into this counter. So idea here is to stay away from this counter.
Stay away and bear that in mind. Look at the fundamentals at all points of time. We've got Shashikant, who's writing in from Telangana, not calling from Telangana, I should say. Shashikant, how can we help you today?
Sir, I have bought the Infibeam Avenue at rate of 1830.
Okay.
10,000 seats.
Okay.
What is the target?
What is your time frame?
3 months.
3 months. All right. So I think on the charts, Infibeam bought at levels of 18.3, currently 19.2. Would you hold for 3 months?
Yes, I will suggest to hold on this particular counter because the stock is under the formation of a flag pattern. It's on the verge of giving the breakout. 20 rupees is the strong breakout levels. If it manages to give a breakout, 22, 24 levels can be seen in the near-term future. So you can definitely hold on if you want to keep a stop loss. 17.50 is acting as a good support levels. By keeping that as a stop loss, you can hold your long positions.
Okay, all right. So that's the view with regards to where some of these names are concerned. But the next one is an interesting one. Roopchand from Mumbai is writing in and he says that he's a senior citizen and wants to know if any hotel stock industry no, his question is, are the hotel industry stocks overvalued currently or not? Which hotel industry stocks are worth investing at the current valuations from both short to medium term perspective? His personal choices are Chalet, Park Hotels, EIH, Royal Orchid as well as Lemon Tree. Asta, I'll come to you on this one. Any of these names make it to your cut?
I like Lemon Tree. So yes, Lemon Tree if I talk about the valuation, but yes, valuation if I talk about the hotel industry, 52 to 53 is the average P which we attribute to, or which is the industry price to earning multiple for this industry. So looking after the valuation of Lemon Tree, it seems to be a little higher on those parameters, but the kind of growth this has shown. So we are very much positive because they are continuously opening, new hotels, and this time not in the tier 1 cities, but in the tier 2 cities also they are continuously expanding. In fact, if I talk about the numbers also, numbers were on the decent side. So Lemon Tree is looking good to us.
Okay, Lemon Tree is looking good to Astha where the hotel stocks are concerned. But we've got our next caller. Raghu is calling us from Bengaluru. Raghu, hi, a very good morning to you. How can we help you today?
Hi, happy tuning Tuesday morning.
Same to you.
Raghu here from Bangalore, and thank you. And I just wanted to ask about the Biocon buy.
Okay.
Is it the right time for long term? Because Biocon Biologics is going to merge with Biocon. That is the news we got. Just wanted to know.
Sure. And this is from a long-term perspective, Raghu. So I'll take this up with Astha. Astha, do you think this is the right time to make an entry into Biocon?
Yes, because performance operationally wise was very strong. They have shown a very strong growth in their, core business. So we are finding this counter to be very, very strong. And what we believe that going ahead also, this can move till the levels of 480 to 500. So we are positive on this counter with a price target of 480 to 500. Definitely, along with the news, the operational performance is also very, very much supportive for this counter.
Got it. Raghu, must say I love your energy and lovely to speak to you this morning. V. Murli is writing in from Bengaluru and he's saying based on the earnings, based on future plans in defense and solar, can you look at Bondada Engineering at a price of 410 levels for a 12-month period? And he's already looked at the counter, Astha. He's looked at the order book, he's looked at the revenue potential, etc. He's wondering what your view is on the stock.
I apologize because we don't cover this counter, so I cannot comment on it.
That's perfectly fine. Let me get a view for Murli on the charts then. Swati, on the charts for the next 1 year, would you buy right now?
I will not suggest to take a fresh long positions at the current market price, but if you're getting any dips towards to 380, 370 level, those levels will be attractive levels. Upside, I will suggest in the near term future, at least 440 to 470 levels can be seen. So wait for some more time to get fresh long positions.
Okay, let's take the next one. And we've got Tejas Sheth from Mumbai who's asking about Reliance Infra. Again, not a counter that we talk about very often, but let's take it nonetheless. And he's holding at a price of 308 rupees, which is quite elevated. Swati, on the charts, if he's got 1,500 shares, would you just book losses and move on? The stock is obviously a very volatile stock.
To book the losses at the current market price, but definitely you can keep the tight stop loss at around at least 175 to 174 levels. That can be good levels, because we slowly and steadily a bounce back rally can be witnessed to 195 to 200 levels. Whenever you get any upside towards to 195, I will suggest to exit and keep a tight stop loss on the downside.
We've got our next caller, Hari from Chennai, is calling us. Hari, I believe you have a question on TARIL, that is Transformers and Rectifiers India.
Hi, Mahima. It's nice talking to you. Yeah.
Nice talking to you as well, Hari.
Actually, this is regarding TARIL. Like, it's purely I just want to hold it only for a short-term one. After this fall, I just got it. Like, I just heard this news. Like, the World Bank has lifted the ban, and I just entered again. It's only for pure, maybe like a 1 month holding kind of. I just want to exit before that January target of World Bank. So I just want to know, like, what would be the technical pattern for the next maybe like 15 to 1 month.
Okay, Hari, got your question. Got your question. I'll take this up with Swati. Swati, from a 1 month perspective, do you think Hari can continue to hold Transformers and Rectifiers?
Frankly speaking, my view is a little bit cautious at the current level, because on the 10th of November, we have seen a gap down opening, and this particular stock is really facing a very strong resistance of those gaps to fill up on the higher sides. As of now, it has entered into the gap, but unable to maintain those levels on the support basis. Downside, I will suggest to keep a tight stop loss of 315. If it's break that level, then more selling pressure can be seen into this particular counters. Whereas the upside is limited, I believe if it manages to give the breakout of 350, then the stock is finally able to fill the gap which we have witnessed on the 10th of November, which will take a stock towards to 380 levels. But at the current level, my view is a little bit dicey. I'm not much bullish. Try to maintain the strict stop loss of 350, and any momentum on the high side 350 to 370 levels, you can exit your long positions.
Okay, all right. Murthy has got the next question from Hubli, and he's asking about JSW Cement. He has gotten allotment during IPO, and he's wondering whether to hold. On the fundamentals, Asta, is there positive trend for this particular counter amidst this positive view broadly on the cement space?
What we have seen is that the volume growth was strong and the operating performance was also very strong. But I think going ahead, the CAGR growth which we are expecting for this counter is not very, very strong, although they have posted good set of a number, but we really need to see how they will maintain the improvement in the profitability, and the debt is one of the major concern for this counter. So right now I recommend just to hold and look how they perform over their debt level, but no fresh investments, and just a hold, keeping in mind some more downside can be seen in the counter.
All right, okay. So that's the view with regards to where JSW Cement is concerned. But we've got our next caller. Arbaz is calling us from Kolkata. Arbaz, hi, a very good morning to you. How can we help you today?
Hi, good morning. So my name is Arbaz Ahmad. I'm from Kolkata, and I have shares of RVNL, which is 428 quantity.
Okay.
At the price of 47.89. So it is very simple, of course. Like, in a long run, definitely it will go up, because India is having good relation with China and US as well. So definitely things will go in a better way. But for the short term, especially before the budget, what is your view in it?
Okay, all right, and your point is valid, Arbaz. I'll take this up with Asta. Asta, my only point of taking up this with you is that when we get the budget, we also get a railway budget, and a lot of railway counters could stand to benefit from whatever is announced. So your view with regards to RVNL at this point of time?
view is neutral, or I can say just hold this counter, because Q2 of FY26 was very, very disappointing. Not only on the front of, financials, but their margins were also not very much, were positive at all. So the margin were under pressure. The only thing which we have to look that now they are expanding into, higher value segments. So how that will turn out for them, because they are expanding into, rolling stock infrastructure, and maybe going ahead also what we believe that the budget can be a key for these companies. So just in that hope, hold is recommended. Otherwise, I'm still not very much enthused by the kind of numbers this counter has posted, looking after the valuations.
Okay, all right. Pratap Shinde is calling, writing from Pune, asking about Gujarat Pipavav ports, which is bought at levels of 173, and so in the green, but just about, and asking whether to hold at this level. Swati, what's the view on the charts?
My view is positive. I will suggest to hold on this particular stock by keeping a stop loss of a 170. Positive momentum is likely to be witnessed in the near-term future, which will take a stock towards to 185 levels. So I will suggest to hold on by keeping a tight stop loss of a 170 rupees.
Okay, all right. So that's with regards to where Gujarat people is concerned. Mr. Gupta is calling us from Hyderabad. Mr. Gupta, hi. A very good morning to you. I believe you have a question on GMR Power.
Yeah, madam. Hi, a very good morning to you and your team. I'm holding 1,000 shares of GMR Power at average price of 59. So I would like to have a 3 to 6 month view with the right time to book profit, or I can still hold for a better price going forward.
Okay, got your question. Swati, what's the view like on the charts?
The charts is really doing very well. The counter is under the formation of a U-shaped pattern, or we can say the rounding bottom formation. And it has given a very strong breakouts today, along with the volumes in the last two trading sessions. The volumes are also increasing along with the price momentums. This rally is likely to be extended towards to 140 to 145. So you can hold on these long positions by keeping a tight stop loss for 125 rupees on the downside and hold for a target of 145 to 150 levels.
All right, so that's a view on GMR Power. Next question is on Indian Bank, and it's a question from Srinivasan, who's writing in from Bengaluru. He's asking if he buys right now, what is the kind of per year compounded annual rate that he can expect in returns over the next 5 years? Asta, would you suggest an entry, and what kind of return should he expect?
One can enter into this counter because what we believe that the banking space is in all looking very, very strong to us. In particular, if we look after the Indian Bank, I think Indian Bank's performance was very strong on the back of the strong credit growth. In fact, their deposit strategy is very, very strong. Margin, asset quality, whatever numbers we look for any bank, all are looking very strong for this counter. And in most important part, the management has a focus on, a strong growth along with the deposit mobilization and the guidance to keep the margins in the range of around 3.15 to 3.3%. NIM margin, again, I'm not sure whether I'm sure with these numbers or not, but I think 3.15 to 3.3 is the NIM guidance which the management has given, which looks to be very strong. So yes, one can remain invested in this counter.
All right, it's time for the second rapid fire round for today's edition of Ask Profit. Asta and Swati, you both know the drill. The first question is from Satpati, who's writing us from Bengaluru. He's got Punjab and Sindh Bank 1,000 shares at the levels of 5. No. He just has 1,000 odd shares. He's not mentioned the price. Your view, Swati, whether he can continue to hold or not?
Yes, definitely you can hold on for a target of 33 to 34 levels by keeping a stop loss of 30 rupees on the downside.
Gale is the name of the counter. Raghunan wants to know about this. What are levels of 168? Long-term views being sought. Asta, should he hold?
Definitely a hold with a price target of 205 to 210.
Okay, Gravita India is the next one. Current price from a 1 year perspective, can he continue to hold? Your view on this, Swati?
My view is positive. Looking for a longer term horizon, 1950, 200 levels can be, 2000 levels can be seen. Keep a tight stop loss of a 1650 on the downside.
Inox Wind is the name of the counter. Would you buy at these levels? Mohammed wants to know. What's your view on the chart, Swati?
I will not suggest to take a long positions. Any dips towards to 135 to 125, you can take that opportunity, but not at the current market price.
Okay, Tata Motors PV, is it a right buy at the present levels? Asta?
Some more time before entering into this counter, maybe at around 360 to 358.
Okay, Elecon Engineering is the name of the counter. Sankan Narayan wants to know about this. He's bought at levels of 497. He's asking if he can add more for the long term. Swati, what's the view?
Not at the current market price. If you want to take a fresh long positions, 520, 510 level is at the attractive level to take a long positions.
GE Power is the next one. Gunasekaran wants to know if this is the right time to make an entry. Swati, on the charts?
Not at the current market price. Any dips towards to 340 levels can take a long positions.
Okay, let me take the next. Rajesh from Bengaluru wants to know about Jindal SAW. If you bought at levels of 266, would you hold for the long term? Asta?
Yes, General SAW is a hold from a long-term perspective. Initial price target can be 189, 190.
Okay, Borosil Renewable is the next one from a 2 to 3 months perspective. Sunny wants to know if he can continue to hold. What's the view like, Swati, on the charts?
Yes, you can hold on at it from the current market price. 700, 720 levels can be seen in the near term future.
Okay, Mr. Rao has bought Swiggy at a price of 484. Short-term view is being sought. Swati, should he hold?
Yes, definitely this counter can be hold upside. 420 to 450 levels can be seen.
Okay, all right. On that note, we've nearly hit 50. 47 queries done over the course of the last 1 hour. Ladies, thanks so much for taking the time and have a lovely Tuesday. All right, with that, from Mahima and myself and the team that put this show together, thank you so much for watching. It's been fun to be back on this show, I must say. Thanks so much for taking the time.
We've missed you on the show and so have the viewers.
That's very sweet. All right, do stay tuned though. Up next is Know Your Company, and we've got a great one lined up for you. This is NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot. Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come
and welcome to KYC. I am Sharad Dubey and with me is Mahima Vatsrajani, and today the company in KYC is Orkla. Interesting, and this also makes me a bit hungry. A lot of food items they have, right?
Yes, absolutely. A lot of packaged food items and spices is what they have.
All right, but let's see actually what we want to actually know about this company. The company was recently listed also, so of course the data will be limited. But there are some key questions, Mahima, which we will be asking. What's the geographical expansion? This is largely a south-based companies. What will be the margin guidance going ahead? That's also the second question I would be interested in. Apart from this, the sales mix, the guidance, that is also the street will be expecting what lies ahead. We have spoken about the company in the IPO time, but now what's the next leg? That's something we'll be looking at. GST impact and how they will actually go ahead, especially with the capacity utilization also kicking in. And lastly, the volume growth trajectory. A lot of questions for this company, but to decode it and revise it again for our audience, post the IPO, what does this company actually do? And I think that year 1996 has a significance.
Yes, absolutely. It does. It does. That's my birth year as well, but it was incorporated in 1996. Overall, if you take a look at what the company does, it gives a diverse range of food products. And this includes from your breakfast table to lunch to dinner, as well as snacks and beverages and desserts. Now, in terms of brands, it has, iconic Indian heritage brands. Everybody knows what MTR Foods is. Also, Eastern Condiments and Rasoi Magic. In terms of MTR Foods, it has instant mixes, ready-to-eat meals, masalas, breakfast mixes, snacks, beverages such as spices. There's RTC food, RTE foods, vermicelli, etc. In the Eastern Condiments, it also has spices and convenience foods as well. In terms of where the geographical presence is, yes, more focused towards the southern markets, but serves across the countries. And this is, of course, on account of the quick commerce and e-commerce also picking up. The core markets for the company includes Karnataka, Kerala, Andhra Pradesh, as well as Telangana. And it also exports its products to about 42 countries. That includes your GCC countries, US, as well as Canada. In terms of SKUs, as of June 30th, 2025, it did have over 400 products across categories. In terms of manufacturing also, it manufactures goods across manufacturing facilities in India, has contract manufacturing facilities also in India, in UAE, Thailand, as well as Malaysia. And as of 31st of March, the company owns 9 manufacturing facilities in India, and total installed capacity is over 182,000 TPA. Now, in terms of distribution network, over that 800 plus distributors, and around over the 1800 odd sub distributors as well. So this is the overall brief about what the company is and what it does.
Well, that's pretty interesting on that, but let's just show our viewers what are the ratings which we'll be giving for the KYC. And of course, looking at it, of course, income statement, operational metrics, balance sheet, cash flow, these are the important things which you'll be looking at. Apart from that, also shareholding street trade, which is nothing but your stock returns, how this has panned out, and also valuations. These will be the 8 important criteria where we'll be judging the company in KYC. But what will be the first parameter? Income statement?
Right, income statement. So if you take a look at how the company has done in the past 3 odd years, this is the overall view of from FY23 to FY24. This is the reflection of FY24 to 25 numbers. But a 2-year CAGR stands at around 5% in terms of where the revenue growth stands. EBITDA growth of 2-year CAGR has been at 12%. Margins have improved for the company from a 14% to 16.5% in FY25. And profit after tax has grown at a CAGR of around 15 odd %. So in terms of where the top line is concerned, a 5% revenue CAGR, of course, this is also because the overall staple space has been impacted where the entire volume growth is concerned. But in terms of where the top line is concerned, just a 5% growth, and that's why we have taken a conservative approach here and given it a neutral rating. Also, if you take a look at the company's Q2 performance, in terms of the overall Q2 performance, it's done well. Revenue growth at that 4.9% mark. In terms of where the EBITDA stood, slightly down by about 3.3 odd %. Margins, however, has taken a hit in Q2, and this is something that we would want to know from the management as to why it was at 18.3% in Q2 FY25, and right now it is at a 16.9%. And what is the sustainable range of margin guidance? That is something that we would want to know from the management. PAT was down by about 7 odd %. So that's with regards to where the Q2 numbers stand. Now just a brief about the segmental performance also as to how the company did. In terms of spices, the volume grew by around 6%. Deflationary pressure on key raw materials did continue, and convenience food revenue saw a growth of around 19.2%. Sweets category grew by 26.4%. Digital commerce recorded a growth of 48.7%. Modern trade achieved 11.2% year-on-year growth. So I would want to know as to how digital commerce and modern trade is doing for the company. So this is the overall view of how income statement looks like for the company.
Well, so it's basically a neutral coming in, but Mahima, the operational metrics, there's a concern which was raised over here also. You see that has actually also improved going ahead. 23, this was largely 1.8%, 1.5% coming in. FY25, it's 3.5%. Still there's a question mark that when will the volume growth actually pick up? Is there a competition coming from the regional players, or there's a change in product mix? So entire question still remains for the company, and the data, the time period is still less. So I would be giving a thumbs down currently for the volume growth.
Okay, the next one is with regards to where the overall balance sheet is concerned. If you can take a look at the overall shareholding pattern, of course just got listed, so this is the pre-IPO equity shareholding that the company has. But over a period of time, the other equity, that is reserves and surplus for the company, has grown, slightly come down from the FY24 number, but still at a strong 2400 level. So not a bad bargain there. Borrowings, however, are zero for the company, so that's a plus point. No debt on the balance sheet in terms of where the long-term debt stands, except for some lease payments. But cash in bank has also grown at a steady state from a 75 crore to a 190 crore in FY25, and that is why we've given a thumbs up, because it looks like a healthy balance sheet.
Well, 3 financial statements, 2 are already done. The next one is the cash flow segment, and over here you see the cash flow of operations. Post-listing, these numbers are looking strength. The H1 numbers are expected to be on the higher side also, and FY25 see the jump coming in for cash flow of operations. And if you compare that with the ratio cash flow to PAT, that is also healthy, coming in at 99%, highest in the last 3 financial years. Net cash flows, that has also seen a significant up move. That means the liquidity ratios are decent right now. It will be interesting to see the working capital as well. But overall, from my side, it's a thumbs up when it comes to the cash flows.
Right. If you take a look at the return ratios, right, overall from a 3-year perspective, there was a slight dip where FY24 is concerned to that 20% mark, but still a 20% is a healthy return on capital employed ratio, but that did bounce back in FY25 to the levels of that 32%. So overall it looks like a strong performance where the return ratios are concerned. We don't have the ROE yet, but ROC has been on a strong footing, and a 32.7% is healthy, and that's why we've given it a thumbs up.
Well, that's a pretty interesting parameter which we took the company on. But shareholding pattern, not much, because the IPO had come in, there were exits from institutions. Promoters are still holding a healthy 75% stake in the company. This of course includes a large PVC investors in that. FIs under owned 3.6%. DI is also, the story is same. But the public, they are having a good chunk of that float, almost 17%. So because of a lesser time zone coming in for this category, I would be giving a neutral rating, and I'll be looking at overall shareholding, how it actually pans out in the coming quarters.
With regards to where the street cred is concerned, since it's a very recently listed company, of course the IPO was the price was at 730. Since then, it's down by about 9% so not much of a performance there in terms of where the stock price is concerned. But it's also the markets, right? Markets have been volatile. Markets have not been rewarding IPOs recently. We've just seen a few IPOs like Groww or Physicswala that have done exceedingly well. But overall, the market sentiment is yet to turn very bullish when it comes to a lot of these IPOs that have come out recently. So that keeping into consideration, this is a metric where we've given it a thumbs down, since it's down 9% since listing.
Well, yes, it's a very interesting, Mahima, the valuations front, and we are getting very confused when it comes to actually finding the actual peer for it, because the way Orkla is set up, this is into ready-to-eat foods, but Tata Consumer has some segments in it when it comes to the packaging also. But net, the closest peer which we could get was Tata Consumer. It was there in their RHP as well. The overall valuations, that's coming at almost 37 times. It's a trailing 12-month P numbers. Orkla doesn't have analyst coverage yet. Tata Consumer, that's 88 times. That's on the higher side. So net, to balance things out, I would be giving a neutral rating to this entire setup.
Right. So, Tata Consumer is not, a direct peer for sure, because Tata Consumer is also, in a variety of things. But close to what Okla does, Tata Consumer also has a segment. And that's why we've just tried to compare it. And I mean, if you take a look at the valuations, Tata Consumer is very expensive in terms of a trailing 12 month stand. 36 times for Okla is also not cheap, but cheaper than Tata Consumer, and that is why we've given it a neutral rating.
Well, that's pretty interesting, but let's revise all the ratings which we have given over the last 8 parameters. Income statement was largely neutral. Operational metrics largely pointed out on the negative side, but both balance sheet and cash flows, they have done really well, and that's why we have given thumbs up to it. Return ratios, decent performance, so we have given a strong up move. But shareholding and street cred, take it with a pinch of salt. This is a very short period of time where we have given the ratings, and of course the valuations, not direct comparison, but nevertheless a closest peer. But net, we have given roughly 4.5 out of 8, which is pretty decent as compared to what historically we give when it comes to the KYC ratings. But anything new and interesting you have read, you have tracked the sector and even this stock during the IPO. Yeah. Anything new and interesting from the company?
I think GST is going to give a lot of boost to these packaged foods companies. Plus, export has a lot of potential. So when we did the IPO, we also did a SWOT analysis, because if you take a look at the strengths for the company, there is strong brand royalty and market positioning that the company has. There's also high capital efficiency because the return ratios are very strong. Broad distribution and strong export business is also present for the company. In terms of where the weakness stands, it's more macro based, because raw material pricing at the end of the day will decide as to how their margins will move. Underutilized manufacturing facility is also a key concern, and that is something that we'll be asking the management as well, as to where their capacity utilizations are right now versus where they expect it to be. Opportunities, of course, expanding Indian packaged food market, and not just in India, but also the export side of things. Growth through innovation as to how they're trying to, innovate and bring more things into where packaged foods is concerned, more healthier things, which today's,
and Mahima, it's very interesting. We think it's a idli dosa batter is there, but they have spices also, export play. So that will be very interesting to see, how their export outlook goes ahead with. But joining us, we are having Sanjay Sharma. He's the Managing Director and CEO at Okla India. A very good afternoon to you, Sanjay. First of all, we'll be asking you about your expansion plans. It's largely a south-based company, 4 important states in south where you have a significant presence. But now the expansion also comes in. Now you have IPO proceeds also. So how will you be applying that, and going ahead, which areas will you be expanding? Will it be the existing geographies, or are you looking something in west or north?
Yeah, thank you, Neeraj, for the question, and thank you, Neeraj and Tamanna, for having me over for this question. I was looking at your analysis.
Sanjay sir, yes, actually this is Sharad and Mahima.
Oh, Sharad and Mahima.
Your regards to them as well.
Sharad and Mahima, thank you for having me. I'm sorry for getting your names wrong out there. But first, I think, let me just clarify, it was an OFS, so we did not get any money. And the reason why we did an OFS was because we are a cash generating company. We've got enough growth capital coming into the balance sheet. You would see our balance sheet today has close to 350 crores of cash sitting out there. With regard to how do we see growth, I think for that you need to understand us a little better, because food in India is a very local subject. You know that Gujarati food is very different from the Maharashtrian food. And when you come to the 4 or 5 southern states, you actually see different cultures, different languages, and different foods. So you cannot classify South Indian food as one homogeneous set, because the food in Kerala is very different from the food in Karnataka. So given that, we do believe that the business of food is local. And with that at the background, what we have done is we've built a portfolio of products that caters to the local culture, the culture of Karnataka and the cuisine of Karnataka very strongly, and similarly the cuisine of Kerala very strongly. So, what we believe as a growth strategy is really about growing deep in these states rather than growing shallow. Let me just highlight what does that mean. When we entered into India through the acquisition of MTR, we used to sell 16 rupees per person in the state of Karnataka. Today, we are selling about 110 rupees per person in the state of Karnataka. Now, what does this 110 rupees mean? Our largest selling SKUs are 100 gram sambar, which is 76 rupees for 100 grams, which means that today we are selling 120 grams of sambar to a person.
Right.
Now, it means that out of the 260 consumption occasions in a year that a person has, we are only selling to, 10 or 12 consumption occasions. So you can see the scope for growth that we've got even in the local geography. So our business model is largely about building local brands and going deep in our states.
Understood. Sanjay ji, Mahima also joining this side. Just want to get a sense with regards to your raw material pricing. How is that, how has that impacted the business this quarter? One thing. Secondly, your margin range was at that around 16% mark in FY25. Do you think that is a sustainable range of margin that you'll be looking at this year as well and this quarter, considering the GST impact as well?
I think, Mahima, you've really touched the right place as far as our business is concerned, right? Our business, as you know, 66% of our business is in spices and 33% of our business is in convenience food. Now, in spices, the most, 60% of the market is still unorganized. That means only 40% of the market is organized. Now, given that fact, pricing to consumer becomes a very, very sensitive subject for us. Now, over the last 2 years, when you look at us, and I'm coming into this quarter as well, you'll see that the prices of spices has deflated 10% the previous year and another 12% this year. So it means that prices of spices over 2 years ago have deflated almost 24-25%. And this, of course, has impacted our top line growth, which you see as a 4.9% in this quarter. But that is also affected on account of other things. I will come and talk to you about that. Now, so our growths have been soft, but our volume growths have been extremely strong. So if you look at our volume growths, I think in FY25, you saw a volume growth of 3.5%. Last year, when you saw a volume growth, you saw, in the first quarter, when you saw, we had a volume growth of almost 8.5%.
Right.
And this quarter, we've delivered a volume growth of 7.7%. Now, if you have read the newspapers today, you will see that Nielsen came out with a report which talked about the whole FMCG sector's average volume growth at 5.4%. So
Absolutely.
we are outperforming the FMCG sector in terms of
Right.
volume growth at this point of time.
Right.
Of course, value growths are hit on account of commodity softness. And while the rest of the FMCG industry looks at inflation in most of the categories,
Right.
we have a 25% deflation or a 12% deflation over last year to deal with.
Okay.
So I think that is what is causing the softness. But I think if you look at where I stand from, business is developing in the right trajectory.
Right.
We've moved our top line up from 1.6 to 4.9.
Right.
If you remove the non-business impacts which have come onto the P&L, we are actually growing at about 6.8% with a volume growth of about 7.7%.
Fair enough. Mr. Sanjay, volumes. You talked about volumes, and we've seen that this year, FY26, there has been volume recovery in the entire space. You said you've already done that 7% mark. Do you think an early double digit is possible by the end of FY26?
Well, we are not allowed to give forward-looking statements, but I think we are moving in the right direction. And with the GST, which actually came in pretty late last quarter, disrupted our business for about 8 to 10 days. We've still delivered a 7.7% growth. I think going ahead, you can certainly see that GST will have its effect. Consumption should improve. And I think that is a benefit that will come to all the FMCG and food companies.
So Sanjay, the export specific, I have a question, especially with the improving relations coming with India and US. A lot of your products, spices, which are exported abroad as well. It seems like some positive news flows is coming in this segment. So just give us the entire export outlook picture for the spices, and post the normalization of the relations which you are expecting with US, will we see a bump up in the overall spice exports?
Well, I think for exports, it's a new business for us, okay? We had to, that we were part of, we acquired two companies, MTR and Eastern, to build our business. And then we merged the international businesses of both these things to create a dedicated entity as far as exports is concerned. Today, exports is about 21% of our business. And when you look at what we export, we are the largest branded spice exporter out of India for the last 24 years. Now, let me give you a composition of our export that we are doing. Almost 70% of our exports actually comes out of the Middle East, at the back of the brand, or at the back of Eastern brand, which that there is a Malayali from every household in Kerala in the Middle East. So Eastern is a very, very strong brand in the Middle East. And overall development in Middle East has been very strong this quarter. We have grown at about 14.5% in the Middle East. US just contributes roughly 3% of our total business, is a smaller part of exports. I think about 10 to 12% of our exports business comes out of United States. And we have, of course, there is a little bit of softening in terms of consumer demand in the US, but I don't see impact coming on account of tariffs as far as the business is concerned. So even if the tariffs get solved, I don't see that really affecting us in any particular way.
Sanjay, 21% of your total sales is exports right now, correct? Where does this go from here on? Let's say 2 years down the line. Do you think this share of exports will go higher and then your margins will improve?
Our margins are very good both in domestic and in international business. So it's not that international business leads the margin for us. So even if there is a salience change that is expected over a period of time, I think you will see that we are on a very strong margin delivery path at this point of time, and you would have seen that in our results.
And where is the blended capacity utilization at right now? What is it looking like, and any capex plans in near future?
Yeah. So I think if you look at our RHP, and I'm good because a lot of our data is out there, 9%, we've got 9 manufacturing facilities. We currently utilize only 46% of the capacity utilization. A reason for this is largely on account of the fact that this is the legacy that we adopted when we did acquisition of Eastern into the organization. At this point of time, I think our biggest challenge is to continue to build the capacity, build a few large, highly efficient factories supported by a network of satellite factories. We are outsourcing a lot of our products today. 11% of what we produce is outsourced. We expect that to go up. But from a capex point of view, I think having got the legacy of many units that have come into our fold, we don't really look at a very heavy capex requirement in the next 4 to 5 years. I think our capex requirements are not going to be greater than about 20 crores a year over the next few years. So it's really very, very minor capexes that we will require, largely to balance lines and do some food safety related initiatives.
And Sanjay ji, one last question is on health. Of course, ready-to-eat food is there, but what's the health part? We are hearing about jawar, bajra, ragi, so many things happening all around, and even tier 2, tier 1, both sides the interest is coming for the health segment. What are the new product markets we are looking at to get into, or any other products are there in the offing?
I think we largely operate in the traditional food space. So if you look at our portfolios, they reflect the Karnataka cuisine and the Kerala cuisine. Now, you know that Indian food, if made at home and if you cook at home and you eat food home, is healthy, right? So, but having seen the trend amongst consumers to consume millets and other things, we had actually launched ragi dosa, multigrain dosa, oats idli very, very long time ago, about in 2015. But somehow what we see, at least in the traditional food space, it's that your ability to eat fresh food is more important than health at this point of time for the consumers.
That's pretty interesting. Fresh food over health food. Now that's an interesting take at every house. But another interesting take would be definitely what are the key takeaways coming in for our special segment KYC. And Mahima, first and foremost, the volume growth commentary, that has been pretty decent for the company going ahead for, and also the margins front. The management is very confident. when it comes to both domestic as well as your international segment, and that's something strength coming in our conversation. And look at this FMCG quarter which we have discussed, that was roughly 5% or something.
5% FMCG is growing
and they have gone
versus him growing at 7%. Yes.
So that is something which we'll be also watching out for. Interesting data shared by the management. But net the commentary remains strong as it's a recently listed IPO company as well. But this spice category deflation, that's also an important portion. 20 to 25% in 2 years. That's aiding the numbers as well. But pretty interesting for Okla. But that's all for this KYC show. Stay tuned to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot. Thank you very much, you're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched.
First tranche of the India-US trade deal is near closure now, says the government. Also that the deal will address all kinds of tariffs. Nifty recovers nearly 90 points from the lows, even as realty and metal stocks drag. ITC is the top loser, while Bharti Airtel leads the gainers pack. Morgan Stanley sees Sensex hitting 95,000 by December 2026, with an upside potential of 13%, assigning a 50% chance of base case playing out over the next year. Physicswala makes a strong market debut today, with shares soaring above 33% in early trade. A big vote of confidence for the EdTech platform on day one. On the other hand, MV Photovoltaic sees a muted start, with the stock slipping after the listing. Finance Minister begins the pre-budget consultations today, the key annual rounds where major sectors share their demands. Prominent market players meet her for the first time, followed by top bosses of startups and manufacturing through the day. Hello and welcome. You've joined us on Markets at 12. I'm Nisha Poddar, and let's take a look at the market. Well, Nifty 50 has had a slight bit of volatile trading session today, but in a just 150 range that it has traded. But in the last few hours of trade, it has really tried to limp back and recover almost 100 points from the low point of the trading session. Now, out of the 100 points, remember, big boy Bharti Airtel contributes 1/4 of the contribution in terms of the gaining momentum that it has really picked up on from the low point. And apart from that, Axis Bank is also one of the big contributors. Of course, Bank Nifty is outperforming the key indices today, while most of the sectors are in the red, especially with real estate as well as the metal counters really having a down day. So that's the market for you. A lot of red on the screen, but definitely some of the big boys from the listing space like Physicswala had added momentum to the market in the trading session. All right, let's take it straight on to the big story of the day. India-US bilateral trade agreements first tranche dealing with reciprocal tariff is nearing a closure. In fact, my colleague Rishabh joins in with that report. Rishabh, trade deal is nearing. Everybody's eyes are on that. Tell us.
Right, as we move closer to this November deadline or the fall deadline, the commentary from both ends is getting more and more bullish. What government officials are telling me is the fact that both the sides remain engaged on a VTA virtually. This is despite a US government shutdown that has opened very recently. But they also confirmed that the deal has two parts, and the first one will address at least the reciprocal tariffs. What we don't know so far is that whether it will address all kinds of tariffs. So it could be very well that it could actually end up addressing the Russian oil tariffs as well as the Section 232 tariffs that are there on various products. So the first tranche of the deal, very, very tariff focused. On the other end, you have the US White House advisor, Kevin Hassett, also saying that both countries are heading to the finish line with respect to at least the first tranche of this deal. So high probability of it being announced before the end of this month. So within the next 12 or 13 days, we could hear from both the sides on a first tranche being signed by both the countries.
All right, keenly awaited all the details of that trade deal. Thanks so much, Rishabh, for getting us the latest. Now on to an important development which could really impact the market. Well, the brokerage houses signal a stronger 2026 for the Indian markets. In fact, the consensus tilt remains towards the domestic sectors over the exporters. In fact, our colleague Mahima joins in with more details on what the brokerages are expecting from the second half of FY26. Tell us, Mahima.
they're saying that they see Indian equities regaining their mojo in 2026. Overall, the transition from a stock picking environment to a macro trade in stocks is what they're expecting in 2026. 13% upside in BSE Sensex through December 2026 is something that they're expecting. Domestic cyclicals will be preferred over defensives and external facing sectors. Right now, they're overweight on financials, consumer discretionary as well as industrials, and underweight on energy, materials, utilities as well as healthcare. Jeffrey's note is the next one, which is by Mahesh Nandurkar. They see September quarter earnings have kind of showed a sequential uptick in growth after 4 quarters, and festive season spending has led to a revenue growth of 10-quarter high. Sustainability of GST driven consumption uptick is a key thing to monitor going forward, and MSCI India earnings growth for FY26 as of now at 10% is what they're seeing. The next one is City India note, which is by Surendra Goel. They're saying Q2 is slightly ahead of what they were expecting. There has been revision in terms of where the trajectory stands, and that is also stabilizing, and sustenance is the key from here on. Festive season demand saw an uptick, but will this continue or not is something that will be a key thing to monitor. Overall, in terms of relative valuations now, it's reasonable as of September 26. September 26 Nifty target is at 27,600 is what the note says. Lastly, the JP Morgan note by Rajiv Batra, Q2 witnessed better than expected quarter is what the note says, and anticipate accelerated double-digit growth in second half of FY26 as well as FY27. They are liking materials, financials, consumer durables, hospitals, real estate, as well as defense and power. So these are some of the sectors that a lot of these brokerages are taking a look at, and of course there are reasons as to why things look better from here on.
All right. So outperformance by the Indian companies which are trading in the earnings season that has just gone by has given a lot of positivity to the brokerages on their outlook for the second half of this fiscal for the Indian markets. Let's move on to the debut of the day. Physics Wala makes a spectacular debut on the Lal Street, up 37%, 37.5%. So it's a gain momentum at the listing, and it continues with the gain. And this was after a muted response, remember, from the retail investors. QIB stepped in to back this particular IPO. In fact, my colleague Vishwanath Nair joins in from the venue with all the details of this euphoric. All right, Vishwanath, so you were right there. How was the atmosphere? And it was against the expectation. It beat all our expectations on the listing.
Nisha, you're right. So just this morning, as I was there while the listing was happening, immense, crowd cheering, especially right after the listing, because the immediate listing pop was over 33%. So there was that real sort of euphoria that was going on with among the audience, and in the audience consisted of teachers from Physics Wala, some students, some former students, as well as, of course, the bankers who were participating and helping this issue. Alakh Pandey as well as Pratik Maheshwari, both the founders of the company, were also present there, as were the other investors who have some stake in the company. This one is an interesting one. 3,480 crore they've raised through the IPO, of which about only 380 crore was in terms of the OFS. The rest of the money, 3,100 crore, was fresh issue, so that money is entirely going in to the company. The largest chunk of their spending is actually on marketing, because that is something that they believe that they need to do to spread the availability of Physics Wala across the country. They started out as only an online learning portal, but of course over the years they have diversified into offline learning centers as well. They've recently acquired a stake in a company that delivers a new age education to children in the south of India. They've also expanded a little bit internationally by going to the Gulf. Now, during the speech that Alakh Pandey was delivering, he said that listing is a good milestone to have, but our goal is to spread across India. Chappa chappa, that's the kind of cheer that they have within the company. That is what he was repeating. On the other hand, Prateek Maheshwari said that earlier the concerns were that the edtech sector had a bad name, but PhysicsWallah was a good company amongst them. But now, because they are listed, there will be comparisons with other listed companies and whether they are delivering on the results or not, and that's a big moment for PhysicsWallah.
That's right. In fact, Vishwanath, this will also give the motivation to several other companies in this particular space to really make it to the market and to think of their expansion. But as Vishwanath was pointing out, the company wants to reach the nook and corner of the country. Chappa chappa. Let's hear out Alak Pandey, the CEO of PhysicsWallah.
We are the country who gave zero to India. We are proud of that. But the only problem with us is, and listen this very carefully, there's an Einstein in India who is selling tea on the roads of Bihar. There's a Madam Curie in India who is selling momos on the roads of Gurgaon. And we have to filter them, bring them to the real Indian economy. That is the mission of PhysicsWallah. Thank you so much. Thank you.
All right, keeping it with the debutants in the marketplace. Well, let's talk about Groww's growth, and Groww's market cap has now crossed the 1 lakh crore rupees mark as the stock continues to surge post its IPO. Strong October numbers, heavy institutional inflows, and also the industry-leading customer additions have lifted the sentiment for this particular company. But the question around sustainability as well as the long-term profitability still persists. In fact, let's bring in my colleague Sharad, who has done a lot of number crunching and is here to tell us all about what's really driving this growth, and is it sustainable, Sharad?
Well, that's the question everybody is asking, and each time the stock is giving a different answer. Groww's market cap, of course, comfortably above the 1 lakh crore mark. And if you look at the important companies, ABB India, Indian Hotels, all these big, large cap companies which we have always heard about, it has outgrown these in terms of market cap. Stock movement, of course, there was a decent listing coming on November 12, a 14% premium. But after that, they see the significant up move. It is now plus 60% now, currently more than 70% growth coming in from the issue price. But the question remains is why the growth is coming in. Institutional interest, HNI interest is still there on the counter. Long only funds are very active, including recently Motilal Oswal increasing stake in the company. And after listing, there was an operational data out for the month of October that was also strong. And just compare the market share, that's almost 26% as compared to Zerodha's 15.5%. Also, October month belonged to Groww as well when it comes to addition of new clients. They were the only one in the green, rest all peers were in the red. Looking at the peers, the revenue CAGR and the profit CAGR last 3 years which we have taken, most of the parameters it is beating Zerodha, Angel One and Motilal Oswal. But the question remains is the valuation sustainable? We have taken the valuations assuming a 50% growth in the revenue for both P as well as price to sales ratio, and looking at that, Groww stands at 12 times price to sales, and the price to earnings that stands at 26 times. Still on the expensive side if we compare that with Angel One and Motilal Oswal. So the question remains is, will Groww grow more, or will we see some valuation catch up happening from its peers?
Right. So Sharad, that's a real deep down into the numbers as well as the model of this particular business. And of course, Groww, in terms of their stock performance, has been growing since the time of its listing. All right, taking it forward then, the finance minister has kicked off the pre-budget consultation marathon from today. A crucial annual exercise where India's biggest sectors line up with their demands as well as the wish lists, remember, and capital market representatives are also the first ones at the table this morning, meeting with the finance minister, followed by also startups and the manufacturing sector through the day. For more on what's expected and who's meeting the finance minister and how's the wish list really looking like, let's take it across from New Delhi. Shrimi is joining us.
I'm right outside the Kartavya Bhavan, the new power center, and of course the new address of Finance Ministry as well, where all meeting taking place. And in fact, the Finance Minister will have a busy and action-packed week with she's meeting all the key stakeholders across the sectors, and in fact starting with today with capital market representatives. And what we have been given to understand that prominent names from capital market, including commodity and securities market, as well as mutual fund industry representative is meeting Finance Minister today, starting shortly. And in fact, after the capital market, she's also set to meet representative from startup and manufacturing sector. Just what we've been given to understand from the capital market perspective, the representative is set to present their wish list, of course, and they are also going to speak on several issues like how to deepen the market further, how to scale up. And remember, the Chief Economic Advisor has recently made a remark on how IPO market has been, mainly used as an exit vehicle and not a long-term capital raising, and that is something is concerning for government as well, and that is expected to be discussed. In fact, this entire pre-budget consultation meeting is expected to be concluded on November 28th with social sector along with internal officers meeting. And remember, this pre-consultation meeting is crucial from the point of view that it prepped government to understand the need and requirement of each sector which the Finance Minister are meeting, and it will also set a tone for the budget making exercise and what all requirement of each sectors. And do remember that economist meeting last week, they stressed upon that this budget should be growth-led budget, and for that government need to focus on the fiscal prudence. And this is also important given the point that 16th Finance Commission has recently submitted its report for the next 5 years on the fiscal glide path. So this is crucial meeting which will of course prep the government for the upcoming budget.
Thanks so much, Shrimi, for that. Yes, it's a very, very crucial meeting with Finance Minister really taking the industry's wish list for formulating the budget. All right, moving on, Mahima joins us now with the stocks to watch in today's trade. Mahima, what's on your list?
Right, so, I'll start with WPIL first because the stock is zooming in trade on the back of an order win. The company has received an order from its JV worth rupees 426 crore. This is for electromechanical and instrumentation works project for South Africa. The next one is Bansal Wire. The GST demand for them has been reduced to 69 lakhs from 45 odd crore. And the company has said that certain aspects of assessment will require further review and clarification, and they'll also go ahead and file appeal before the appellate authority under GST for the 69 lakhs as well. AstraZeneca Pharma is the other one. The company has signed pact with Sun Pharma, pact to distribute the distribute and market sodium zirconium in India, and this is generally used to treat something called hyperkalemia. The company will retain intellectual property rights and import license of the molecule. The last one is JSW Infra. Well, this particular counter has signed agreement to acquire 51% stake in Oman Port as a SPV. The port SPV to become the step-down subsidiary of JSW Infra. The total project capex is at around $419 million, and JSW Overseas FZE will be the lead member of SPV and majority shareholder as well. So these are some of the stocks that are kind of moving in trade on the back of news flow.
All right, thank you so much, Mahima, for taking us through that list. In fact, shares of WeWork India management will be in focus today after the flexible workspace operator really received its first initiation coverage from a brokerage firm, and that's initiated. In fact, Sharad joins in with more details of the report and the findings and the views coming in on WeWork. Tell us.
Well, it's a strong broking report coming in for WeWork. Jefferies has initiated buy, and the target price set is at 790 rupees. Now, they have stated earlier that the company is leading seeing the flex space revolution. Now, to put it in perspective, flex space means an office space where you can customize with your interiors, and that is why there's a bullish momentum going on. And we already know the GCC, the Global Capability Centers, and the office space is booming in India. At 70% CAGR, the flexible workspace stock is growing at 2 times the pace of the normal office stocks, and they're expecting that there would be a further penetration coming, especially in Tier 1 and Tier 2 cities. Also, WeWork has a premium positioning when it comes to the average revenue user and its margin profile, and overall it's already funded to go ahead in the expansion as well. 22 to 28% is something which the revenue and EBITDA CAGR is what the broking house is expecting for the next 3 years. So a bullish report coming in when it comes to WeWork.
All right, so bullish report on WeWork. Thank you so much, Sharad. But of course, the equity market transaction, especially with IPOs coming in, and the fundraise by way of IPO has been very strong in the last few weeks in the market. Now, the other aspect which has become very, very strong and is totally the trend of the day in the market is the big block deals hitting the market. So a lot of investors are looking at really profit booking through the block deals and exiting their positions in hordes. In fact, nearly 7,000 crore rupees worth of block deals have hit the market today. There you go. There's the chart in terms of how much of block deal is taking place in each of the counters. So when we talk about Paytm, it's a 2% stake, Emphasis 9.5%, and also Emcure Pharma, it's 2%. And when we talk about the Black Buck block, well, that is coming in. Also, the size is worth over 2,400 crore rupees. Let's take a stock check on all these counters then. Paytm, that is one counter which is down more than 2%. Of course, the supply of paper coming in and the selling pressure is clearly visible on this big boy from the fintech space. Let's take a look at some of the other counters also coming in with the block deal at the particular moment. Emphasis is down more than 0.5% in trade. Emcure Pharma, that is down more than 2% in trade. And when we talk about Zinc or Black Buck, that particular company is also showing more than 2% of downtick there. All this is because of supply pressure, and also remember the floor price at which these block deals have been offered is also were on a discount, and therefore the price points in the market are aligning with those prices of block deal. Moving on then, an important aspect which touches the lives of you and me. That is, Mumbai has been grappling with a sudden dip in the gas supply due to a third-party damage in the main gas pipeline supply of GAIL. To understand what the current ground situation is and what is the normal supply expected? When are we expecting this? Earlier, we spoke to Ashu Singhal, who's the MD of MGL, and he shared his outlook on the gas supplies and when will normalcy really return to the city of Mumbai, heavily dependent on commuting long distances where these cabs and other vehicles have been stuck because of the lack of gas supply. Take a listen.
The incident happened on Sunday first half, and Sunday afternoon onwards, the supply was not available from our Wadala station. So we had to shut down some of our CNG stations. So around 390 stations are there in and around Mumbai, out of which 160 were shut down. So 230 were operating. So 40% were shut down and 60% were operating. Industries were asked to switch to the alternate fuels, and commercial and domestic pipe natural gas to the households were not interrupted, and it was not uninterrupted supply was given to commercial and PNG to the households. So the likely time is expected to be today noon. That means Tuesday afternoon we expect normalcy to start. GAIL has already isolated the section, and we are also there. So the pipeline section is getting replaced, a small part of it. And after that is completed and completion of some tests, we will be able to start the supply by today afternoon sometime.
All right, so that gas supply is getting restored very soon. Some relief coming in for the computers of Mumbai, so watch out for that. Now, the big brokerages are turning upbeat on PNB Housing Finance after a surprise credit upgrade. In fact, that stock is up 1.5% in trade. Both Morgan Stanley as well as UBS stay as their particular grade and move to AAA materially improves the company's growth and also profitability outlook is what they said. Let's take it across to Somit, who has a detailed report on the brokerage's take on this particular event and how it impacts PNB Housing. Tell us, Somit.
PNB Housing stands to benefit given the fact that credit rating we have seen an upgrade in the credit rating, which could lead to lower cost of funds for the company going forward. And largely brokerages are upbeat on the back of this rating upgrade that has come in. Now, Morgan Stanley has maintained their overweight rating on the counter with a target price of 1,170. Now, they are saying that they were not expecting this rating upgrade to come in so soon. They're also saying that it is positive for growth and profitability for the company going forward. And they're expecting they are saying that this could further help the company to lower its cost of borrowing, thereby benefiting the loan spreads and loan growth in time going forward. They're also saying that the rating upgrade, along with the strong execution or strong results that we had seen in the second quarter, should give investors confidence, and the stock is already trading at a low valuations. And the next big trigger for the company would be the appointment or the name of the new CEO coming in going forward. So that's the key trigger to watch out for when it comes to PNB Housing as per Morgan Stanley. When it comes to UBS, they have maintained the buy rating with a target price of 1,200 rupees on PNB Housing, and they're also saying that this rating upgrade is sentimentally positive for PNB Housing, and this upgrade, there could be further upgrade that could come in from other agencies as well, which could lower the cost of funds by by around 20 to 30 basis points decline in the cost of funds is what they are expecting going forward. And they're also saying that other rating agencies would as well upgrade their rating on PNB Housing. They're also saying that the key trigger for PNB Housing going forward would be lifting of restriction that RBI has put in because of the overlapping businesses by parent, that is the bank PNB. So if that restriction has been gets lifted by RBI, then that would be the key trigger going forward for PNB Housing.
All right, some important trigger points for PNB Housing. Thanks so much, Somit, for putting all that into perspective. That particular stock is up in trade. When we talk about Nifty 50, down 0.25% in trade. Yes, there has been a recovery. It's maintaining, but nothing is lifting off the sentiment. So definitely some pressure on the market. With that, it's a wrap on Markets at 12, but keep it with NDTV Profit. Thanks so much for tuning in.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way since it was relaunched. I hope you're watching NDTV Profit a lot. Absolutely, you can come to my office and you can see. Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well. No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live. Ask.
Hello and welcome to Profit Bazaar. This is Sharad Dubey, and Interestingly, looking at the markets today, especially the expiry coming in, the markets are, you could say, in a volatile way. Nifty trying to make a recovery from day's low, but still falling down. But comfortably, the medium-term chart level still suggest a decent up move coming in. Nifty Bank, let's pull up the chart. There was a good up move coming in. It went into the green also in the day's trade, and now also it's actually holding up near the rates of around 58,980 levels. So Nifty Bank has a better technical setup as compared to Nifty. Let's pull up the Nifty key gainers and losers as well, where the action is more. Largely, we are seeing much more losers happening in the Nifty heat map, but of course, the strength coming in the stocks such as Bharti Airtel as well. Let's pull up the advanced decline ratio to see whether the small cap, mid cap indices are doing well, and we see the overall divergence is strong now also, and it's maintaining it. It's almost 2:1 ratio. It's more than that in the favor of bears as well. Let's pull up the BSE 500 contribution charts also, where the entire focus would be coming into, and largely you can see GMR Airports, Graphite India doing well in the trade. PNB Housing Finance also had an upgrade coming in, and selling pressure is of course there in CCL Products and Narayan Health as well. But a market where there is a small range, most of the sectors are working, and there is also one company, Zaggle, which we'll be focusing on. Let's pull up the Zaggle's chart as well, what's it doing in the day's trade. And roughly it is flat, but joining us right now on this commentary is Zaggle. They delivered a strong Q2 numbers with a solid revenue and profit growth supported by broad-based momentum across its program and platform businesses. We are joined by Avinash Ghodkindi. He's the MD and CEO at Zaggle. A very good afternoon to you, Avinash. The first and foremost question is, what led to this good, strong set of numbers coming in? Of course, there was a margin beat also. So could you just give us the entire details about overall how Zaggle has performed?
Yeah, good afternoon. Thank you for having me on the show. Well, the margin growth is simply because of operating leverage starting to kick in our business. This is a SaaS fintech business with very significant operating leverage across not just our market, but global markets for other spend management companies, right? And that is something that has started to trickle in our business, and you're going to see more of it in the coming quarters and years. So we've already guided the street of our margin expansion in the next 5 years to go up, our adjusted EBITDA to go up to 15%, from 10 to 11% is the range that we are there, with in 7 years, $1 billion plus revenue, assuming the dollar rupee doesn't go off crazy, right? So that's the trajectory that we are tracking towards, and that's panning out very well.
That's pretty interesting on that, Avinash. But cross-selling, that is something which we had spoken earlier also. What kind of benefits can come from this cross-selling, and will we see a kind of a margin up move going ahead?
Yes, of course. This year already we have said 10 to 11%. Every year we see, about a percentage point more or less going up. Of course, some years it will be slightly lower, some years it will be higher, and all getting to about 15% in 5 years from now. And cross-sell has been pivotal because end of the day, once you've sold one product to the customer, if you're able to sell the second one, and from there on, the third, fourth, fifth becomes that much more easier because you've generated a lot of trust with different stakeholders in the company. Let's say your first product was to the CFO and the second product is to a national sales head or a chief marketing officer or the CHRO's office. The second, third, fourth products in our experience become progressively easier. And that's what we are seeing in our experience as well.
Well, that's pretty interesting, Avinash, on that front. But there was an upgrade in the guidance also for FY26. And key levers to growth for EBITDA margin, that has also jumped from 10 to 11% to 14 to 15 odd percent. Apart from this, the question arises is operating cash flow. Now, beyond the seasonality, when will you turn operating cash flow? That's also a question we want to ask. We have seen good guidance upgrades, but cash flow, will it be FY27?
Yeah, just to clarify, 14 to 15% is in 5 years, not this year. This year is going to be 10 to 11% adjusted EBITDA. On the cash flows, look, last year we were cash flow positive. This is because of the seasonality. There's a slight dip. And, we see things moving in the positive direction there as well. Our receivables are largely with partner banks and some with marquee corporates. And the way India operates, Dashera Diwali is the time where everybody wants you to support their businesses, their reward programs for their employees, for their channel partners, and that's precisely what we've done this time as well. So yeah, cash flows as well. We are working hard, and we're seeing good support from our partners and customers, and we hope to give some great news in the coming quarters.
Well, thank you very much, Avinash, for that. And now moving on, there is an important listing today, and that's PhysicsWallah. Strong bumper listing coming in, and in our studios, joined by our managing editor, Tamanna Inamdar, is Prateek, who's the co-founder at PhysicsWallah.
Yeah, thank you for that, Sharad. The man of the moment, and I would say the team of the moment, is PhysicsWallah. The IPO there were some murmurs when the subscription was not that exciting. Nowadays, if there's a muted oversubscription, people think that the listing pop will not be there. But Prateek Maheshwari, thank you for coming in to the NDTV Profit Studios on your big day. And it is an exciting one. ऐसा listing होगा आपने सोचा था?
नहीं, बिल्कुल नहीं सोचा था।
अच्छा, पहले तो मुबारक आपको।
ना हमने सोचा था, ना एम्प्लॉइज ने सोचा था। और जैसे ही वो नंबर खुला, so everyone was like कि यार सही है या हम हमारा ही स्टॉक देख रहे हैं, किसी और का देख रहे हैं?
नहीं, तो the reason is कि सब्सक्रिप्शन के समय इतना इंटरेस्ट नहीं था, आप लोग थोड़े अंडर द रेडार थे।
तो सब्सक्रिप्शन आई थिंक इज नॉट द राइट मेट्रिक नाउअडेज। व्हाट इज मोर इम्पोर्टेंट इज कि मार्केट ने टैम बहुत अच्छा समझा। हमारे एंकर इन्वेस्टर्स वर वेरी सॉलिड। और ओवरऑल जो हमने ऑनलाइन बिजनेस बनाया है, दैट इज़ वेरी प्रॉफिटेबल, और ऑफलाइन इज ऑल्सो ऑन अ पाथ टू प्रॉफिटेबिलिटी। ये चीज़ मार्केट को काफ़ी अच्छे से समझ में आई, एंड दैट मैसेज कन्वेड वेल। सो आई थिंक उसी का ही आउटकम है। बट अ लॉट ऑफ कंपनीज डिड अमेजिंग ऑन अ लिस्टिंग डे. That's just a one-day prize and a number, and so that will fade away. We have to perform in every quarter, and every financial result has to be at par. We have to beat our guidance, so that is more important.
So then let me ask you the question which will now maybe become more important than TAM. TAM is of course there, but TAM is when you're raising money privately.
I can guess this question. This question is about profitability, right?
अरे देखिए आप पूरे नंबर में पास हो रहे हैं आज. Okay, test me. What is the path to profitability? What is the timeline?
So less than 12 months is what we are guiding to the market.
EBITDA, positive.
No, PAT
positive.
So EBITDA already we are there. EBITDA positive, we are already there. And our EBITDA has improved almost 4 times in just 2 years. But PAT level profitability is not a challenge. That will come in less than 12 months.
Okay. And how will that happen? What is the path to that profitability?
So, see, we are a very young company, less than 5 year. Almost 5-year-old company at this point of time. There are a lot of leverages in terms of marketing cost. There's a lot of leverages in terms of tech cost. And overall, student enrollments will exponentially increase from here. So we need not to increase the prices of our products, to achieve this growth. At the same time, if you see the percentage of the people cost as a percentage of total revenue is sharply declining in past 2 years.
Why is that?
A lot of leverages are coming because of the technology automation which we have done. AI is helping us a lot to make us even more efficient from here. AI is solving doubts for the students almost as good as human. Along with that, for a growth stage company, the entire focus was to capture the market share maximum. But since we are now a public listed company, our responsibility becomes equally important कि हम bottom line पे भी उसी focus के साथ में काम करें.
नहीं, ये AI वाला बताइए. What is the total number of employees? And I think I'd asked you this question off record. It's quite a large number, but I'd like you to say it. And do you see that coming down because of technology and AI tools?
So, अभी total number of employees 18,000 है company में, 18,000 people in the company, because we have opened a lot of offline learning centers, more than 300 offline learning centers at this point of time, and you have to deploy people there to run these centers. AI, will not, because of AI, there will not be iteration, but for my future growth, I did not to hire extra employees. From last year to this year, we have grown almost.
So the rate at adding employees will
reduce.
Will be lower.
So leverage will come from people cost. A lot of leverage will come from people cost.
तो जो आपका model है, it is a low cost model, right? So where is then that growth going to come from? Only from wider spread, or will there be scope of increasing fees, more specialized courses that you can charge premium for? What is the kind of strategy there, or will you stick to the? Because we were listening to Alak Pandey today, who were talking about the Einstein who might be today selling chai, or Marie Curie जो मोमो बना रही है, लेकिन fact is अब listed company हो तो थोड़ा premium आपको उस दिशा में आप जाने वाले हो?
तो लेकिन अगर हम आप देखेंगे हमारी जर्नी को, हिस्टोरिकली जो विजन है कंपनी का कि यार एजुकेशन का एक्सेस भारत में हर बच्चे को मिले और उसके लिए प्राइस का कम रहना ज़रूरी है, पर एट द सेम टाइम इन्वेस्टर्स को रिटर्न दिए जा सकते हैं बाय इंट्रोड्यूसिंग वैल्यू एडेड सर्विसेज ऑन योर बेस लर्निंग प्रोडक्ट। वैल्यू एडेड सर्विसेज जैसे कि आपको खुद का टेस्ट बनाने का फीचर मिल जाएगा, लास्ट ईयर की वीडियोज़ का एक्सेस मिल जाएगा, AI आपके डाउट सॉल्व कर देगा। इस तरह के फीचर्स हमने बैच जो हमारा फंडामेंटल लर्निंग प्रोडक्ट है उसके ऊपर लॉन्च किया, और इन वैल्यू एडेड सर्विसेज को स्टूडेंट्स ने अडॉप्ट किया और इससे हमारे आरपूस भी इम्प्रूव हुए, प्रॉफिटेबिलिटी भी इम्प्रूव हुई। एट द सेम टाइम हमने लास्ट ईयर स्मॉल कोहर्ट टू वे कम्युनिकेशन प्रीमियम कोर्स लॉन्च किए, लाइक पावर बैच एंड क्यूरियस जूनियर। वहाँ पे भी हमको अमेजिंग स्टूडेंट रिस्पॉन्स मिला। एक और बहुत ही अच्छा इनोवेशन हमने इस साल किया है, लेकिन हमें लगता है कि यार 5,000 भी बहुत ज़्यादा प्राइस है एक बहुत बड़े इंडिया के लिए, तो क्या हम इसको मंथली 300 रुपीज़ पे ला सकते हैं? तो उसको सोचते हुए हमने हमारा खुद का लर्निंग OTT लॉन्च किया विद द नेम ऑफ पाई 1 नवंबर को अलख ने इसको लॉन्च किया, और दैट विल इम्प्रूव द एक्सेस इवन टू रिमोटेस्ट पार्ट ऑफ द कंट्री, जहाँ पर स्टूडेंट्स 5,000 रुपए भी अफोर्ड नहीं कर सकते, दे कैन अफोर्ड मंथली 300 रुपीज़। एंड
तो वही तो मेरा सवाल है कि आपका फोकस इज ऑन अफोर्डेबिलिटी विच इज अ वेरी नोबल कॉज। अब लिस्टेड स्पेस में नोबल नीड नॉट इक्वल टू प्रॉफिटेबिलिटी।
सो विद दिस नोबल कॉज पिछले 2 साल में रेवेन्यू 4 गुना किए, EBITDA को हमने 4 टाइम्स ऑलमोस्ट 4 टाइम्स इम्प्रूव किया। लेकिन अगर कंपनी मिशन पे चलती है, अपने कोर वैल्यूज को इंटैक्ट करके चलती है, तो तो प्रॉफिटेबिलिटी इज जस्ट आउटकम ऑफ द गुडनेस वी डिलीवर इन द क्लासरूम। वो टैग अलॉन्ग है, वो बाय प्रोडक्ट है, वो हो जाएगा, लेकिन वो हो भी रहा है। हम हिंदुस्तान की ऐसी कंपनी है जिसने 3,000 करोड़ का टॉप लाइन लेस देन 5 ईयर्स में अचीव किया। न एजुकेशन न कंज्यूमर इंटरनेट, वी आर द फर्स्ट लिस्टेड कंपनी इन इंडिया जिसने 3,000 करोड़ का टॉप लाइन लेस देन 5 ईयर्स के अंदर अचीव किया। तो ग्रोथ इज नॉट अ प्रॉब्लम। बहुत बच्चे हैं भारत में, 30 करोड़ बच्चे हैं इंडिया के अंदर, हम इसका 1.5% पढ़ा रहे हैं अभी। 98.5% मार्केट, वाइल वी आर मार्केट लीडर इन टर्म्स ऑफ टॉप लाइन, नंबर ऑफ स्टूडेंट्स, बच्चों के रिजल्ट्स, बट वी आर barely स्क्रैचिंग द सर्फेस। 98.5% भारत तो अभी हम मोनेटाइज कर ही नहीं पाए हैं।
फोरे इन द साउथ, क्योंकि आपका कंसंट्रेशन ज्यादा नॉर्थ में है, क्या वो अगला है कंपटीशन फ्रॉम से कोटा एंड कोचिंग सेंटर्स लाइक दैट?
सो साउथ इज अ मेजर फोकस। 11 इंडिक लैंग्वेजेस हमने लास्ट ईयर लॉन्च करी थी। वहाँ पर टीम बहुत एफर्ट मार रही है और डिस्ट्रीब्यूशन बढ़ा रही है, बच्चों को फ्री पढ़ा रही है, एज वेल एज मोनेटाइजेशन भी स्टार्ट किया है। तो अगले 2 सालों के अंदर हमें साउथ मार्केट विन करना है। दैट इज
व्हाट इज द केपेक्स दैट यू विल नीड फॉर दैट?
सो साउथ के अंदर हम ऑनलाइन फर्स्ट जा रहे हैं। First, we will win in our online courses, and then we will start our offline learning models as well. तो हमारा offline is part of the same flywheel जो हमारा online है। Online में हम 93% स्टूडेंट पढ़ाते हैं और उसी का एक सेक्शन हमारे ऑफलाइन के अंदर कन्वर्ट हो जाता है।
प्रमोटर स्टेक आप यहीं तक रखेंगे या कम करेंगे आगे?
सेबी के अकॉर्डिंग 75 तक जा सकते हैं, बट
अच्छा, ये तो आप ऊपर की तरफ बोल रहे हैं। No, you come to the market and you know let people into your growth story, but there seems to be no mood over here to reduce promoter stake.
We will not be selling promoter stake, because we want to run this company for rest of our life. So there are not immediate plans to either buy or sell our stakes.
Okay, and now you really do not need, you're well, capitalized. You've just raised money. What is the first step of that capex? उन पैसों का क्या करोगे? What is the tranches for that?
So अगर आप कंपनी की करंट ट्रेजरी भी देखेंगे ना, तो वो 2,500 करोड़ से ज़्यादा है। तो we are already very sufficiently capitalized. This capital will of course allow us to go into southern market, to open 200 new centers, But at the same time, education है ना, like is a business of love and trust. अगर पैसों से यहाँ पे बिजनेस बनता तो our competition had $10 billion of capital with them, like
कौन से क्या बायजूस की बात कर रहे हो?
हाँ, all of them put together, like उन्होंने $10 billion रेस किए. तो मुझे लगता है sometimes money hides problem, like money doesn't solve problem. और एक अच्छा एजुकेशन बिजनेस, अच्छा वर्ड ऑफ माउथ बिजनेस होता है. अगर आप बच्चों को अच्छा पढ़ाएंगे तो अपने फ्रेंड्स को बताएंगे, आपके पास बच्चे आते चले जाएंगे.
Why do you think physics wala succeeded where Byju's failed?
So, like not just Baiju, like I'll take the entire edtech, like sector at a glance. सारे players top 5% इंडिया को टारगेट कर रहे थे. 80,000 से 1 लाख तक की इनकी फीस हुआ करती थी, like अब टॉप 5% इंडिया को आप 10 प्लेयर टारगेट कर रहे हैं. लेकिन वी केम अप विद द वेरी डिफरेंट स्ट्रेटेजी कि हमें रिमेनिंग 95% को एड्रेस करना है. इंडिया के अंदर रिवॉल्यूशन इन एजुकेशन तभी आएगा जब तक ये एग्ज़ाम के फॉर्म की जो फीस है ये तैयारी की फ़ीस के आसपास नहीं जाएगी. लेकिन जब तैयारी की फ़ीस एग्ज़ाम की फॉर्म की फ़ीस के पास नहीं जाएगी तब तक ये पूरा मार्केट लेकिन ऑर्गेनाइज नहीं होगा. तो हमारा तो विजन ये था कि यार कितना अफोर्डेबल बैच को बनाएं, लर्निंग को बनाएं और ऐसे स्टूडेंट्स जिनके पास में गुड क्वालिटी लर्निंग का एक्सेस नहीं था, लेकिन उनको एक मौका दें, एक फेयर अपॉर्चुनिटी दें. आपने अलग को सुना होगा आज, लेकिन और वी आर अ वेरी यूनिक लिस्टेड कंपनी ऑल्सो, जहाँ पर जब NSE सेलिब्रेशन के अंदर स्टूडेंट्स आके स्पीच दे रहे हैं, लेकिन स्टूडेंट्स बेल रिंग कर रहे हैं. तो everyone at NSE also told us कि यार it's a very unique experience, लेकिन आप लोग कुछ अलग कर रहे हो.
Why is Alak so media shy?
So, he is not media shy at all. Like so he is in front of camera all the time because.
No, but it's different when someone's asking you a question.
So Alak is specifically want to address academics part of the business, want to address impact part of the business, and the path to profitability, the numbers questions is my responsibility.
You've done very well in your first interview post listing, Prateek. Thank you so much for joining us here at NDTV Profit, addressing all of your new investors. Your stock is doing very well, but like you said, वो एक दिन का exam ये चलते रहेगा as far as the stock market is concerned. Right. Thank you so much for speaking with us. All right, so that was Prateek Maheshwari. I would say this is the company of the moment in our studios right now. Very short break, but all the action continues on the other side on NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably
Welcome back. You're watching Profit Buzzers here at NDTV Profit. Now, key market voices have made a strong push for tax reforms in their meeting with the finance minister ahead of the budget, from recalibrating of short-term capital gain tax to anywhere between cash and derivatives to easing the burden of dividend and buyback taxes. Participants have outlined measures that they believe can deepen India's equity culture and boost household participation in markets. Let's go across to Shimi for details on what was proposed.
Yeah, that's right. Capital market pre-budget consultation attended by some prominent names including Saurav Mukherjee, Sandeep Sikka, Motilal Oswal, and people from MCX and regulatory bodies, and in fact mutual fund industry as well has concluded, and in fact the participants have suggested some key recommendation to the finance minister in its pre-budget consultation, and that include that lowering the security transaction tax on cash compared to derivative, and that is very important suggestion coming in. As we know, there has been a chatter around levy of securities transaction tax for quite some time, especially after a PIL have been filed in the STT levy, that how this is leading to double taxation. So that is something noteworthy and we need to watch out for. Then there are discussion around how to sort of increase the retail participation in the equities market and increase it up to 8% from current 2 to 3% is also something being discussed in the meeting. Other than that, the discussion also held on there should be a buyback tax on only the profit portion of it and not the total buyback amount is also something the capital market participant have pitched, and in fact there are also some discussion around that the short-term dividend should align with the NRI rate, as current rate has reached up to 45%, and that is very concerning, and that's what capital market participant has pitched today to finance minister. Now the pre-budget consultation meeting will continue with startup and manufacturing sector through the day, where they're going to pitch their respective wish list to finance minister, and this whole week, as we know, is action packed for finance ministry and finance minister as she's meeting people and representative across the sector, and in fact the entire pre-budget consultation is expected to conclude on October 28th with meeting with social sector and internal official, and that is important because that will set a tone and preparation for government on several allocation, need and requirement of each sector, each ministries, and that's also coming at a point when in our last meeting with economists suggested to have a budget this time to be more growth-led budget, to have more focus on fiscal prudence, and that is also important because the 16th Finance Commission submitted its report on the fiscal glide path of government for next 5 years. So it's interesting to watch out how these suggestions will pan out and to what extent Finance Ministry would kind of look into these recommendations and whether that will reflect in the final budget making.
Okay, Shimi, thank you so much for bringing us those details. Of course, we'll have to wait and watch out for as to how much of this is actually being taken into consideration and if there's change happening. But moving on, some of the stocks that are buzzing in trade are WPIL, Bansal Wire as well as Keynes Tech, and Jasmeet joins us with more details on why they're buzzing. Jasmeet?
Well, right, thank you for that. Starting off with Bansal Wire, while the stock is buzzing on the back of reduced GST charge for the company, the GST charge has been reduced from rupees 45 crore to 69 lakhs and company to further file for reviews under the GST authority under the GST Act. If we look at the next stock on my radar will be WPEL, while the company received an order from the JV worth rupees 400 odd crores and the order is for electromechanical work, while this order is to be completed back in South Africa. If we look, the third stock that's buzzing in trade would be Keynes Technology, while this stock is buzzing and it's slipped almost 6% in trade today. Well, this thing comes after the company's lock-in shares have released. Today, the 20% of lock-in shares have been released, which are flooding the market, creating the pressure on the stock. While the shares are roughly 11.2 million in number, which have increased in the market today. So these are the stocks buzzing on back of the news.
All right, Jasmeet, thank you so much for bringing us those details with regards to all of these counters. We have Prashant Tapse, Senior VP Research Analyst at Mehta Equities, joining us now. Prashant, hi. Very good afternoon to you and thank you so much for taking out the time. Any view with regards to where Keynes Tech stands, considering how it's done in past, but the other counters that he mentioned was Bansal Wire as well as WPIL. The stock is zooming in trade a lot today. Any of these that you're liking?
I think Bansal Wire looks very good for me at this point of time. The stock has actually underperformed because of this news, which was last 3 months back with 43 crores of the GST demand. But again, now government giving some kind of big relief that is giving a lot of support for the company. But that is not directly impacting the profitability of the company, but it's a one-time benefit which can they get. But overall, in terms of valuations, I think the terms of Bansal Wire looks very good at this point of time, and even the quarter-on-quarter numbers which are growing in terms of volume is also giving some kind of confidence for investors to have a long-term outlook. Technically, again, the stock is going to have some kind of breakout at a 50-day DMI. So I think it's a good stock to focus more on. With respect to Keynes Technology, I think the stock has been underperforming from the recent times. I think that there is a reason of some kind of selling pressure from the higher levels. I think we have to wait and watch for an investor to have a best rate to buy. At this point of time, with respect to earnings and all, I think they have done really very well. Very stable EBITDA growth, very stable profitability growth, and I think long-term investors no need to worry. It's a good time to accumulate.
Okay. So that's with regards to where Keynes Tech is concerned, and of course Bansal Wire as well. A lot of strategy notes have come in, today, and a lot of those notes indicate that the second half of FY26 is going to be better, and overall 2026 is going to be much better for the markets. I'll start with what Morgan Stanley note had to say. This is from Rhythm Desai. The note says that they see Indian equities regaining mojo in 2026. 2026 is likely to be a macro trade in stocks versus that of stock picking environment that we've seen in 2025. 13% upside in BSE Sensex is what they're seeing in. Domestical cyclicals is something that they'll prefer over defensives and external facing sectors. Overweight on financials, consumer discretionary and industrials, and underweight on energy, materials, utility as well as healthcare. The other one is from Mahesh Nandurkar, Jefferies note, that says that September quarter earnings showed sequential uptick after 4 quarters of decline. Early festive season has aided revenue growth to a 10-quarter high. Sustainability of GST-driven consumption uptick is a key thing to watch out for stronger earnings trajectory going forward. And MSCI India earnings growth for FY26 at around 10%, is sitting at around 10% now. City on India note by Surendra Goyal says that Q2 slightly ahead of what they were expecting. Revisions trajectory is stabilizing and overall sustenance is the key from here on. Festive season demand saw an uptick but remains to be seen if the momentum sustains or not. Update on US-India trade deal is something that they'll be watching out for, and overall relative valuations look reasonable, and September 2026 the Nifty target that they've given is 27,600. Lastly, JP Morgan, Rajiv Batra note, Q2 has witnessed better than expected quarter. Anticipate accelerated double-digit growth in second half of FY26 as well as FY27. Reiterate preferences for domestics over exporters, likes material, financials, consumers, hospitals, real estate, defense as well as power. So this is the overall view of what different brokerages are talking about how the outlook of markets is looking like. On this side of the show, we are also joined by Vinay Rajani, who is the CMT, Senior Tech and Derivative Analyst at HDFC Investment Securities joining us now. But Prashant, before I go to Vinay, your quick view, the key takeaways for me from all of these notes were that, of course, one, they are bullish. Second, they are, kind of pointing towards the kind of boost that consumption is seen because of GST. Will this continue or not? The sustenance is a key. And in terms of the overall preference over sectors, everybody is preferring domestics over cyclicals or over export-facing sectors. So these are, I think, the key takeaways from these notes. What's your outlook like where markets are concerned from here on for let's say, for the next 1 to 1.5 years?
I think we also continue to have a similar kind of outlook. I think the second half of this financial year will have a major impact of the GST benefit, which added on the September 22nd of 2025. Even I am waiting for a consumer growth, which will be impacting through the last budget, which was a 12 lakh salary benefits. That will also get some kind of consumption growth very soon in the second half of the this financial year. Obviously, the festival season is just over. I think the real impact of the business model will come into the second half. So very positive on the second half. I think even this year we will see some kind of good growth in terms of earnings in the large cap companies which are in the Nifty as well as on Sensex. But again, with respect to specifically sector, I think we do continue have a very positive outlook on financials as well as NBFCs and the auto sector. These sectors, I think the major consumption story will come really give some kind of impact on this. Even the GST benefit will have a major impact on the third quarter of this financial year. So I think for a yearly target, I think we can have at least 27,300 on the Nifty levels for this financial year, I think March 2026.
That's pretty interesting on that. Vinay, good afternoon. Sharad here. Looking at the overall markets, they are very choppy coming in, especially for the expiry day as well. But the sector-specific moves, metals, over here we are seeing an important technical sell-off coming in, and of course the dollar strengthening is something which is also impacting it, and profit booking also coming in. How are the medium-term chart setups looking like for metal? Would this be a good opportunity to buy the dip, or you want to wait it out at least till Fed's rate cut comes in?
Yeah, so metal index is looking good on the medium to long-term charts. There has been a clear-cut positive trend, but for last 3 consecutive weeks, we can see some profit booking coming in, and because of the global cues, the metal index is facing resistance at higher level and not able to move up. So finance as a space and banking as a space has been outperforming. Metal is, we can say it is into a running correction, but looking at the monthly chart, looking at the weekly and monthly setup or price setup, it looks like that metal is overall looking very strong, and they should be bought into. If somebody is having a longer term horizon, at least more than 3 months or 6 months, then definitely metal has got good potential to give returns in the portfolio. So yes, right now short term trend is dicey, looking running correction. It could extend the fall also, but overall I feel that dip should be bought into. There could be some dip further. 2 to 3% dip can be expected in the metal index, but overall I feel that Nifty metal index is headed higher, and it is likely to outperform in the medium to long term. So wait for some dip to come and ideal support levels. Statically, I am expecting immediate downside of let's say 2 to 3%, but not more than that. So those who are investors can continue to hold, while traders can avoid for the short term.
That's pretty interesting on that. Medium term, long term basis, of course, the strength is still there in the metal space. So if you are a positional trader or even an investor, there might be something to buy on. But moving on, WeWork is in focus. The stock has done really well in the day's trade, and Mahima, Jeffries' initiating report has come by. Is there at a target price of 790. Now there's an important word called flex office space. So I wanted to understand, what does it actually mean? It's a normal office space, and then you add your customized interiors. That's where the flex comes in. But net, looking at what Jeffries has stated, they are very bullish on this industry as well. That's growing at 17% CAGR. That's 2 times of what the industry average is. And the under-penetration is there. That's a very important mark to look at. Why? Because tier 1, tier 2 cities, both of them are growing when it comes to the flexible workspaces. Also, interestingly, I did check the other numbers also, where the overall positioning of this company is on the premium side. That means margins and the average revenue per user, that is also coming in the higher side. The revenue EBITDA next 3 years expected to go up between 22 to 28 odd%. And stock is in this today's market also up almost 3 odd%. Prashant, I have a question for you. This entire space of this new companies have come in. When it comes to, of course, beneficiary of GCC expansion, the office space, it's getting quantified. Stocks such as SmartWorks, Office Space, EFC, these companies we have covered at NDTV Profit as well. Which are these companies are showing a good or a better risk and reward ratio as compared to others?
I think the risk remains same for everyone, the way how industry is growing. But in this, again, I think WeWork as well as Office, these two companies are doing really great. Again, Office is already into a profitable zone and WeWork is trying to achieve that profitability very soon in this financial year or best case next financial year. But again, this sector is very interesting. I think the way how the industry is growing, nobody wants to have a lot of pressure on the real estate again. So I think corporates are taking a very informed decision to have their offices into this kind of flexible office rented one. So that will give a lot of benefits for a corporates to have a very unique model of presenting their business in this kind of scenario. So very positive. I think India is growing very fast towards flexible space, and that the growth can be in between 15% to 20% CAGR for next 5 years. So we like Office very well on the first weightage. Second, WeWork could be the second option for an investors to be a long-term investor.
Yes, a long-term investment bet coming in from Prashant. But during our discussion, Prashant had mentioned one word, Mahima, and that was called grow. And now you see the grow word has been growing across my mind throughout the day. Why? Because it's still rallying, and after its listing, we're seeing a strong up move coming in. Yesterday already, the records were set, 1 lakh crore plus market cap. But interestingly, we did a little bit of research and look at this ABB India, Indian Hotels, Dr. Reddy's. These are the premium large caps that we talk about on a general basis. The Grow's market cap has gone past that. And right now you can see it's up more than 70% from the issue price, and a decent listing was also there. But the question remains is, why is this stock not cracking? Why there is no profit booking? There's an interest coming from HNIs, institutions, long only funds are still active, and the October operational data has been very strong. Market share also actually better than Zerodha, and the gap is going up and up and up. Groww, look at the numbers, 1.38 lakh new admits have come in customers. Other peers, they have seen all these numbers in the negative. With the peers also, revenue profit margins, that's also gone up in trade, a significant up move coming in. But that's the main question then again comes back to us is, now the valuations, are they justified? Grow's FY27 and FY28 numbers, which we have actually calculated, one is on price to earnings, one is on price to sales. Look at that, it's on the higher side, assuming a 50% revenue growth. So either grows more, or we can see the peers actually doing a valuation catch-up, because these valuations are less. And look at that, 88% in just 3 to 4 odd trading sessions, Mahima.
Absolutely. I think somebody who's not gotten the allotment or missed the bus would be really crying their hearts out. But Prashant, I'll come to you on this one. Today, while I was doing Ask Profit, I did ask Astha also that somebody who's missed the bus, is this still a buy? And she said, no, it's clearly not. But she said, whosoever is holding since the listing can book 10% of their profits and continue to hold the 90 other percent. What's your recommendation with regards to a Groww stance?
Obviously, yes, no fresh buying advice at these levels again, because valuation was the question and that will remain as a question for time being. Until unless they give a very clear picture of what their next first quarterly earnings, the growth should remain same. If there is some kind of little bit slightly downside, there will be a good correction in the price. But again, one should focus more on the market share, which they are gaining month on month as well as quarter on quarter. With 26% market share, then again, it's bigger than the BSE market cap right now. So that is giving a lot of confidence, and people who want to have a proxy investment in the Indian capital markets, they should hold Groww, BSE, Angel, Zerodha is not listed, but again, so these 4 companies are almost covering the market cap, the 50-60% of the market cap in the broking business. And the new digital go ahead and making bigger client acquisitions is giving a lot of confidence. So I think I will go long for the long-term investors, but again, best level to buy, I need to wait and watch.
Okay, all right. So that's with regards to where Groww stands. But big brokerages are turning upbeat on PNB Housing after a surprise credit upgrade. Both Morgan Stanley and UBS say the move to AAA materially improves the company's growth and profitability outlook. Let's go across to Somit for a detailed brokerage take. Somit?
PNB Housing stands to benefit given the fact that credit rating we have seen an upgrade in the credit rating, which could lead to lower cost of funds for the company going forward, and largely brokerages are upbeat on the back of this rating upgrade that has come in. Now, Morgan Stanley has maintained their overweight rating on the counter with a target price of 1,170. Now, they are saying that they were not expecting this rating upgrade to come in so soon. They're also saying that it is positive for growth and profitability for the company going forward, and they're expecting they are saying that this could further help the company to lower its cost of borrowing, thereby benefiting the loan spreads and loan growth in time going forward. They're also saying that the rating upgrade, along with the strong execution or strong results that we had seen in the second quarter, should give investors confidence, and the stock is already trading at a low valuations, and the next big trigger for the company would be the appointment or the name of the new CEO coming in going forward. So that's the key trigger to watch out for when it comes to PNB Housing as per Morgan Stanley. When it comes to UBS, they have maintained the buy rating with a target price of 1,200 rupees on PNB Housing, and they're also saying that this rating upgrade is sentimentally positive for PNB Housing, and this upgrade, there could be further upgrade that could come in from other agencies as well, which could lower the cost of funds by by around 20 to 30 basis points decline in the cost of funds is what they are expecting going forward. And they're also saying that other rating agencies would as well upgrade their rating on PNB Housing. They're also saying that the key trigger for PNB Housing going forward would be lifting of restriction that RBI has put in because of the overlapping businesses by parent, that is the bank PNB. So if that restriction has been lifted, gets lifted by RBI, then that would be the key trigger going forward for PNB Housing.
Okay, so Amit, thank you so much for bringing us those details. Vinay, on the charts for PNB Housing, what's the outlook like?
Yeah, so stock has recovered nicely from the lower level. In the month of September, the stock was trading at 750 and more than 200 points rise has been registered. So gradually getting strength on the chart. But if I were to look at the long-term scenario, on 1st August 2025 itself, in this year only, we saw a big gap down opening on the back of some negative news, and that gap was formed in the range of 883 to 964. So this is the unfilled gap. Right now, this particular price, currently we can see that the current market price is hovering around this particular unfilled gap only. So gap theory says that there has been a strong resistance at 965, which is the higher band of the lower gap. So 965 is a resistance, and overall there is a positive bias, gradually higher top higher bottom we can see. And not only the PNB Housing, but a stock like Canfin Home has also been showing strength. So sector is improving on the charts. Finance, NBFC and banking space has been doing good. So there is a higher chance that this will participate on the upside. So, but technically, yes, there is a strong resistance in the 965, which traders and investors should not ignore.
Well, that's pretty interesting for that PNB Housing Finance. But another stock in focus is MGL. Yesterday, also, the Mumbai region was impacted, the normal travel, and interestingly, the commute, that was something in question yesterday because of a pipeline burst. But apart from that, the company is in focus after the company posted its Q2 numbers. Earlier, we spoke to Ashu Singhal, the MD of MGL, who shared his outlook on when gas supplies could return to normal levels. Listen in.
The incident happened on Sunday first half, and Sunday afternoon onwards, the supply was not available from our Wadala station. So we had to shut down some of our CNG stations. So around 390 stations are there in and around Mumbai, out of which 160 were shut down. So 230 were operating. So 40% were shut down and 60% were operating. Industries were asked to switch to the alternate fuels, and commercial and domestic pipe natural gas to the households were not interrupted, and it was not uninterrupted supply was given to commercial and PNG to the households. So the likely time is expected to be today noon. That means Tuesday afternoon we expect normalcy to start. GAIL has already isolated the section, and we are also there. So the pipeline section is getting replaced, a small part of it. And after that is completed and completion of some tests, we will be able to start the supply by today afternoon sometime.
Well, that's a very important statement coming in from the management that the gas supplies will normalize by today's afternoon. That's something which we'll be watching out for. And Prashant, what would be your technical view coming in for MGL? Of course, there was an aberration coming in, the fundamental view coming in for MGL going ahead, because net, the long-term growth trajectory remains strong. and there is a structural up move happening, but short-term aberrations, so last 2 days. What are your views on it? How it is fundamentally placed?
Whatever happened from last 2 days doesn't have a very major big impact on the earnings going forward for Q3 as well as the full financial year. But obviously, yes, there is a concern rising. Such kind of technical glitch can keep this stock or this sector under pressure. The way how we faced in Mumbai last 2 days. But again, in a fundamental matters, again there are a lot of regulatory tariff related news from last 3 to 4 months. So that is keeping this business model very much under pressure. If you see the Q2 earnings, there has been pressure in the EBITDA margins from average of 22% to 16%. So that is giving some kind of pressure in the overall business model. So short term, there will be some kind of pressure going forward. The stock may consolidate at these levels only, but again, long term, as you said, the story of growth in terms of CNG business as well as the PNG business for the consumer will continue. But it's a great opportunity to buy on dips.
Okay, all right. So that's the view with regards to where MGL stands. But Anushi joins us with all the action in the primary market as to how subscription numbers are looking like. We saw Physics Wala come in with a stellar debut on the D Street. But Anushi, for the IPOs that have closed or are ongoing, what are the subscription numbers indicating?
Right, Mahima, as you just spoke about that, on a relatively quiet day of trading, Physics Wala was definitely an outlier, and this is with a listing gain of over 30% that we've seen in the market. Currently, about 40% is kind of the upside that we are seeing for this particular counter. While if you take the other listing in context, MV Photovoltaic Power, that has listed flat with gains of about 0.6% or odd. So that's with regards to both of these new debutants on street today. But coming to the IPOs which have opened for subscription as well, let me talk about Capillary Technologies as well. Now, this is a leading SaaS company that we are seeing, which is specializing in customer loyalty as well as engagement solutions. Here, if we look at the overall subscriptions, that's almost 1x, which is mainly led by the non-institutional investors as well as retail investors. While something like a Fujiyama Power Systems is also in focus, this company is responsible for manufacturing products and provide solutions in the rooftop solar industry. This includes on-grid, off-grid and hybrid solar system as well. Overall subscription for this one is around 2.2x or so, and this is mainly led by qualified institutional buyers. About 5x the subscription is coming from there. Non-institutional investors, they are not completely filled in yet, about 88% or odd so, while retail investors about 1x. Of course, these are the figures that we'd seen at the end of yesterday's closing session. What would be update as of today? By 5 p.m. or so, we should get a quick check on that as well. So these are the main IPOs that are in focus today.
Okay, Anushi, thank you so much for getting us those details. Prashant, any of these IPOs that you're looking at?
No, we are not covering both the IPOs because we are not so convinced on the business model as well as on the valuations. So we have a very neutral view, and we are not come out with any official report on this.
But Prashant, overall, what is your view on primary markets? Because recently there have been cases where where Shimi was just talking about how there's going to be a committee just before budget to talk about primary markets as well, where founders cannot just cash out in terms of IPO, but actually invest in their businesses and grow investors' money. All of these concerns are hanging around. There's valuation concerns, which has always been on the cards, especially for new age tech coming in. What's your view on primary markets? And from an investor perspective, where one person is just going ahead and investing just for GMP, how should one approach IPOs?
I think the reason lies in the secondary market, where from last 1 year, secondary market has not given a decent return the way how markets have performed from the last 5-6 years. So the liquidity is being pushed towards the primary market, where people are expecting some kind of 5 to 10, 15% kind of GMP returns. So that is why the liquidity has fully pushed out from a secondary market to primary market. But again, promoters as well as the PE investors are trying to cash out this kind of liquidity abundant, which has been available in India right now, despite all the high valuation talks in the market with respect to Lenskart, Groww or anywhere. So people are taking such kind of risk, and I think this risk of taking liquidity push will continue for second half also. And obviously government, whatever the government is thinking to have some kind of regulation for an IPO where a promoter is getting a PE equity selling in the market and exiting the business rather than raising money towards the company's growth. So this kind of activity obviously will give some kind of confidence in the investors community, and it is good for a capital market. So very bullish on that. But again, second half we will see more IPOs. I think that will also keep very much in action with respect to primary markets.
Primary markets are showing action, but even secondary markets, a lot of blocks are happening and a lot of action coming there as well. Mahima, in total, all roads lead to exits. PEVCs in the primary markets and secondary markets also, we are seeing some kind of a promoter PEVC exits happening. If you look at the stocks, Paytm also we are seeing Zinka Logistics, Emphasis and Emcure Pharma. 4 important blocks were there, and largely the absorption generally we can see post-market hours who has bought it, especially in the domestic institution. But all 4 stocks we are seeing kind of a selling and all in the red. But out of these 4, if we had to pick, of course, we would be looking at Paytm. The stock has been under discussion as well, and now you can see the overall block deal sizes also of all these 4 companies as well. Of course, on the higher side, Emphasis is there. That's almost 4,600 crores or something we can see overall in this space happening. But let's just pull up these stocks. We're expecting these stocks to have a good absorption as well. But Prashant, out of these 4 stocks, which one fundamentally looks strong?
I think Emphasis looks very strong for me post this price correction. There is a good valuation and very discounted price because of this selling pressure. So I think Emphasis can be a very mid-cap IT stocks, which we are very much bullish on medium term as well as on the long term. So one pick would be Emphasis.
Okay, all right. So that's the view with regards to where the charts are concerned, and not the charts, where the fundamentals are concerned. And speaking of IT, as Prashant did talk about Emphasis, after months of sharp correction, Nifty IT, it's finally showing signs of rebounding, nearly 4% in the last week, even as index remains down close to 18%. Now, for the year, this is what we've seen. We break down what's driving the rebound and what's actually changing inside IT companies and what the road looks like ahead for the entire sector. Let's get in Jasmeet to tell us as to what brokerages are also saying and what's in store for IT. Jasmeet?
Well, thank you for that. As rightly said, the IT saw a rebound only 4-5% the previous week, and the index is still down by 70% on Y20 basis. Now, what led to this growth would be the renewed buying, which seemed to be the valuations have slipped below technical averages, which led to this particular growth. On the other hand, we also see that the Trump's softer stance for H-1B visa making the overall correction, while also the US shutdown news comes to be on a lighter note, given that the US might again reopen, creating a positive sentiment to the individuals. While on the other hand, we saw that their Q2 results, most of the companies have met their estimates, and we also see a beat for TCS coming in. So this shows a positive momentum, as well as discretionary spending have been increasing over the AI edge, which shows the AI investment to be the main focus. Now, given that, what has changed the ground would be as we know that the most tier 1 companies have raised their estimates also from here on going forward, and given that AI investment is the main focus for those companies, is something bringing the overall mojo back in the particular entity.
Okay, Jasmeet, thank you so much for getting us that detailed analysis with regards to where the Nifty IT stands. And of course, we have to wait and watch out for whether actual recovery in the sector takes place or not, and whether the second half is going to be better in terms of where the Nifty IT is concerned. But with that, Prashant and Vinay, thank you so much for taking out the time and speaking with us, and of course giving us all those insights on different stocks that we talked about. So thank you so much for that. Viewers, with that, we're completely out of time in this edition of Profit Bazaars, but small cap bazaars on the other side, so do stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably,
Sudeep Pharma is looking to raise close to 895 crore rupees via the primary market. To discuss the company's way forward, we are joined by Sujit Jaisukh Bhayani, Chairman and Managing Director of Sudeep Pharma, and Sanil Sujit Bhayani, Whole-Time Director of Sudeep Pharma. Starting with what will be the primary use of the 95 crore fresh issue that you're doing? How does it tie into your capacity or product expansion plans going forward?
Sure. So the primary raise of 95 crores that we're doing, 75 crores of that will be utilized towards increasing the capacity of one of our key food ingredients called iron phosphate. It is used in the infant nutrition, clinical nutrition programs to enrich the foods with iron, and the 75 crores will typically be used towards enhancing the capacity of the iron phosphate capacities, and then the 20 crores will go towards the general corporate purpose.
And with 58 to 68% of your revenue coming from the global market, which region offers the strongest growth visibility for the next 2 to 3 years?
Sure. So I think, as you rightly mentioned, 60% of our exports come from the global market, US being the largest market for us today. But we are also seeing a lot of growth momentum coming from the developing countries, especially the whole of Asia Pacific, as well as the Middle East and Africa region. In addition to that, Europe, which is a core focus area for us, we have recently established our sales team in Europe and increased the number of people that we have in Europe, including warehousing capabilities. So we believe that that US and Europe will be the key growth drivers, along with APAC for the business.
Okay, this is Anushree joining in as well. I just want to understand, how do you expect this NSS acquisition under your arm, Sudeep Advanced Materials, to contribute to revenue growth and margin expansion thereon?
So the acquisition that we've done overseas in Ireland of nutrition supplies and services, they are focused on manufacturing mineral and vitamin premixes using a very specific technology to create a homogeneous blend, again for the infant nutrition business vertical. And through the acquisition, what we've acquired is a lot of customer approvals, which typically take anywhere between 3 to 5 years to receive. Along with that, we've also now been able to have local manufacturing presence in Europe to cater to the wider European market. And most importantly, they have certain proprietary formulations which were developed over the past 40 years. So that is what we have acquired through the NSS acquisition. And the second question that you mentioned was regarding Sudeep Advanced Materials. That is our diversification into the battery materials ecosystem, again leveraging our mineral chemistry expertise, we have successfully developed and commercialized a battery grade iron phosphate to support the lithium iron phosphate chemistry for EVs and energy storage systems.
So just with that, also want to understand the margin picture. What operational or efficiency improvements are you expecting further, which will maybe stabilize or in fact improve your margins going forward?
So again, we have certain, we have an upcoming greenfield project, which is due to get commissioned end of this financial year. That will add around 50,000 tons of capacity to the existing business. And that facility is built keeping in mind a lot of automation to ensure that we are able to achieve better process or have a better control on process parameters and control on the cost as well. Again, I think it'll be difficult to guide in terms of how that will improve the margin at this moment.
In addition to that, I think we also have set up warehouses in North America and in Europe, which will going to the customers direct. That will also help us to do better on the margins.
So just wanted to understand from you, how do you expect the shift from the distributor-led model to direct market access model supported by US FDA approvals and new warehousing infrastructure in the US and the European market will impact your export growth, margin profile and customer penetration over the next, say, 2 to 3 years?
So, we have a very wide variety of products, and the kind of products we offer, we thought it was better to go direct to the customers and bypassing the distributors, which would help us to be in direct contact with the end customer, and also that will help us to do better on the margins. And of course, warehousing nearer the customer, being close to the customer would really help as well.
Also wanted to ask you regarding your product profile. You have already about 200 plus products or so. Just want to understand whether you're targeting any new product categories or formulations which are likely to drive growth further.
Yes, so I think if you see, we have historically always invested, constantly invested in our R&D capabilities. Today, I think close to 2% of our revenue is spent on R&D, and we have successfully developed 6 proprietary technologies to value add ingredients. And when I say value add, I mean how can we enhance its functionality and performance. So that is a key growth area for us. We work across the minerals category, vitamins, and now also expanding into the food and nutrition category. The 6 technologies will help us develop a wider range of products for the markets that we are currently serving.
And how do you plan to mitigate the concentration risk that we are seeing that you're having for most manufacturing and R&D facilities in the single region?
I would say, I think from how our business stands today, I think it is fairly well diversified. We have 4 manufacturing sites in India. We have 1 manufacturing site in Ireland. We have 1 R&D set up in India. We have the other R&D set up in Ireland. And even within India, yes, all the sites are currently located in Gujarat. There are a couple of sites which are within the same region, and then 1 larger site, which is our specialty ingredients technology-led site, which is at a different location. So we believe that through these efforts, the manufacturing capabilities and the R&D capabilities are well diversified.
Okay, well, that was the management of Sudeep Sharma. Thank you so much, gentlemen, for joining and sharing that perspective. The IPO will be opening for subscription soon. But let's see what's happening with the markets currently before we move on to the next management. Currently, if you look at Nifty 50, it's down about 0.1% or odds. So seeing some bit of that pressure after 6 days of strong gains. This is aided by the global cues as well, which are also on the weaker side is what we are looking at. In fact, if you look at the broader markets also, deeper cuts is what we are seeing. seeing currently Nifty Mid Cap 150 down about 0.4%, while Small Cap 250 seeing cuts of over 0.8%. Specific stocks in focus, if you have to talk about that, in the small cap space, which are leading to this kind of losses that we are looking at, some key triggers include something like Keynes Tech, GMDC and Alembic Pharma, which are under pressure. We are seeing cuts of over 3 to 5% in that particular range, while in top gainers, we have something like a Bombay Burma, All Cargo Logistics as well as Graphite, which are in focus, seeing in fact Bombay Burma up over almost 10% in trade today. Coming to a couple of volume buzzers which are there with volumes of over more than 30 times compared to its 30-day average, we are looking at something like a Fairchem Organics, which we'll be discussing later on the show as well. 15% of an upside on the back of its buyback news. 5 Paisa Capital also seeing gains of over 13% or also, while Roto Pumps is under pressure, seeing cuts of over 3% as well. Phase 3, Om Freight Forwarders and Ester Industries. Now, these are the three stocks that we've highlighted before, also are back in traction. We are looking at strong reactions to these particular counters as well. This is anywhere between 8 to 9% is currently what we are looking at. But, with that, let me go to the management of the day. Now we are joined in by Ronak Morbia, CMD of Eris Infra Solutions, to discuss about the quarter gone by and what's the outlook forward. So, welcome to the show, Mr. Morbia. What I'm looking right here is a strong set of numbers. You've reported a 38% of a growth in terms of where your revenue is. Margins also increased to the levels of 9.3%, and net profit also stood at about 14.2 crore versus a loss figure that we'd seen in last year. Just want to get your outlook in terms of FY26. What is the guidance like? You've guided for about 35 to 40%, but first half, comfortably, you've already achieved that mark, and the third and the fourth quarter is something where the execution pace picks up. So is that rather on the conservative side?
Yes, first of all, thank you for having me. If you look at India today, the construction industry is in one of its biggest cycles ever, right? From real estate to infrastructure to industrial, everything is expanding at the same time. And materials demand is growing faster than the industry can organize it. That's exactly the space that we operate in. And our Q2 performance, as you said, has been a reflection of this momentum. We delivered strong year-on-year growth, about 37% growth in terms of revenue, almost 50% in EBITDA, and turning it around from a 2 crore loss to recording our highest ever quarter profit of about just over 15 crores. So yes, even if you look at our H1 numbers, it's been steadily improving. We've grown in terms of revenue. Our EBITDA margins are expanding, and the PAT is strengthening meaningfully, almost over 4.5 times from what we recorded last year. So yes, we have given a guidance of about 40% year on year. We are already at an annualized revenue run rate of almost 1,000 crores. Our H1 has been the best it has been, for since inception. So yes, we are on our way to record. We're very excited for the next 2 quarters as well. That's when construction activity is also at its peak.
Okay, just want to get a sense of the margin picture as well. You've clocked in about 9% margin this time. The aim is to get this to a double-digit number. By how quickly can you execute this 10 to 11% of mark in FY27? Is that a possibility? Because if you are looking at the mix, contract manufacturing and services, the mix from last year is increasing, and you're targeting about a 50% mix in contract manufacturing. In services also, you are aiming for about 10 to 12% mix. So give us a perspective on that as well.
Yes, EBITDA improvement is an outcome of what we do, in all of these segments. If you look at both the segments, contract manufacturing, we've grown from about 35% revenue contribution to almost 44% at the end of H1. Services also has been growing steadily from a 5% contribution to almost over 8%. And we expect these two segments to grow. In fact, that is going to be our focus. So yes, instead of, giving a guidance of when we will reach 11%, I think the focus is kind of, increasing our focus and contribution from these two very exciting segments, which will in effect, result in better EBITDA margins as we move forward.
Just wanted to understand one thing, sir. I can see here around 25% of your product mix is towards steel products, right?
No, about 65% comes stone aggregates and ready mix concrete, which is our main product. It's the most unorganized segment today, and that's where we focus on. Steel and cement is down to just about 10 to 12%. These are all high volume, low return products. We feel they're fairly organized, not much value to add in the market, but we currently are focusing on the relatively unorganized markets where it's a very regional product. A lot of challenges the developers and contractors face when it comes to sourcing, quality monitoring, and delivery. So yes, steel and cement down to just about 10 to 12%.
I just wanted to understand one thing when it comes to the steel space. What we are picking up is that demand for steel products has not picked up meaningfully as they were expected to do in the third quarter. What are you understanding here? What is the groundwork or channel checks that you are seeing when it comes to demand for specifically for steel and cement products?
I think it's really an outcome of the construction activity that is happening all around us. When we see, I think the larger picture with a lot of infrastructure projects coming up, I think the demand is steadily going to grow. For the foreseeable future. In not just steel and cement, even if you look at stone aggregates or maybe concrete or construction chemicals, all of these materials are required for the production of another raw material. So the demand for all of these key raw materials, without which any construction activity would not be able to start with, is continuously growing. And we expect this growth to continue for the next few years because of the large scale projects that are already underway across the country.
Contract manufacturing is the main focus for you, right? So how are you planning to grow this over the next 2 to 3 years? What would be the revenue mix? And because of increasing share of contract manufacturing, how much of your margin, how much of a delta that we can see in your margins coming in?
Yes. So, we got listed about 4 months back. At the end of FY25, we were at a capacity of almost about 3.5 to 4 million annually. Post listing, we've aggressively grown in that aspect. We've invested in more capacities. Right now, we control over 9 million annual capacity, and we are at a current utilization of just over 40%, which means there is significant headroom for growth. And that's why we're confident that we will be able to breach that mark of almost 50% contribution coming from contract manufacturing. And to answer your second question, when we compare, the EBITDA margins from our B2B supply as compared to contract manufacturing, the difference is a 3% EBITDA versus a 9.5% EBITDA. So the incremental EBITDA coming from contract manufacturing is really exciting, and it's really an outcome of the high volume of orders that we generate. And contract manufacturing not just gives you higher margin, but it also gives you the supply security required to fulfill the higher demand of large contractors.
Okay, this 50% product mix target of contract manufacturing you just mentioned, by when are you planning to achieve that?
We believe in the next 6 to 12 months, we'll be able to comfortably breach the 50% mark.
Right.
For contract manufacturing.
Okay, so 6 to 12 months is what we are seeing for contract manufacturing. Just also want to get your perspective on the order book. Currently, that stands at about 850 crore or odd. So by end of FY26, what would that figure be?
Yes. So the order book, we look at the order book in our business in a slightly different way. It's broken down into 3 parts. One is the B2B supply materials demand. We operate on a steadily growing monthly demand of about 80 to 90 crores at the moment, which turns out to be an annualized demand of around 1,000 crores. Reserve capacity I just spoke about, we have an annual capacity of 9 million metric tons. The value would be approximately about 900 to 1,000 crores. Alongside this is the additional order book of 850 crores, which is a mix of service mandates and cross-selling of materials. So all in all, we have strong revenue visibility for the next 2 to 3 years.
Well, thank you so much, Mr. Moria, for taking out the time and speaking to NDTV Profit on the outlook forward for Eris Infra. But with that, let me welcome in our fundamental guest for today, Lancelot Dicona, CIO of ValueX Wealth Connect, joins us. Hello and welcome, Lancelot. I just want to ask you about Eris Infra Solutions. What's your outlook on this company? It's a new listing in town that we are seeing, and it has reported a strong set of numbers. But it has a different model versus the other players that we are seeing in this infra segment. Just want to get your perspective on this.
So I think, yes, the model is slightly technology driven in terms of distribution. But at the end of the day, it is mainly, if you break it down into its components, a lot of it is ready mix concrete, which they're selling to various people. and they probably using various other procurement solutions which they're offering to construction sites in order to keep their costs a bit lower. So all in all, it's really like a business where they have to get it manufactured from third parties and deliver it to the customers, and they would make a margin on the spread. Now, given that the volumes can be high, but the margins are fairly thin in this market, and everyone's looking at trying to reduce cost. So there is a limit to which you can actually take profit from this chain, and that will keep ensuring that only if their scale grows up to a very large scale, then they could probably get a benefit. But in the meanwhile, it's going to be a constant competition between rising costs and profit margins. And if you look at the stock, it's trading at almost 70 times earnings, which is a very high multiple. So while it is an interesting play, it still is an expensive investment to make.
So continue to remain cautious on higher valuations for Eris Infra Solution. Well, that's the view coming from Lancelot. But before we discuss more small cap stocks which are buzzing in trade today, let's take a deep dive into the derivatives markets. And we have Sharad Dubey standing by to give us perspective on what's happening in today's trade.
Thanks a lot, Anushi, for that. And market is trying to recover. Sensex, if you look at it, a recovery is trying to be made from the day's low as well. And let's pull up the chart as well. Not much happening in the benchmark indices as far as the IT segment is concerned. We are seeing selling pressure intensifying. Bharti Airtel maintaining its lead in the day's trade. Overall, Sensex going past that 85,000 mark, but the open interest that has come down. Let's pull up the overall active contracts in Sensex where the action has moved, and that has slightly moved towards call, and that is something which we will be watching out for. Remember, Thursday is the expiry. Also, BankX, this chart setup has been better than Sensex if we compare them, and Federal Bank on the higher side, that's actually leading this top gainers. And also SBI, that has also moved up. HDFC Bank, not major support coming in BankX, and that's the active contracts also if we can pull up, where the action is coming largely on the call side. The important stocks to focus on, where strong longs are being developed. This includes GMR Airports and Bharti Airtel, followed by short covering stocks. These are two names coming in. Keynes Tech, that's down almost 6% and Inox Wind on the earnings are down 3%. Long unwinding defense names in focus, especially Bharat Dynamics, followed by Vedanta, where we are seeing profit booking in metal space. And last but not the least is the short build-up. Over here, two important category of stocks are there which we'll be focusing on, and I think there isn't much, but overall the markets has sentiment, still has shorts in the system. So that's what we'll be watching out for. This is the important actions in the BSE space.
Thanks for that extensive derivative check. Moving on, after the stellar rally that we have seen in the share prices of Groww, 5paisa Capital is also up in trade. Is it a valuation re-rating that we are seeing in 5paisa Capital, given the fact that its peer or nearly listed peer, that is Groww, has also seen such a stellar run-up? Let's get in Jasmeet with more details.
Well, right, thank you for that. If you look at the world stock performance, it's nearly up 20% in last couple of days. While the trading volume is at 150 times on 20-day average basis, companies also seeing a traction in larger market where we see a lot of bulk and block deals happening every now and then in this particular stock of the company. If we look at the key financials of the company, we see pressure coming up as the revenue is down while the profit is also down to 56% on YOY basis. If we look at the overall revenue mix, the majority of the revenue comes from the broking business, only 45%, while the allied services add to 25% of the overall revenue. Now, in terms of the key takeaways, what we see operational metric wise is that total client acquisition of the company is strong in this particular quarter, is nearly up by 95 lakhs, while the total order executed is by 2.1 crore, is slight pressure on that as well. In terms of daily average value, that's up nearly 18% on QOQ basis. Now, in terms of the key operational highlights for this particular quarter, we saw passing by of the Q2 would be the customer acquisition cost has improved for the company, taking the overall revenue grow. In terms of customer base, also surpassed 50 lakh customers, creating a benchmark for the company. And other hand, we see new customer added with over 95,000 in this particular quarter. Now, if you look at the overall stock buzz, it might be on the back of the re-rating which we see in the Groww, as the Groww stock is nearly at 50% since the listing. So it can be a positive sentiment in the market where we see even 5paisa buzzing in trade.
Jasmeet, another stock which is in focus is Fairchem Organics, and this is on the back of the buyback news that we are looking. Talk to us about that development as well.
Well, yeah, sure. The company has had the biggest intraday gain since March 5th, while trading volume is roughly 90x on the 20-day average for this particular company. Now, in terms of the key highlights, the company to consider the buyback of shares on 20th November of this particular month. This will be the first year buyback of the company, and that's why the buzz. Now, in terms of what the company does, this company is engaged in the business of manufacturing or specialty chemical business, and as we said, the chemical business have been facing some kind of pressure overall in the market. But in terms of the other clientele, company has strong set of names coming in from the Asian Paints, Hubbard, as well as Arkaman being one of the strongest clients of the company. In terms of the stock is nearly down 70% from the all-time high of the company at 2,449 rupees, while in terms of the company listed price was rupees 659 post the demerger that the company has seen back in December 2020. If you look at the key financials of the company, the revenue sees a slight pressure as it's reduced from rupees 648 crore to 548 crore in the previous year. In terms of PAT, we see it has also almost halved from 44 crore in FY23 to 22 crore in FY25. So we see pressure coming in from the financials. In terms of company's outlook as of FY24, what we see was the projected revenue guidance to reach rupees 979 crore. That's above the crucial mark where they were in FY23, as well as the withdrawals of FY26 guidance financials on the back of the weak numbers which we have seen. So all in all, the guidance is awaited from the company to see what they expect from the financials as well as the overall chemical market, how it turns out and helps the company going forward from here on.
Lancelot, your view on both these counters. Firstly, 5paisa, and the second one is Fairchem Organics. 5paisa running on the back of rally that we have seen in Groww, and Fairchem on the back of buyback.
So I think, when you look at 5paisa, it is getting some traction because of the high valuations of Groww. But at the end of the day, while they may be adding about 93 lakh accounts, which you mentioned, and there appears to be also some amount of growth in the retail space, it still is a very low margin business and a lot of infrastructure inputs go in at the bottom end. So from a valuation perspective, it's still, fairly expensive. And I think Groww is even more expensive when you consider. And at the same time, Groww is growing at least at a much more rapid pace than we are seeing the growth in 5paisa Capital. So I think one should not get caught in a trap where you're buying into something which is expensive, and that too, it's only because it's compared with another stock when fundamentally it is an expensive proposition, and at the same time, you don't see that significant growth in the bottom line.
Okay, thank you so much, Lancelot, for taking out the time and giving us perspective on all of these stocks that we've discussed on the show. But with that, it's time, we come to the end of this edition of Small Cap Buzzers, but do stay tuned. India Market Close coming up next.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
we unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम के आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money.
You're watching India Market Close here at NDTV Profit. I'm Mahima Vachajani, and with me is Sharad Dubey. Let's take a quick look as to how the markets are doing. Well, it's about the 25,900 levels now. We did see a slight slip below the 25,900 levels as well, but still down by about 0.2%. But the divergent views are, right now there's divergent views on the Bank Nifty. You have your Bank Nifty which is up 0.2%. And of course, keep in mind that you have expiries also playing its part today. So we'll have to wait and watch out for how next 1 hour to 1.5 hour pans out for the markets. Let's try to pull up the Nifty 50 heat map and see as to how the market is looking like right now. Still, 3/4 of that chart is in the red. You have your counters like Interglobe Aviation, Hindalco, Tata Consumer as well as Geo Finance, all in the red, all down by about 1% each till that Infosys. But on the other side, you have Bharti Airtel, Axis Bank, Power Grid, Shriram Finance, some counters in the green, and slightly seeing gains of anywhere between 0.8 to 1% to almost 2% for something like a Bharti Airtel. Let's try to pull up the advanced decline ratio and see as to how that map is looking like, because overall the broader markets have remained pressure throughout the day. You have 723 odd advances versus that of 1680 odd declines. The ratio is 2:1, of course, in the favors of the bear today, and that gap has been widening. It did narrow here for a while, but that gap has been maintained, and that 2:1 ratio largely has been maintained in trade today. Let's try to pull up the BSE 500 as well to see as to how counters have done there. Of course, the broader markets, the mid cap 150 down by about 0.4%, the small cap 250 down by about 0.8%. Not at its day's low point, but still trading around 0.8% lower. Something like a Bombay Bumra, Mahindra Holidays, GMR Airports, Graphite India, Sapphire Foods, all seeing gains of anywhere between 4 to 10%. But on the flip side, you have something like a Narayana Hrudayalaya, KIOCL, SKF, as well as CCL products and Alembic Pharma down by about 3 to 4% each. So this is with regards to where some of the names are concerned. But Sharad, what are the trading strategies looking like?
Well, Mahima, the trading strategies, we could say, are giving divergent views here as well. It's in a small range the market has been stuck, and the recovery attempts are trying to be there for Nifty, and if you see it's actually near the day's high level as well. Let's give it more time so that once the Nifty comes back in the green, then we can of course look at what would be the key triggers going ahead. But yes, the closing will be very much important, especially the closing levels of roughly 25,950 levels. Also the expiry range, that's 25,880. The Nifty Bank hit its all-time high levels twice intraday basis. The support levels are between 58,900 to 58,950. But Nifty is improving, especially in the PSU banking front. They are actually lifting the Nifty Bank, and it's actually better placed also technically if you look at it. Interestingly, there is a slight change in the options data since the last time I updated, and now bullish sentiment is coming back. Medium-term technical setup is still strong, and the primary market momentum, which Mahima had mentioned, the listings were also strong. Overall, broader indices are still bleeding, and that is why the advanced decline ratio, you see a big divergence coming in. And I checked the European markets as well, weak opening coming in from global cues, as overall market is expecting that Fed's chances of rate cut might actually be lesser. And after 2 days, a September non-farm payroll data is going to come, and this will be the first time the data will come post the US government shutdown, and metal and realty both taking the beating as well in the losers. But in this market, of course, expiry is also on. We are having Kush Bora from kushbora.com and Aditya Shah from Hercules Advisors joining us. A very good afternoon to you both, gentlemen. Kush, we'll start with you. Overall, medium-term setup looks good, but Nifty Bank, it looks like it is technically well placed, and today's expiry also. What will be your views on it? What should an intraday trader do? And also positionally, what should be the view?
Sure. Hi, Sharad. Hi, Aditya. First of all, very good afternoon to you and to all the viewers. The first suggestion would be thoda sabr rakho, right? 6 sessions of gains on the market consecutive, at least on the Nifty, right? I think some profit booking is par for the course, and this is also more like consolidation rather than profit booking. So I'll take this move that Nifty is giving today. You saw an intraday dip close to that 25,875 mark, and then a rebound from there. So I think the near-term outlook for the market remains very healthy. In fact, we've tested the 26,100 or 26,000 zone yet again. This makes it 4 times in the last 1 month that we've tested it. So in all likelihood, when you usually test a level, you tend to break it. So I'm more excited about the break that comes above the 26,100 resistance zone, and from there the Nifty heading to 26,350, 26,500 levels. So yes, this is a good near-term momentum that the market is witnessing. As long as the 20-day moving average of 25,750 is intact, I would stay long on the Nifty. Bank Nifty, that's the real star of the show, isn't it? 7 sessions of gains consecutive. Today, if it ends positive, then 8. So a stellar run. But this is after this kind of a move, you are seeing some negative RSI divergences on the hourly charts, PCR close to 1.2. This is only suggesting that some profit booking, perhaps par for the course. But even then, I would be a buyer on Bank Nifty if a dip comes about. From here on, the risk-reward ratio may not be as favorable. The reason being, for this current rally, we had discussed 2 targets on the channel for Bank Nifty, which were 58,800 and 59,500. Obviously, the first one's been hit. It's sustaining above that. But for a target of 59,500 from here on, the risk-reward ratio not as favorable. So if you do get a dip, go long on the Bank Nifty, definitely stronger of the 2 indices.
Okay. Kush, what about your picks for the day? Is it buy calls, or are you going one long and one short?
Hi, Mahima. With all the enthusiasm, no short calls today. I'm going both longs. Ashapura Mindcam, that's one stock that has actually had a very good run in the last few sessions. 50-day moving average respected, and the stock's rebounded from there, not just in the last month and a half, even historically, that's been a support zone from where the stock has moved up. 3 sessions ago, you saw a massive volume surge, and then the price action is also seeing a follow through. So on Ashapura Mindchem, for a positional setup, targets 727, 745, stop loss at 693. The other one starting to make very interesting moves is Zaggle Prepaid. The risk reward ratio from a positional standpoint is very attractive. However, from a near term as well, you've got the golden crossover of the 20 and the 50-day moving average. Stock finally surpassed the 200-day moving average 4 sessions ago and holding above that. Momentum indicators also suggesting a northward move. So 411, 422 are your near-term targets. 390 is where you keep that stop loss.
Well, that's pretty interesting on that Zaggle and Ashapura Mindcap. Of course, during the show, we will be giving you some bites also of the management which spoke with us at NDTV Profit. But moving on, to our stock of the day segment, and in focus is 5 Paise Capital. We have spoken a lot about Groww, but there are other broking companies also in the listed space and a very strong up move coming in 5 Paise Capital. Let's look at the volume numbers. They jumped up almost 13% in the day trade. That's the intraday high coming in, but the trading volumes 150 times. It's 20-day average, and that's a significant up move coming in. Now, what could be the potential reason for this? Is this a re-rating in the valuation for the peer Groww? That is something which is, of course, questionable also. Let's looking at the numbers here. Not much happening here. SEBI related FNO announcement which had come in, overall the volumes had come down in the space. So nothing much happening in the Q2 numbers, but of course a significant pop in the day's trade. Revenue mix, largely it's 45% from broking, and that is where the hit has taken for the entire industry. But today the story is different. Overall financial performance, the broking revenue, and even the average client funding book, that has been on a divergent numbers coming in. Business metrics, total client acquisitions, however, were on the positive side, and the total order executed were on the lower side. Average daily turnover, that's basically a second order effect of the markets as well, which they had got. And operational highlights were largely, we could say, in line, but slight on an improvement. But today's spike in the stock which we have seen in 5 Paise Capital, whether it's a valuation catch up or it's a significant up move coming in since other players are not moving in trade, that is something to be of a question. But yes, today it is the stock of the day as it has jumped more than 10% in the day's trade.
All right, Sharad, thank you so much for getting us those details. And in fact, the kind of moves that we've seen on the counter is indeed significant. Aditya, I'll come to you on this one. Sharad mentioned that possibly it's the valuation catch-up that's happening. We've seen the kind of way the Groww has seen an uptick in terms of where since its listing, and there's no going back till now, at least till date to say the least. But what's your view like with regards to all of these counters? You have Groww, you have 5 Paisa, you have Angel One, Motilal Oswal. Any of these counters that you like specifically? And for Groww also, do you think that from here on, because valuations are more expensive, what should be the next course of action for investors? Should they book profits?
Good afternoon. We've seen what is happening in Groww. Exactly the same thing happened in NSDL. After listing, there's a listing pop, and that listing pop takes the stock to an unsustainable valuation. So from my perspective, from here on, I think there could be some time correction, as we've seen with Bazaar Housing Finance or we've seen with HDB Financial, where stock lists at a very expensive valuation and then takes a time correction. So from my perspective, they will undertake a time correction, first point. Second point, the entire capital market theme, be it the brokers or be it the stock exchanges, most of them seem to be really very expensive. From my perspective, I would tend to avoid most of these stocks. Mutual funds is something where we have investments. We continue to favor the mutual fund side of the book in order to get capital market exposure. So for now, lenders is the place to be in the financials, together with some mutual fund investments. But brokers are a complete avoid, given Groww's valuation is now at 1 lakh crore. It is extremely expensive at this stage.
Sure, more steam left for 5 Paisa on the charts?
5 Paisa could give a move, but I think you've had a good run in the last two sessions. Now it's coming up near the resistance levels of about 350, 355 zone, 200-day moving average also placed at 370. So I would be a little circumspect, honestly, if you ask me. The stock's not had a good run in the past 6 months or so. I prefer Angel One over 5 Paisa. So if someone does want to play this theme, Angel One looks to be on a more strong footing compared to 5 Paisa. So that would be my pick.
Interesting on that. And speaking of Groww, it's keeping on growing in every show. We have been mentioning about it, but there's no stop to it. 1 lakh crore was yesterday's news. Today, I think the news is 1.1 plus. Now, will this continue going ahead? I did a little bit of valuation check also. It's almost double. You can see price to earnings and price to sales. How do you think this Groww will pan out now going ahead? There should be some stop. So many Ws are being added.
Yeah, I mean, we'll have to wait and watch out for whether there's actually some profit booking coming in or not, because I think the way subscription numbers were, a lot of HNIs, a lot of retail investors would want to get into the counter, and that's exactly what's been happening, right? They have been buying. There has been mutual fund buying as well, which is coming in, and probably that's causing the rally. And now we'll have to see if somebody who's kind of hit the target that they wanted to and would want to cash out from here on.
Profit bookings, people who missed out, there might be regret, but some people who have cashed in after listing also, maybe profit booking can come in, but institutions are also having that FOMO where they're keeping on adding long positions as well, which we had discussed. So Groww is also pretty interesting here. It's up almost 10%, so nearly doubled from the current levels, and we can see how the peer analysis has come out. And let's pull up the valuations chart where we compare that with the listed players, price to earnings and price to sales. Look at that. That's the valuation gap happening. But apart from this, let's move on to PNB Housing Finance. We have been talking about it, and stock was showing good strength in today's volatile market. It's still up 1%. Big brokerages are turning upbeat on PNB Housing after a surprise credit upgrade. Both Morgan Stanley and UBS say the move to AAA materially improves company's growth and profitability outlook. Let's go across to Anushi for detailed brokerage take. Anushi, what are you gathering from these reports?
Sharad, so on the basis of this rating upgrade that we are looking at, wherein India Ratings upgraded its long-term rating to AAA, both of these brokerage notes are essentially highlighting that how the confidence is increasing for this particular counter. While Morgan Stanley, first of all, has maintained an overweight rating with a target price of 1,170. They're saying that post this rating upgrade, it was something which was not what the street was expecting. They see this as a positive for growth as well as profitability path for the business going forward, and could also improve their availability in terms of where the cost of borrowing lies, thereby benefiting their loan spreads ratio also that we are seeing. This rating upgrade could also lead to stronger execution in the second quarter, in the second half of this financial year, which should give more investor confidence as well. Now coming to what UBS is saying, UBS also maintains a buy, and this is with a target price of 1,200 that we are looking at. NCD and bank's loan rating has been raised to AAA from AA plus is what we are seeing. Overall sentiment, if we see, that remains on the positive side. With these upgrades, other agencies could also lower their COF, that's cost of funding, with potential for about gradual 20 to 30 basis points of a decline is what we are looking at. Apart from that, the lifting of restrictions by RBI on this overlap business by parent should be a key driver going forward. So this is the overall take that we have for this particular counter for you.
Right, Anushi, thank you so much for getting us those details on PNB Housing. Aditya, what's the view like with regards to where PNB Housing stands?
So a lot of ownership changes happened on PNB Housing for a long period of time. So this rating upgrade is good for PNB Housing. However, I will tend to closely watch what the future course of action already is, and then comment. PNB Housing also has lost a lot of its management personnel in the last 6 to 12 months. So I will tend to wait and watch on this.
And Kush, what about PNB Housing on the charts?
So, I kind of partly agree with Aditya here. The reason being that, while the stocks actually rebounded very smartly from those 750 levels that it fell to very drastically, this has been a gradual rise. So the medium-term outlook does kind of look positive. But on the other hand, if you see the retracement of the rally from the fall, the 50% retracement comes at the 940 mark, which has proved to be a resistance in the last 4 weeks. Last couple of weeks, the volumes on the upside are starting to thin down. So maybe if you had a position, you could continue to hold. But will I build fresh positions on this? Not at the current juncture. So continue to hold, but no fresh positions recommended.
Continue to hold, but no fresh positions on PNB Housing with regards to where charts are concerned. But key market voices have made a strong push for tax reforms in their meetings with the finance minister ahead of the budget. From recalibrating security transaction tax between cash and derivatives to easing the burden of dividend and buyback taxes, participants have outlined measures they believe can deepen India's equity culture and boost household participation in markets. Let's go across to Shimi for the details of what was proposed.
Yeah, that's right. Capital Market concluded its pre-budget consultation with Finance Minister, where prominent names like Motilal Oswal, Saurabh Mukherjee, Sandeep Sikka, people from BSc, MCX, and even in mutual fund industry attended that meeting. And what we have been given to understand that several suggestions has been pitched during the meeting, which includes lowering the securities transaction tax on cash compared to derivative. Now, remember, STT has been in discussion after a PIL have been filed raising an issue of double taxation. So that is something quite a noteworthy, and we will see how that will pan out. The second discussion were around how to sort of increase the household savings and channelizing those savings into equities, increasing the exposure to 8% from current 5% is also something which has been discussed. Other than that, the buyback tax, what market participant pitched that it should be on the profit portion and not on the total buyback amount. Apart from that, the discussion also being held on aligning the short-term dividend with the NRI rate. Otherwise, the domestic investor has to end up paying higher tax rate of around 42% is what the concern being raised. So in all, the discussion went well, and we need to see how these discussion will be taken up by the Finance Ministry. And clearly, this entire week has been, going to be very busy for Finance Minister as she's meeting people and representatives across the sector. And in fact, the final pre-budget consultation will be on October 28th with social sector and internal officers. And perhaps this will be a crucial meeting, crucial pre-budget consultation, because that will set the tone and the preparation for the government for the upcoming budget. And this is also important, as you remember that a meeting with economists where the economists suggested the need of a growth-led budget, and that also kind of hinted towards that government should focus more on the fiscal prudence. And this is also coming at a time when 16th Finance Commission submitted its report recently on fiscal glide path of government for next 5 years. So very interesting to watch out how these suggestions will be taken up by the government and whether it will be reflected in the upcoming budget or not.
Well, that's pretty interesting on that. And just one short query from Aditya. What would be the key request coming from the community of the investor community when it comes to requesting the government, the finance ministry, in case if you have any budget expectations? It's too early, but there must be something which the street wants.
Actually, as the recommendations have been given, simplification of the tax structure with respect to capital markets, the STT and now the long-term capital gains tax does invoke double taxation. So I think the relaxation there and making sure that no additional long-term capital gains tax hike. Last year there was a hike in long-term capital gains tax. A simplification of the entire structure is something that the entire financial community will look for, and moreover from the budget, government's investment into the economy, the infrastructure sector, the defense sector, the railway sector, all of that will be keenly watched. Government is spending massively across on all of these sectors, and that continued investment is something that will be really positive for the market. And finally, divestment of major assets such as BPCL, which have been in the limbo for a long period of time. Any commentary there would be positive for those stocks.
Pretty interesting on that. But let's take a quick break. Stay tuned to NDTV Profit. Up next, we'll bring you all the chatter behind the dealing rooms in our segment Heard on the Street.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can. But I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
Welcome back to India Market Close. You are watching NDTV Profit and look at the recovery in the market. Of course, this has been a slow recovery. It's not a very volatile session, but look at it. It's near that 25,980 levels. And if you see from the day's low, it's 100 plus points of recovery happening. Mid cap and small cap indices, they are also trying, but not so much strength as what Nifty was showing. See, a minor recovery attempt coming from broader indices as well. Nothing much from small cap, to be honest. Nifty Bank better placed as well. But decoding Nifty's recovery, I know, Mahima, the bullish momentum is coming from the options data. But overall, look at the primary markets. They have also done well, right? That sentiment is also maintained.
Absolutely, that sentiment is also maintained. Plus, I mean, expiry also probably playing its part,
Exactly.
playing catch up somewhere.
Anything can happen in the last 20 or 30 odd minutes.
Exactly, and I think Kush will be, better off answering, that for us. Kush, slight recovery, of course, not slight, quite a significant one. But do you think it's just expiry playing its part?
In fact, I think, the muted performance that you're seeing in the sense that, the negative tick that you're seeing on the Nifty, that is more of the expiry play, where if you see since morning, you've had a massive congestion around the 26,000 call options for the, weekly expiry today. So I think that was bound to happen. That has only multiplied, as the day progressed. So I think the expiry effect is the Nifty being in red right now. The recovery that we saw from the lower levels is the enthusiasm that the street has, with all the buzz around the deal, at least the first tranche of it, being very close, and the recent momentum that we've seen. Also, the FII buying, even if it has been in, in a very small, insignificant amount, but at least they are not selling. So those things are in fact adding a lot of cheer to the market. And maybe not today, the small and the mid cap indices are in the red. But otherwise, you've seen a good, a good contribution over the last couple of sessions from at least the mid-cap space, small cap space also catching up. So I think on the whole, the near-term trajectory looks positive for the Nifty. I wouldn't be surprised if we touch and scale new highs.
Okay, all right. So that's with regards to where the benchmarks are concerned. But some of the stocks that are buzzing in trade includes counters like WPL, Bansal Wire, as well as something like a Piramal Finance. And Jasmeet joins us with more details as to why they are buzzing in trade today. Jasmeet?
Well, Red, thank you for that. Starting with Bansal Wires, well, the company gets a reduced GST penalty from rupees 45 crore to rupees 69 odd lakhs. Company to further file this under the GST plea and get further clarification on the same. If you look at my second counter, it's WPIL. Well, the company gets an order from the JV worth rupees 426 odd crore, and the project is based out in South Africa. And this particular project is with regards to electromagnetical as well as the instrumental work which the company is supposed to do. If you look at my last counter, it's a very interesting counter, by the way. It's called Paradeep Finance. While the company, since the relisting, is nearly up 25%, and today also the stock is up nearly 5%. While the company got relisted after the merger with the PEL, where the PEL shareholders got every one stock of the Paradeep Finance. Now, in terms of the recent news, company also approved the raising of an NCD worth rupees 600 odd crores for the private placement basement. Also, the company has a positive outlook going forward. That's why the buzz in the stock.
Okay, Jasmeet, thank you so much for getting us those details. Kush, any of these counters looking attractive on the charts right now?
Yeah, one that stands out very clearly for me is Bansal Wire, and this is more of a recovery candidate. A few sessions ago, you've had a very clear positive RSI divergence that is starting to now show up. A few sessions ago, again, the volume had perked up. Today, the volumes are through the roof, almost 3.5, 4 times of the 20-day moving average. So yes, I think this is a good recovery candidate. If someone wants to get into this positionally, keep a tight stop loss at the 305 mark. And on the upside, I think you're looking at targets of 350 as the first one. And once that is taken out, perhaps 370 as well. So Bansal Wires as a recovery candidate is starting to shape up well.
Okay, all right. So that's the view with regards to where Bansal Wire stands, up 4% almost in trade. With regards to where the fundamentals are concerned, Aditya, do we still have him? Yes, Aditya. Any view on these counters, something like a Bansal Wire which is up 4%? Do you think fundamentally also it's looking attractive to you? Because technically it is.
So I don't track the stocks, will not be able to comment on.
Okay, no worries. If not Bansal Wire, maybe the entire space, if at all you've tracked that. Anything in that space that you're liking, maybe?
So the FMEG space looks interesting to me. You can look at Polycab, you can look at KEI. Those companies are starting to do well and will continue to do well. However, valuations there are a little bit expensive. Of course, Polycab is coming out of some corporate governance issues as well. So from my perspective, Polycab, KEI are two stocks that are interesting, and one must track those stocks for an addition on any correction.
Well, that's a pretty interesting take on that. But let's move on to our special segment, Bulls versus Bear. And the stock in focus is Gains Tech. Of course, the stock saw a significant downtick, selling pressure in the initial hour of trade. And that was because of share lock-in coming. That's roughly 20% equity. And you see today also the stock is near its day's low level. But let's look at the Bulls and Bears case. Where does this stock stand? Is this very highly overvalued? What happens next? DIs have actually increased their stake from 17 to 24% in just one sequential quarter. That's pretty much interesting. And of course, they had a major fundraise also. That's why today the stock is down because of the share lock-in coming out. Also, let's look at the Q2 numbers, how it's actually panning out. The revenue had actually, you could say there was a miss on the estimates, but there was a beat on the margins as well as on the PAT. Order book and revenue guidance, that still remains strong. They have not changed their guidance going ahead, and because of that, there is a kind of a cheer coming in the street. Also, there's a considerable increase coming in the receivable days, and that is not good for a company, as their working capital cycle, that gets impacted, and that is why I've kept it as a bear case. At overall net, the main functions, order book and revenue guidance still remain intact. Let's see last moment, the highest target price, where does it we have? ICICI Direct, that's roughly having 8,900 rupees of buy call coming in for Keynes. And on the other side, for the bear case, there is a hold call, but the lowest target price below the current market price currently is 55.17 given by Systematics Group. So this is the entire bulls and bears for Keynes Tech.
All right. Thanks so much, Sharad, for that. An interesting update on Keynes Tech. The stock was under pressure. Let's pull up the chart. It is, in fact, pretty much at the low point of the day. Yes, it is about 5.3% lower. Chakri Lokpriya of LGT Wealth joining us on this side of the show as well. Chakri, very good afternoon to you. Before I come to you on some of the buzzing stocks today, though, let me go across to Kush to find out what he has to say about Keynes Tech. Kush, any opportunities that you would see on the technicals for Keynes Tech?
Hey, hi Alex. No, I would wait up. This downfall has been going on since early October. Hasn't really stemmed. Mild recoveries here and there, but they've been sold into. If at all I have to see a silver lining in all of this, it's that the 200-day moving average is at 5,800. So some support might kick in, but the massive volumes on the drop today that you're seeing suggest that it could test and perhaps even slip below that. So I wouldn't be too adventurous. In fact, if someone's looking for something in this space, Dixon's on the way to recovery, and so's PG Electroplast. So maybe those, but not venture. Not be too adventurous on Keynes Tech, at least at the moment.
All right, Chakri. Now, before we get into individual counters that I want to ask you about, I want to ask you broadly about how you see the trends right now. Because on the global stage, there are certain concerns about overvaluation in certain pockets. And here we're specifically talking about tech and AI, and money has been flooding out of certain pockets. Bitcoin has been crashing. 6 weeks, you've seen a 30% drop. And so therefore, from that perspective, seemingly risk off. How do you see that affecting our markets? Because relatively speaking, we've been resilient. So from that perspective, would you say that opportunities arise, and where would you consider or advise people to deploy?
If you look at what's been happening in the last few weeks, the AI problem or the tech problem or the crypto problem is largely a Western developed markets issue of overvaluation in some pockets. Fortunately or unfortunately, India does not have significant AI plays and therefore is not really impacted by that. Indian IT services companies are a completely different animal. And the overall valuations of India are based on, if you look at the earnings growth of the companies, is probably high single digits, 7 to 9%. So against that backdrop, the market valuation of roughly about 20-21 times has not really moved in the last one quarter. That's because, there is no incremental positive news taking the earnings further up, and therefore the market's up. That hasn't happened. And therefore, I think we'll just tread water until we hear some positive news.
Pretty interesting on that. But Alex, flexible office spaces. Like suppose we have heard about office spaces. But what is flexible office space? It's customization. And the company in focus is WeWork.
Have you worked in a co-working space?
Well, not yet.
Look at the way that he's laughing, guys. Anyway, the point is, I have. It's quite fun, actually. You meet a lot of people.
Yes, and I think the customization also kicks in, right? And I think different startups also are there, and a lot of startups are getting listed also.
You're laughing too heartily about this. You've just joined here. You're not going anywhere. Okay, on that point. But the interesting note, right? WeWork. It's buzzing because of a brokerage note that came through. Initiation of coverage, was it? It's up about 2.9% off the high point of the day, Sharad.
Yes, Alex, when it started, it was our brokerage call, also top brokerage call at 9.5. It spiked at 6%. From there is a bit of correction coming in, but look at the report. Initiating a buy, and a target price is 790. Current levels is around 630 odd. Now, a 17% CAGR growth, which the company is having overall business, and it's better than the market. That means organized way, you get the market share gains coming in. There's a room for further penetration if you look at especially the tier 2 cities. Overall, the company is having a premium positioning. The average revenue per user and the margins, that's also expected to go up. And overall, the company still remains funded for its expansion going ahead. Chakri, I wanted your views, especially on this office space which has come up, the stocks such as Office, SmartWorks, EFC, Contour, all these stocks have actually come up, and in the last 2 years, this entire space has come. You can quantify it, growth is good, GCC explosion is happening in India. How do you look at this space? And is there any good company which you could pick up from here?
You rightly said, because in terms of, the startups, who have a high mortality rate and as well as a high moving from A to B to C locations depending on if they survive and grow and add staff. So for them to plan flexible working space is the easiest way to do. That space in India is growing at 2 times, 2.5 times of the regular commercial space because of the ease of use, but the margins are higher because of that flexibility that it offers to upsize and downsize spaces. Now, in that space, GCCs, on the other hand, they don't usually work out of the WeWork type of environment. They have their own permanent setups, kind of a thing. But some large companies are beginning to take because of the flexibility this offers. Valuation is high for WeWork, and therefore wouldn't. But this, as a space, it's a growing space.
Okay, we've just talked about a few of the buzzing stocks. One interesting stock that is moving up quite considerably. I wonder what the trigger is. Perhaps you can get Kush to talk about it a little bit. Bombay Burma. It's up as much as 10%. It's not something we speak about very often. There are those fundamental advisors that actually look at this favorably. Of course, this is a PSE. Kush, what's the view on the charts here?
So, Alex, the stock has a tendency of very sharp moves every now and then. Up until a month ago or so, and that sharp move was on the downside. So it's actually fallen from grace up from the 2100 odd levels to about 1800. You're seeing this uptick. In fact, if you just dial the clock back not too far back, just about a month, similar volume, similar price action. It did extend that run for a couple of sessions thereafter till, as I said, the 2100 mark, but then sort of gave away. So I wouldn't really be excited about getting into this because of the move that it's seeing today. On the contrary, if I were holding this stock from lower levels or maybe somewhere close to these prices, I would look at an exit. As I said, the stock's no stranger to volatility.
Stranger to volatility, up 10%, good point to exit if you've got it. And now, pull up GMR Airports, because this is another stock from the broader markets that is buzzing today. And of course, you had October air traffic data that came through, Sharad. And it was a reasonable number from a few pockets. The Mopa Goa seems to be seeing a lot of traffic, and understandably so, because this is October data and you had festive season come through and holiday season, you could say as well, with schools shut and the opportunity to travel. So 28% upside in traffic on a year-on-year basis from Mopa, which is the new Goa airport. I wonder
and one more important linkage is there, and I have been to that airport.
Yeah?
So the first flights have started coming in, and from Mumbai to that new Mopa airport, it'll be coming from the Navi Mumbai International Airport
and
from 25th.
25th of
December.
Yes. Christmas Day is when it
Yes.
starts. Okay, so it's really interesting. All right, so GMR Airports buzzing on the back of that traffic data, and of course Adani Enterprises in focus on account of the start of operations at the Navi Mumbai International Airport. Chakri, I'll come to you on this one. There's a lot of untapped potential for these airport businesses, and Adani Airport Holdings, of course, one of the entities that has been incubated by Adani Enterprises. There's a lot that could happen on the city side development, etc. 700 plus acres of land that they will develop over the course of the next several years. Would you buy into any one of these, either Adani Enterprises from the perspective of this one business and the others that it has, or GMR Airports?
Adani Enterprises is really well positioned because it's a sum of parts story. There's so many businesses that it's incubating. This airport is a good example, and many of the business. And so the whole, if you add up the sum of the parts, the upside to the business is a very significant percentage, probably 40-50% at least. And again, now is the environment, where all the various infrastructure related companies are beginning to kind of come out of, generally for the economy, coming out of its slowdown. So I guess in this point in the cycle, Adani Enterprises.
Absolutely. All right. So watch out for that. GMR Airports, of course, up as much as 7%. But an index that is done particularly well last week. It's not doing incredibly well this week. Let's pull up the Nifty IT index and see what it's doing right now. It's down about 0.9%. And this is on the back of its near 4% rise last week. So every time that happens, you start talking about why potentially that is taking place. Is there interest because of an expectation that the earnings could potentially have bottomed out, deal wins could be looking better heading into the second half of the year? Let's talk about some of those aspects. We've got Jasmeet joining in to lay the context. Jasmeet, what are the factors that has led to this recent up move?
Well, right, thank you for that. As rightly said, the sector overall segment saw a move of roughly 4 to 5% in the previous week, while the sector is still down by 17 to 18% on Y20 basis. Now, what led to this move would be the softer stance on H1B visa, which saw the overall movement. On the other hand, we also saw the valuation slip with the technical average, leading in a lot of investors' interest for the Nifty IT. On the other hand, we also saw the reduced US shutdown risk, which again hinted a positive sentiment among the investors. Lastly, the weak rupee, which is acting as a tailwind in the overall Nifty IT we see. While now what has changed in the ground so far would be the results. We say that most of the earnings have met the estimates, and some of them like TCS have also beat the estimates as of the Q2. And the company has also have increased the guidance going forward for Infosys and HCL Tech as we see. On the other hand, the AI investment is now the center for a lot of Nifty IT, where they're focusing to invest in AI and gain the AI leverage when it comes to cost cutting as well as winning more deals. While lastly, if you look at the overall hiring position of the company, it has tightened and company has focused more near term, saving up the cost again. Now, if you look at what will be the outlook going forward is, we've got to wait and watch of how the overall trend goes forward in the Q3 and Q4, given Q3 is slightly weaker for the company, but as per the guidance, S2 seems stronger for the overall IT pack. While lastly, it will be again to watch out that given the IT valuations are below 5-year average as of currently given for top IT companies, it will be interesting to watch out how the re-rating works going forward and how the Q3 acts up for the company.
All right. Before we get into the fundamentals, though, let's talk about today's crack. And Kush, the question is more money being taken off the table because of last week's move, and how do you play this?
Yes, I think that's been the story for the IT sector as a whole, right? And a couple of times we've already discussed how the entire space just shows some spark and then fizzles out almost immediately, right? I think this is a beneficiary of the sector rotation that the FII money as and when it comes in, because at a point in time you get exhausted with the banking stocks and the banking moves, and hence some sector rotation happens to the IT pack. That's what happened last week. Now you're seeing the banking pack participate again, and hence some profit booking on the IT stocks. At the index level, 36,300 on the upside and 34,300 on the downside. That's been the broad range. It spent nearly 3.5-4 months in this range. I don't see a breakout coming out immediately, largely because the big boys aren't participating. Among the big names, only the only stock that actually appears somewhat stable or could have an uptrend is HCL Tech. So if you're looking for a large cap IT name, then HCL Tech is your stock to go with. I prefer the mid cap space more. So Persistent and Coforge between the within the mid cap space are the ones to look at. So not a very convincing move on the entire pack, but selectively, yes, these stocks can be looked into.
Okay, hi Kosh, hi Chakri. A bit of a dull afternoon with only a few buzzers there really making a mark. And I don't think IT is one of them for sure. Chakri, I wonder if you're looking at the primary markets for more action than in the secondary markets right now, with some stellar listings in this today and in last week.
Yes, indeed, but with all the run-ups, the valuations have also moved up. So clearly now that there is money to be made, and amongst now the IT, for instance, is a down and out sector. It's still underperforming. So I think there is, as and when this whole world, not whole world, India and the US become friends, I think that's where the catalyst comes.
Okay, so okay, are you tempted by any of the recent listings, a Physicswala or a Groww? I don't know if you got any allotment, were you interested, but would you come in now looking at the kind of pop?
I think Groww clearly is, a far more sustainable story because, the valuations at the time of listing were relatively better off. Now the stock has run up quite a decent bit. But I think now it's time. The sector is expensive the stock is expensive. On the other hand, physics wala is still a expansion growth in tutoring space. I think that is a very vulnerable space depending upon how AI kinds of penetrates into that sector and takes away market share.
In fact, Sharad, this is something that you spoke about in details while we're trying to look at what has really worked for a Groww versus its peers, and a lot of chatter online today. I think one of the top trending stories, at least for financial markets, is whether valuations are making any sense, and a comparison of Groww to an Angel One, to a DAM, to some of the other listed capital market players.
Yeah, the valuations is something, the price to earning and price to sales. Both I got the numbers for FY27, assuming 50% growth coming in revenue.
Why are you assuming 50% growth? And we should actually show some of
that's
Why are you
assuming because
growth?
of the last 2 to 3 odd years, they have been giving a strong strength of growth. Now, if they are getting more market share
on the top line side,
so that's why I have taken price to sales ratio also. But Tamanna, the idea is the valuation numbers, they are very on the higher side if we are comparing. Now, it's a pure play company, discount broker, so you cannot compare entirely when it comes to Angel or Motilal Oswal.
Why? Because, so you're saying because it's one of a kind and because they're growing much faster than an Angel One, but Angel One is in the top 4 odd, 3 odd, so why shouldn't it be compared?
It's a pure play. Pure play discount. And Angel One still has some legacy, traditional brokerage, and now they're going into NBFCs and other businesses as well. So that's why kind of a core business is Groww. But is there a valuation catch-up?
You know, we were talking today about this point of whether there is a scarcity premium which is attached to how IPOs do. And if you look at both Groww and Physics Wala, the lack of a clear peer to compare it to. Like you're saying, Groww doesn't have a clear comparison, and nor does Physics Wala. If I look at a
same story goes for Physics Wala.
Exactly. So
they themselves mentioned that they are the only mid-cap player to actually be in the edtech. There are some small-cap players, but you cannot have an apple-to-apple, comparison between them.
That mid-cap has happened today. I mean, we'll play out that interview with Pratik Maheshwari, where he was like, when we were looking at the listing, we were wondering कि हमारी company है किसी और की. So we should play that bit out. In fact, let's listen in to what he said when he came into the NDTV Profit studios, fresh off that success at the National Stock Exchange, and talked about his experience. The man of the moment, and I would say the team of the moment, is Physics Wala. The IPO there were some murmurs when the subscription was not that exciting. You know, nowadays if there's a muted oversubscription, people think that the listing pop will not be there. But Pratik Maheshwari, thank you for coming in to the NDTV Profit Studios on your big day, and it is an exciting one. ऐसा listing होगा आपने सोचा था?
नहीं, बिल्कुल नहीं सोचा था।
अच्छा, पहले तो मुबारक आपको।
ना हमने सोचा था, ना एम्प्लॉइज ने सोचा था, और जैसे ही वो नंबर खुला, so everyone was like कि यार सही है या हम हमारा ही स्टॉक देख रहे हैं, किसी और का देख रहे हैं?
नहीं, तो the reason is कि सब्सक्रिप्शन के समय इतना इंटरेस्ट नहीं था, आप लोग थोड़े अंडर द रेडार थे।
तो subscription I think is not the right metric nowadays. What is more important is कि market ने TAM बहुत अच्छा समझा. हमारे anchor investors were very solid. और ओवरऑल जो हमने ऑनलाइन बिजनेस बनाया है, दैट इज़ वेरी प्रॉफिटेबल, और ऑफलाइन इज ऑल्सो ऑन अ पाथ टू प्रॉफिटेबिलिटी. ये चीज़ मार्केट को काफ़ी अच्छे से समझ में आई, एंड दैट मैसेज कन्वेड वेल. सो आई थिंक उसी का ही आउटकम है. बट अ लॉट ऑफ कंपनीज डिड अमेजिंग ऑन अ लिस्टिंग डे. That's just a one-day prize and a number, and so that will fade away. We have to perform in every quarter, and every financial result has to be at par. We have to beat our guidance, so that is more important.
So then let me ask you the question which will now maybe become more important than TAM. TAM is of course there, but TAM is, when you're raising money privately.
I can guess this question. This question is about profitability, right?
अरे देखिए आप पूरे नंबर पे पास हो रहे हैं आज. Okay, test me. What is the path to profitability? What is the timeline?
So less than 12 months is what we are guiding to the market.
EBITDA, positive.
No, PAT
positive.
So EBITDA already we are there. EBITDA positive, we are already there. And our EBITDA has improved almost 4 times in just 2 years. But PAT level profitability is not a challenge. That will come in less than 12 months.
Okay. And how will that happen? What is the path to that profitability?
So, see, we are a very young company, less than 5 year almost 5-year-old company at this point of time. There are a lot of leverages in terms of marketing cost. There's a lot of leverages in terms of tech cost. And overall, student, enrollments will exponentially increase from here. So we need not to increase the prices of our products, to achieve this growth. At the same time, if you see the percentage of the people cost as a percentage of total revenue is sharply declining in past 2 years.
Why is that?
A lot of leverages are coming because of the technology automation which we have done. AI is helping us a lot to make us even more efficient from here. AI is solving doubts for the students almost as good as human. Along with that, for a growth stage company, the entire focus was to capture the market share maximum. But since we are now a public listed company, our responsibility becomes equally important कि हम bottom line पे भी उसी focus के साथ में काम करें.
नहीं, ये AI वाला बताइए. What is the total number of employees? And I think I'd asked you this question off record. It's quite a large number, but I'd like you to say it. And do you see that coming down because of technology and AI tools?
So, अभी total number of employees 18,000 है company में, 18,000 people in the company, because we have opened a lot of offline learning centers, more than 300 offline learning centers at this point of time. And you have to deploy people there to run these centers. AI, will not, because of AI, there will not be, iteration. But for my future growth, I need not to hire extra employees.
Okay, all right. So, what a story. Up over 30% on the debut on Dalal Street. Physics wala defying gravity. Let's talk about what Soumit Sarkar is hearing on the street though. In our regular segment, Heard on the Street. Soumit Sarkar, is there any word on the recently listed companies, the fact that they're testing new levels practically every day, or is there anything else that is buzzing that is on your list today?
Well, nothing much on physics wala is what I've picked up, but then when it comes to Groww, I was just going through the delivery volume data, and what I picked up here is that around 52 crore shares have seen delivery volume so far since listing, which is way more than what the actual free float is, I would say. Free float is around 44 crores. So most likely the reason why the shares are going up is largely because people are taking trading calls at this moment is what seems like. Apart from that, multiple other stocks that remain in dealer focus. Firstly, it's ICICI Lombard. There are sell flows on FI desk, and dealers are indicating that there is competitive pressure, slow growth, and a price hike which was expected in the motor segment will most likely not happen, is what dealers have indicated, and that's the reason there are sell flows in ICICI Lombard. For Biocon, there are sell flows on DI desk. Debt continues to be an issue, is what dealers have highlighted for Biocon, and company might launch a QIP yet again to address this issue, which is taken negatively, which could be taken negatively by the street, is what dealers have indicated when it comes to Biocon. For Bajaj Auto, multiple dealing rooms have suggested buy calls to their clients based on technical charts, so keep an eye out for Bajaj Auto in trade. For Keynes Tech, there are sell flows as lock-in has opened for a large chunk of equity, but so far dealers are indicating that there is no block deal that is expected to happen when it comes to Keynes Tech in trade so far. For Laurus Lab, there is a buzz of a potential block deal that could happen in this counter, so keep an eye out for Laurus Labs as well. And for Sammaan Capital, there are buy flows that we are seeing at lower levels in trade. Dealers are indicating that there is a possibility that the open offer price for Sammaan Capital could be revised upwards. The open offer price when the acquisition was announced by IHC was close to around 139. It was at a discount at that point of time. At this point of time, it is continues to remain at a discount because the share price is close to 182 and the open offer price is 139. So dealers are indicating that there is a possibility that this open offer price might be revised upwards. So keep an eye out for Sammaan Capital as well.
All right, so quite a few stories over there that we're discussing, and this is a segment that you do not want to miss. Soumit Sarkar brings you what's behind the dealing room. So Groww we were talking about, and I'm just wondering on capital markets right now, Kush, because that's what you can track on the technicals, not really Groww, because there is enough data and whatever is there is quite stupendous. But capital market plays, what are you liking on the charts?
Even if it's not like for like, I think Angel One in this space has actually seen a very smart recovery. Volumes also up 20-day and the 200-day moving average golden crossover. So it does check a few boxes, at least from a technical standpoint. So I would prefer, an Angel One, especially if it comes to a near-term momentum kind of a trade. Also, within the broad capital market theme, I think BSE is also showing very interesting moves where the 200-day moving average support had kicked in. The stocks actually moved up. And in the last few sessions, at least 2 out of the last 7 sessions have seen massive volume surge. So I think BSE also from a positional standpoint makes a good buy from, from the current levels. So BSE and Angel One from the capital market space look interestingly poised.
Interesting on that. BSE is the stock is up also, and Angel One on the other hand is near its day's low. So divergence coming in, but looking at small cap stocks, they are also buzzing in trade, and these stocks include Fairchem Organics and WPIL. Anushi joins us with all the details. Anushi, what are you picking up from the small cap space?
Right, Sharad, so a lot of activity happening in the small cap space as well. We have quite a list of gainers that we listed out on the show, which included the likes of something like a Om Freight Forwarders, as well as something like just the other stocks as well. But coming specifically to Fairchem Organics, here if we look at the volumes, that's over 90 times compared to its 20-day average. Here they have recorded the biggest intraday gain since the March 2025 levels that we are looking at. And this is with higher trading volumes being in account for this one. Now, why is it buzzing? The key highlight is it's considering a buyback in its November 20 meeting, and this will be the first ever buyback for the company that they've announced so far since its listing in 2020. Just a little bit about the company. It's engaged in the manufacturing of specialty chemicals like diamond acid as well as linoleic acid as well. And these chemicals are used in industries like paint, printing ink, etc. If we talk about the outlook for this particular counter, they are projecting a revenue guidance of about 979 crore in FY26 versus 538 crore in FY25. They've withdrawn their 2025 guidance or 2024 guidance of financials due to change in market conditions that's taking place. So that's Fairchem Organics and Focus. Coming to WPIL now this is in focus on the back of an order win, through which the volumes were up over 30 times compared to its 20-day average. The stock also hit an intraday high of about 9%. This is in contrast to what's been happening with the stock in the last 1 month or even the last year-to-date period, if you take that into context. While in last month it had seen about a 9% of a downtick or so, year-to-date the stock has seen a sharp correction of over 44%. But today, it's the 426 crore of an order that it has received via its JV, for which the stock is in focus, and this order pertains to electromechanical as well as instrumentation work for projects in South Africa. The project execution period for this being around 48 months or so. If you take that order book in consideration, the order book stood at 4,100 crores, which taking this order in consideration is roughly about 10% of the overall order book size that we are looking at. Book-to-bill ratio also remains healthy at the levels of 2.3 times. Do note that the company earlier had issues regarding with Jal Jeevan Mission slowdown, which had impacted its revenue in this quarter as well. But it's the order book visibility that the street is giving its credit for, and hence we are looking at strong buzz and trade today.
All right, thanks Anushi for getting us those details. WPIL though is down quite considerably over the longer periods. If you pull up the year-to-date chart, you will see that. Let's do that and take a look at it. It's down as much as 44.5%. How should you look at this one as well as Fairchem? Let's go across to Kush and find out whether you should be excited about it on the charts at all. Particularly WPIL, seemingly Kush, this is something that has been battered. Does this mean that a bottom has been found?
Spot on, Alex. In fact, the same observation is true for Fairchem as well. If you pull the slightly longer charts, 15 months or so, you will find that both these stocks are in the same boat. The recovery that you're seeing today, both, in fact, very similar, are from extremely oversold territory. So these kind of rebounds, I wouldn't read too much into it. Despite the rebound, WPIL trades below the resistance of 410, 415 zone. Even Fairchem trades below that, 720, 725 zone. I wouldn't really be too excited until I see further moves, at least for, a couple more sessions, a very similar volume backed up moves. So, yes, there are, early signs, but as I said, they're more of rebounds from oversold territories. I wouldn't really be buying into them right now. Perhaps exit at slightly higher levels.
Okay, we'll take a very short break, but a bit of the pain in the markets deepening ever so slightly. Nifty IT worst performing, no surprises there. And that state continues. I wonder if there is opportunity in the bank Nifty to look at anything in the Nifty IT which is worth touching, what's buzzing in the broader markets. We're coming back with all of that and more after this very short break. Keep watching India Market Close.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of
consumer. The middle class families, the transportation cost of cement for the middle class families will substantially reduce by these reforms. These reforms basically, this is a combination of reform and innovation. The innovation part is, we have designed a new container, which is a tank container, in which bulk cement can be loaded in the factory itself. Then the bulk cement can be transported in this tank container without any pollution to the point where it is going to be consumed. In this way, basically cement gets transported at a lower cost, non-polluting method, and at the consumption point, cement can then either be filled in an RMC plant or a batching plant, or it can be bagged and then distributed. So this way the cost for middle class families will reduce.
Sir, in terms of the terminals that Railway will also partner with certain companies, talk to us about how these were artificially located first, and now given that the slabs have been abolished and there's a flat rate, how will that change?
So in the slab structure, it became very important whether you locate the terminal at the end of the slab or after the slab. That was an artificial way of locating terminals. By having a flat rate, terminal can now be located at any point depending upon the need, based on production or based on consumption.
Lastly, sir, already major reforms have been done for automobile transportation, roughly 30%, coal transport, all done through railways. What's the next commodity that you're looking at?
Our next target will be container transportation. We would like to simplify it in a very significant way. Over a period of time, Indian Railways has become world's second largest freight carrying railway by surpassing the US, basically North America, and now at 1.6 billion tons. The impact on country's logistics cost has also significantly happened because of the increase in rail share.
Thank you. Thank you so much, sir.
Okay, first an exclusive. Union Minister Ashwini Vaishnav speaking to NDTV Profits Rishabh Bhatnagar. What they've announced is actually very important. I want you to pull up Concor, pull up all of the cement stocks right now, because this is what they've done. They have changed the structure for transportation of bulk cement from plant to terminals by rail. And this is going to be done using special containers of Concor. It's also positive for cement companies because as of now, there is a very complicated structure. The existing rate structure is complicated with multiple rates for haulage of cement companies. Now charging is going to be done on actual tonnage. The flat rate of 90 paise per ton per kilometer is going to be charged. So that is what the minister is talking about in terms of logistics. You know, the whole logistics space actually is a very, very interesting one, and you're going to see more and more develop on this end.
It's interesting because I wonder how much of the transportation of cement currently takes place via rail, because you see a lot of transportation of cement via road, and whether or not this change in the treatment or pricing of cement transportation will affect that change in logistics as well. So watch out for some of these names. Concord, by the way, is up about 0.6%, and certainly something to track.
So the differentiation is that they are going to be transporting unbagged cement. So which is less polluting, etc., etc. And that is the facility that they're going to be setting up. So it's a new step. You're going to see some action going forward. Amit Goyal joining us this afternoon of Blue Oak Wealth. Sandeep Agarwal of Sovilio Investments joining us as well. Welcome to both of you, and thanks so much for your time to us here on NDTV Profit. Amit, hope you're having a good afternoon. What are the indices telling you?
Yeah, unfortunately, the indices are going nowhere as we have been prodding them to please go somewhere and on the upside.
That's why I asked, are you having a good afternoon? Because markets clearly are not.
See,
markets are sleepy.
Markets are not. I would rather, if the markets are going up, I'll be happy. My investors will be happy. Everybody is going to be happy. But that is not the case. We've been selling this. We've been seeing this consistent and persistent and painful sell-off at higher levels of 26,000. And that continues today as well. So, until and unless we give a clean breakout from 26,000 levels in Nifty and 59,000 levels in Bank Nifty, though Bank Nifty has given a very strong breakout, we need to see a sustained rally on the upside. It is only the financials and the banks which are holding to these gains. And broadly, if you look at the market, that kind of euphoria is not seen. So I suspect that until and unless we see a very clean breakout about 26,000 levels, I don't see any breakaway rally happening. Any dip towards 25,500 levels is definitely an opportunity to, as I keep maintaining, buy me some longs, which will help us in the sessions going forward.
With a quick question on the breadth right now, because and this has been visible in the recent past as well, underperformance in the small cap space. Today as well, you have the benchmark down about 1% or so and underperforming the Nifty 50 in the large cap and the mid cap space, right? Let's pull up while we're at it the advanced decline ratio, because that will give you a sense of the market breadth as we're speaking. What is this weakness at the broader end of the spectrum indicative of, Amit, at this point?
I believe there is a lot of distribution happening here. If you've noticed the other data points, including the advanced decline ratio for today, if you notice, there has been no broad-based buying in the market because the market has not really fallen off from a cliff, so to speak. We are still hovering close to our 52-week highs, give or take 5 to 10% from the 52-week highs for the broader indices. So there is not too much of a buying opportunity from a value perspective. If you notice the FII, DI data also, FIIs have not really come back in the market, barring a few spots of green. Until and unless that changes, either the market gives a precipitous fall and offers a lot of value for the investors, or FIIs feel that, okay, the results are good and there is some value going ahead and they start buying into the markets. I don't see any major move happening very soon.
Expectations coming in from Amit, and of course the markets also kind of falling from the recovery which they had shown in the last 15 to 20 odd minutes. But the stock of the day is 5 Paisa Capital. We have been talking about capital market themes, stocks all around, but why is 5 Paisa Capital up? A significant up move, and in this market also holding that levels up, 10% up, 13% intraday. Best intraday we saw, and there's a jump in the last 2 years. There's a significant jump coming in. Trading volumes, look at that, 150 times its 20-day average, and that's a big number coming in. Last 2 trading sessions, it has been up. One of the reasons can be there is that a potential re-rating as compared to its peer, that is Groww. Also, the 5 Paisa Capital, on the other hand, the numbers have not been very strong. Fundamentally, nothing much to prove for the company on the Q2 numbers. Just look at the revenue and profit, all of them down. Even the revenue mix, I have compared it with Groww because of 45% of revenue coming from this segment. Overall, the financial performance, nothing great in Q2 numbers. Broking income was actually down 2%, but the average client funding book, that actually went up, and that's what we are seeing, that there was some kind of a strength in the operational numbers. But business metrics overall, you look at it, total orders, executions, that has come down as SEBI and FNO impact has impacted most of the capital market players. Average daily turnover was on the higher side, and net new customer addition, that was nice. But net the operational numbers have been mixed, nothing great in Q2. But look at the valuation catch-up which is happening. for 5 paise capital. And this is where we are seeing the up move happening for the last 2 trading sessions.
Got it. Okay, let's bring on Sandeep Agarwal on that note. Sandeep, the conversation today has been about valuations in the capital market space and specifically on Groww. And as a pure play discount broker, is it justified? Can you really compare it with some of the other peers? First on that, what's your opinion on this and how do you look at fair paisa?
So, capital market is a space where there is a lot of interest, and honestly, the penetration level which is there today and the way we have seen penetration levels going up in other parts of the world, I think there is a long, long way to go. And because of that, all the capital market stocks have started doing well. Remember, there are sometimes some kind of, regulatory hiccups which keeps on happening because the regulator tries to control things sometimes. And because of that, we have seen some bit of, sharp corrections also in the past. But broadly, if you see in a long-term basis, these businesses are going to do phenomenally well because penetration level itself, that means the TAM is going to increase at a very fast pace. And 7, 8, 10 players who are doing, who have the higher market share, they will continue to do well. Having said so, any technology player coming in, any fintech player coming in, remember that, for fintech, the cost after a certain point of time, the operating leverage is so huge that, they can generate any kind of profit, any number of profit is possible. So that is the reason, always fintech players in any of the spaces, whether it is Swiggy, Zomato in the food space, or whether it is in the education space, whether it is in any media space, wherever, means not only in India, across the globe, you will see that, they get rewarded very, very substantially. But the thing which you have to remember is that the maximum value in this space is created when they are turning from loss to profit. So for example, if you see Amazon listed in 97 and in 2015, they made profit for the first time. But if you see the stock return, all the stock return has been made in those years when there was losses. And since 2015, while Amazon's profit has moved up 100 times, the stock has moved up only 8 times. So the point I'm trying to make is that, in this fintech platform, people get carried away by PE ratios, which looks very irrational. But remember, that is not probably the right metrics, because in fintech platforms and others, the customer acquisition cost or the customer retention cost is the capex, unlike manufacturing industry where there is a real capex. So if you treat that which is written off as opex as capex, then you will see that the PE ratios for most of these stocks are reasonable. Having said so, I am not recommending any stock right now, but I am saying that capital market in itself is a very good space to be in. We are very bullish on the space.
What do you like best? What do you like best within the capital markets? That's very generic, Sandeep. Come on, give us what is your picks right now. Would you look at a Groww if you've not got allotment? You're just waiting for a dip and you're seeing that stock price skyrocket. I mean, we should pull up how much has grown versus issue price. I think it's 90% plus.
85, 90%, yeah.
Yeah. So now tell us what you should do if you are that person watching this channel right now.
So we are a value fund, so we obviously cannot buy very expensive stocks. But let me put it this way: we are playing the capital market theme for almost like 2 years, and we have bought everything in the capital market space. Brokers, we have bought; wealth managers, we have bought the ITS, we have bought everything. But we have bought at a much better price. Today the prices are little higher, but still there are spaces.
No, but when it comes to Billion Brains Garage, is there FOMO? Did you miss out?
No, we don't see it like this. I think, the issue price was reasonably okay, but at this price, being a value fund, I cannot buy it.
Okay, fair enough. Meanwhile, let's just tell you what's happening with Groww, and the reason why you're seeing some of those prices spike is also a supply-demand situation. The daily average volumes in terms of what this company is there's 49 crore shares available for trade because the rest are in lock-in. Okay, so 44 crore shares are available for trade right now. Look at that chart. Let's just pull up that chart and it'll give you a close picture that since the 12th of November, what have been the delivery volumes coming in. And we'll give you a sense of volume so far. 52 crore shares have been traded versus 66 crore shares offered in IPO. This means that nearly all the freely traded shares have changed hands already. It's a pure supply-demand issue, which is also bumping up what's happening with Groww, and also maybe sometimes you're at the right time at the right place as an IPO. That is definitely happening one way or the other. Meanwhile, just word coming in from the Commerce Minister, an important statement actually, saying that there's no need to worry about the US-India trade ties as the partnership remains strong. Listen in.
A partnership which is as comprehensive as the US-India relationship has many elements. And every element need not run at the same speed. परिवार में भी कभी-कभी थोड़ी बहुत नोक-झोंक तो होती रहती है. And of course, negotiations is a process, and India as a nation has to secure its interests, has to secure the interests of our stakeholders, businesses, and balance it with our sensitivities, with the farmers, with the fishermen, with the small industry. And when we find the right balance, you can rest assured we will even get outcomes on this score. But the friendship is very enduring, and the partnership is ever growing. So we need not be worried. We stand on very strong pillars of democracy, very strong pillars of diversity, and a very strong pillar of a shared commitment to development. The story of Indo-American partnership can best be described as two trusted partners working together for the shared prosperity not only of both countries but of the entire world. In fact, we've just even signed a major LPG agreement just a few days back for importing over a long period of time, every year, 2.2 million tons per annum of LPG. So it's an ongoing process, and I can assure all the distinguished participants that just like the rest of the world, the US also shares a strong bond with India. They see India as a trusted partner. We are both equally committed to working to expand trade and commerce between the two countries. And when the deal becomes fair, equitable, balanced, you will hear good news.
Okay, I think that last line was the important one. When the deal becomes fair, equitable, balanced, you will hear good things. Word coming in from Union Commerce Minister Piyush Goyal. Rishabh Bhatnagar joining in, and he's been tracking this story very closely. This is what's on record. Rishabh, what are you hearing behind the scenes on where this deal is actually reached?
The deal, there's a lot happening. What we know so far is that the first tranche will cover reciprocal tariffs for sure, but it could also cover and address all sorts of tariffs that India is facing. So not just the reciprocal tariffs, but also the additional 25% tariffs that were imposed due to the Russian oil purchases, and also the Section 232 tariffs that are actually sectoral tariffs. So there are additional ones on steel, on copper, on auto parts. So those might also come under the ambit of the first tranche. And the timeline is supposed to be the fall deadline, which is the end of November. So roughly another 10-12 days left for that. And again, commentary from both sides remain very, very bullish. You had Kevin Hassett on the American side saying the deal is close to the finish line. On the Indian side, you have government officials that have told us that the first tranche is very, very close. So again, very, very close is the word that both sides are putting this at.
Okay, interesting. Rishabh, thanks so much for that. I think at this point, guys, all I want for Christmas is a trade deal.
Really?
Yeah.
Are you sure?
100%. I haven't gotten anything.
Someone's listening and you're not getting anything else, Alex. So
actually, China is also.
Fine with that.
Yeah, even China is. The reports are coming from US that China might get it before Thanksgiving as well. A trade deal gift.
Yeah, well, Christmas is not too far away.
Okay. So no other gifts for Alex.
I'm okay.
Please note,
We
you're
just have 1
capped
month
out of
left.
Secret Santa this year.
That's perfectly fine. And I'm pretty sure that everybody else will be happy as well.
Yeah, sure. Look at sanctimonious Alex this morning. All right, time for Profit Intelligence. What does Profit Intelligence do? We tell you what you should watch out for. We get you the insight before the markets close and get you set for the next day. So Amit Sarkar joining in for more.
Well, today it's oil marketing companies. Now, of late, we have seen a clear outperformance coming in from all the three listed state-owned oil marketing companies, IOCL, BPCL and HPCL, who at different time periods, be it last 1 month, 3 months or YTD, they have outperformed the benchmark, that is Nifty 50, by a big margin. Now, why this outperformance is something that we have seen? Firstly, the second quarter numbers were quite strong. In fact, all the three oil marketing companies, IOCL, BPCL and HPCL, have beaten the street estimates by a big margin. Apart from that, crude prices have continued to remain lower, below the $65 per barrel mark. This benefits the marketing segment, and on the flip side, the refining segment is also benefited on the back of steady or healthy Singapore gross refining margin, which is the Asian benchmark for refining. And when it comes to the LPG segment, LPG losses have also come down on a sequential basis. Now, this is largely because of the price hikes taken in the Indian market and because of lower prices coming in from the international market. And also the past losses that OMCs have suffered owing to the LPG segment have started to be compensated by the government starting November 2025. So what's the biggest worry here when it comes to the oil marketing companies? It's the fiscal slippage risk. Now, why this could happen? Because of the GST rate cuts that were announced a couple of months back, and also because of the multiple populist spendings that we have been seeing around the state budgets that have been also announced. So because of both these reasons, analysts believe that there could be a fiscal slippage of anywhere between 35,000 crore rupees to around 60,000 crore rupees, and this is as per multiple brokerages that we have compiled from. And how can the government meet this shortfall? The easiest way to do for the government is to increase the excise duty on petrol and diesel, and if they do that by at least 1 rupee as well, then that increases the annual revenue of the government by around 17,000 crore rupees. And if that happens, then what would be the impact on the oil marketing companies? Now, if excise duty is hiked, oil marketing companies won't be able to pass on the same to consumers. Why so? Because since 2022, despite the fact that crude oil prices have come below $65 per barrel, petrol and diesel prices have continued to remain unchanged. So they'll have to take this impact on their books. And if that happens, then the marketing segment of the oil marketing companies could see a big hit on their financials. Now, every 0.5 rupees per litre drop in gross marketing margin impacts the EPS and EBITDA of IOCL, BPCL and HPCL of anywhere between 8 to 24%. So HPCL stands to get impacted the most, while IOCL will see the least impact if there is a drop in the marketing margin. Also, the upside potential, now that analysts are seeing after this run-up or outperformance that we have seen, is quite limited. For IOCL, the 12-month target suggests a return potential of downside of around 2%. For BPCL and HPCL also, the upside is quite limited to just 5 to 8%. So keep an eye out for oil marketing companies. The biggest worry at this moment is a fiscal slippage that could lead to excise duty hike by the government.
Thank you, so Amit, for that, and that's what might be worrying these OMC stocks. Amit, let's have a technical chart check on all the three OMC stocks. Largely, it's looking like a kind of a negative setup coming in for a short-term trade or maybe even a positional. Which would be a good, call? Will there be any short call coming in?
So some of these stocks have actually run up of late. If you've noticed BPCL, HPCL, they have shown a very strong movement. Entering at these levels, so there has been some bit of a consolidation in the last 3-4 trading sessions for these OMCs. And given the kind of tailwinds that and headwinds that we have in the market, I don't think that any fresh entries are warranted at this level. Any dip in BPCL around 350 levels, which is the moving average support, one could try to initiate fresh longs over there, but not at the current levels.
Any BTST ideas, Amit? I know that you suggest that we're not really going anywhere from this point, but I'm sure individual ideas exist.
Yeah, I do see Devyani International, if you can pull up the chart. Last 3 days, the move that it has shown has been very, very positive and with very strong increasing volumes. So if anybody wants to take a punt in this kind of a sideways market, though one would be better off not taking too aggressive position. But still, if somebody wants to do a BTST, then Devyani International would be my pick at the current levels, keeping today's low as the stop loss for targets of about 155, 156 levels.
I also want to get Sandeep's view on this one. We've been asking a lot of people that have been coming on the channel, Sandeep, what the implications are on the fiscal side for states, and specifically on the OMC argument that Soumit was making. What do you think, and would you buy into any of these at all?
No, so, on the OMCs, the good thing is that we are seeing that oil is generally, the crude particularly is on a structural, the demand structurally is going to get lower and lower with alternate sources of energy. And because of that, what happens is that, the pressure, if the crude pressure eases, the pressure on the oil marketing company also definitely eases. Now, the only challenge is that, some of the times we have seen because of one or other reason, the burden on the state fiscal do go up. But I think structurally, if you take a long-term view, I think this is one sector which can re-rate substantially. And if you see it broadly in last couple of years, we have not seen much interventions also. So it would be wrong to say that, there is a lot of intervention and still the prices are not free. So I think this is one sector which awaits massive re-rating. And with crude prices structurally on a downturn, I think it is imminent. It is a matter of time. This sector should do well. You see, if you add next 2 years profit, most of the stocks are available at book value today. So I think it is a very good, very, very reasonably priced sector. And this is one sector which can definitely get re-rated the way we have seen other PSUs getting re-rated.
Your top OMC pick, Sandeep?
I won't name, but all these stocks we like always buy like a basket, because that is the best way to make returns. Sometimes one may not do well in a particular horizon, so we always play basket in every sector we like.
Okay, quickly I want to talk about Interglobe before Sharad takes you down to the closing last few minutes. Interglobe deep in the red. There's a 20 lakh rupee fine that DGCA has demanded, and the company has put out an exchange filing on it. It's been sliding since the get-go, but close to the low point of the day, about 2.5% down. Amit, would you pick up an Interglobe at these levels?
No, I would not, because if you've noticed since last 3 months, it has been in a sideways market. In fact, since June onwards, it has been in a sideways range between 5,500 and 6,000 levels. So a very narrow range of 500 points. So this is not a trading counter for the time being.
Pretty interesting. No trade coming for Interglobe Aviation. Thank you very much, Sandeep and Amit, for taking out your time and giving your views on both the fundamental and the technical aspect. Moving on to the closing. Today, we have seen Nifty's expiry, a very range kind of a move happening in, but kind of sell-off intensifying and coming below the 25,900 mark, and that is something which we'll be watching out for. However, Nifty Bank, the fall is not as high as Nifty. We're looking at these numbers. Well, let's pull out the Nifty heat map, how this is actually panning out, and largely we see the sea of red coming in. Earlier this was in the middle, even Stevens, but now you see only Bharti Airtel, Axis Bank doing well, but the sea of red coming in, Jio Financial, Tata Consumer, Tech Mahindra making it to the list. And of course, let's pull up the sectoral moves, how things are panning out. Overall, look at the IT space. That's where the selling has been on the higher side. Metal also, but largely we see most of the sectors are in the red. Let's pull out the advanced decline ratio, how things have moved. And the divergence, this still continues, and throughout the day we have seen that an almost 1:3 ratio in favor of bears is something which we are watching out for. Also, let's pull out the Nifty mid cap and the small cap 250 index. Both of them not showing much of growth. They tried a recovery attempt, but both of them ending near the day's low, and that is signifying that the sell-off is deepening. Also, let's get the BSE 500 contributors where the action is, especially GMR Airports, Jeffries upgrade coming in, Sapphire Foods. These stocks are doing well. Largely the QSR moves have started coming in. That's a value buying proposition. While on the negative side, we see Kalpataru, SKF, KICL, and even CEAT making it to the list where the selling has been there. But let's move on and see what's happening tomorrow. What are the key factors to watch out for tomorrow? Eyeing on the globe, Fed's bar speech is there, export prices is there, ADP employment is there, but most importantly, see the balance of trade and export-import data is also there. So we will be looking at macros, especially on how the Fed's rate cut trajectory goes into being interim dividend. These are the stocks which you should be tracking. And the IPO listing, another primary markets listing, and Tenneco Clean Air will be listing in the bourses. The primary market sentiment is strong, and also Excel Soft Technology, a 500 crore IPO, that will also be opening. So that's all for India Market Close. Keep watching NDTV Profit, and up next we are having Market Express, which Himangshi gets.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer, and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. But first up, let's see how the markets have fared today. So if we look at the market today, they've ended lower and snapped out of its 6-day gaining streak. Nifty has closed below 26,000 levels. If we look at the mid and small cap indices, so they have underperformed the benchmarks as well. Next up, we have Groww's market cap, which has now crossed the 1 lakh crore rupees mark as the stock continues to surge post-IPO. So strong October numbers, heavy institutional flows and also industry-leading customers additions have lifted the sentiment, but questions around sustainability and long-term profitability still persist. Now, WPIL is in the spotlight today after its arm secured a significant order worth 426 crore rupees from its joint venture. So the contract covers electromechanical and instrumentation works in South Africa, which is a big boost to the company's international project portfolio. So this order also strengthens WPIL's position in overseas infrastructure execution. Shares of WeWork India management will be in focus today after Jefferies has initiated coverage with a buy rating and also a target price of 790 rupees. So the brokerage calls WeWork a leader in India's rapidly growing flex space market, which is expanding twice as fast as traditional offices. They say that WeWork's model drives a higher revenue per member and also better margins, and that company is well funded for further expansion as well, with strong growth expected in the years ahead. Brokerage houses are turning upbeat on India's market outlook, with most strategists calling 2026 a stronger year for equities. Morgan Stanley says that Indian stocks are set for a solid comeback, and this is driven by policy-led cyclical recovery, and also expects about 13% upside in the Sensex by December 2026. So Jefferies highlights a clear earnings pickup in the September quarter, and this has been held by early festive demand and also a rebound in the financials that was seen. So Citi says that quarter two performance came in slightly better than expected, but stresses that sustaining momentum will be key. And also JP Morgan is more confident about the second half of FY26, and this is pointing to high single-digit earnings growth now and expecting double-digit expansion next year. Big brokerages are turning upbeat on PNB Housing after a surprise credit upgrade. Morgan Stanley stays overweight on PNB Housing after India Ratings unexpectedly upgraded its long-term rating to AAA. That's a move, the brokerage says, that boost the growth visibility and also borrowing the costs and also the loan spreads. So UBS also keeps its buy call, saying that AAA upgrade improves the sentiment and also could gradually lower the funding cost, while the lifting of RBI restrictions on overlapping businesses remains the key trigger. Next up, let's look at PhysicsWallah, which has made a spectacular debut on the D Street, listing at a strong premium and also signaling solid investor confidence in the EdTech major. So the market has cheered its steady growth, expanding the test prep footprint and also improving the profitability metrics. Shares list at 33% premium over IPO price. Jefferies is turning more positive on GMR Airports, maintaining its buy call and also raising the target price to 115 rupees, which is about a 20% upside. So the brokerage says that the company has delivered a standout September quarter performance, with EBITDA surging 74% year-on-year, despite softer passenger traffic. So Jefferies has now lifted its EBITDA estimates for FY26 to FY28 by 3 to 7% and also expects traffic growth to bounce back after last quarter's 4% 2% dip. So the note adds that GMR continues to offer a range, a rare mix of utility style business with strong consumption potential, making it an attractive play in the airport space. Viewers, Bansal Wire will be in focus after a major GST relief, where the company's tax demand has been slashed sharply from 45 crore rupees to just 69 lakh rupees. While a few assessment points still need clarification, the company says that it will file an appeal before the GST Appellate Authority. Next up, we have Keynes Tech, which has seen its shares coming under pressure today, falling nearly 6% as a major lock-in period has expired. About 20% of the company's equity has turned freely tradable, with nearly 11.4 million shares hitting the open market at once. And this is creating a sudden jump in the supply. So this technical overhang weighed on the stock despite strong fundamentals. The company has posted an impressive September quarter performance also, with net profit rising about 102% year on year. US all marketing companies have sharply outperformed the Nifty this year on the back of strong second quarter earnings and softer crude prices, and also healthy Singapore refining margins. So LPG losses have also reduced, with the compensation for past losses expected to begin from November 2025. But analysts now warn that the biggest overhang is the fiscal slippage, and this is driven by GST rate cuts and also higher state level spending. Brokerages estimate a potential shortfall of 35,000 to 60,000 crore rupees, with which the government may partly bridge by raising the excise duty on petrol and diesel. Next up, we have JSW Infrastructure that has signed an agreement to acquire a 51% stake in a special purpose vehicle developing a port project in Oman. With this acquisition, the SPV will become a step-down subsidiary of the company. The project also involves developing, owning and maintaining the operating also a 27 million ton per annum port, with a planned capital expenditure of $419 million. So JSW Overseas will act as the lead member and majority shareholder in the SPV. So the move expands JSW's Infra's international footprint and also adds the capacity to its long-term cargo handling portfolio. AstraZeneca Pharma has signed an agreement with Sun Pharma to distribute and also market the sodium zirconium cyclosilicate in India. So the drug is used for treating hyperkalemia, which is a condition marked by dangerously high potassium levels in the blood. So under the arrangement, AstraZeneca will retain the intellectual property rights and also import the license for the molecule, while Sun Pharma will take on the distribution and marketing responsibilities. So this collaboration allows the therapy-wider market access in India without altering the ownership or also the control of the product. Viewers, Union Finance Minister Nirmala Sitharaman has chaired the fourth round of pre-budget consultations with stakeholders as part of preparations for the Union Budget 2026-27. So the meeting held in New Delhi was attended by Union Minister of State for Finance Pankaj Chaudhary, Department of Economic Affairs Secretary Anuradha Thakur, and Chief Economic Advisor Dr. V. Anantha Nageswaran. So from recalibrating the STT between cash and derivatives to easing the burden of the dividend and also the buyback taxes, participants have outlined measures that they believe can actually deepen India's equity culture and also boost the household participation in the markets. So the pre-budget dialogue will continue through the week. Now on to a listing. MV Photovoltaics closed 0.83% higher after a muted listing on the exchanges. So the company's IPO was subscribed 1.92 times. Now this reflects cautious optimism from investors who see both promise and also pressure in the company's evolving business model. So the IPO of MV Photovoltaic Power, which concluded its subscription on Thursday, remained undersubscribed with an overall subscription of 0.97 times. Now, Shashidhar Jagdishan, HDFC Bank MD and CEO, is likely to be summoned by Mumbai Police in the Leelavati Hospital Trust case. So, the Economic Offences Wing of Mumbai Police is investigating the case of financial fraud and misappropriation of funds of Leelavati Kirtilal Mehta Medical Trust. Earlier in July, the HDFC Bank CEO had filed a petition in the Bombay High Court against the FIR for cheating and fraud, seeking interim protection from police summons. So previous members of the Leelavati Hospital Trust have also likely been summoned. Viewers, PhysicsWallah made a stellar market debut as the first edtech firm to list. We spoke to Prateek Maheshwari, co-founder and whole-time director, who said that the bumper listing has surprised the team. He also said that the online business is already profitable and offline is nearing the break-even. And management expects PAT to turn positive within 12 months. Listen in to that interesting conversation.
The man of the moment, and I would say the team of the moment, is PhysicsWallah. The IPO was, there were some murmurs when the subscription was not that exciting. You know, nowadays if there's a muted oversubscription, people think that the listing pop will not be there. But Prateek Maheshwari, thank you for coming in to the NDTV Profit Studios on your big day. And it is an exciting one. ऐसा listing होगा आपने सोचा था?
नहीं, बिल्कुल नहीं सोचा था।
अच्छा, पहले तो मुबारक आपको।
ना हमने सोचा था, ना एम्प्लॉइज ने सोचा था। और जैसे ही वो नंबर खुला, so everyone was like कि यार सही है या हम हमारा ही स्टॉक देख रहे हैं, किसी और का देख रहे हैं?
नहीं, तो the reason is कि सब्सक्रिप्शन के समय इतना इंटरेस्ट नहीं था। आप लोग थोड़े अंडर द रेडार थे।
तो like you know, subscription I think is not the right metric nowadays. Like you know, what is more important is कि market ने TAM बहुत अच्छा समझा. Like you know, हमारे anchor investors were like you know very solid. और ओवरऑल लेकिन जो हमने ऑनलाइन बिजनेस बनाया है दैट इज़ वेरी प्रॉफिटेबल और ऑफलाइन इज़ ऑल्सो ऑन अ पाथ टू प्रॉफिटेबिलिटी। ये चीज़ मार्केट को काफ़ी अच्छे से समझ में आई एंड दैट मैसेज कन्वेड वेल, सो आई थिंक उसी का ही आउटकम है। But a lot of companies did amazing on a listing day. That's just a one-day prize and a number, and like you know, so that will fade away. We have to perform in every quarter, and like you know, every financial result has to be at par. Like you know, we have to beat our guidance. So that is more important.
So then let me ask you the question, which will now maybe become more important than TAM. TAM is of course there, but TAM is, you know, when you're raising money privately.
I can guess this question. This question is about profitability, right?
अरे देखिए आप पूरे नंबर में पास हो रहे हैं आज. Okay, test me. What is the path to profitability? What is the timeline?
So less than 12 months is what we are guiding to the market.
EBITDA, positive.
No, PAT
positive.
So EBITDA already we are there. EBITDA positive, we are already there. And our EBITDA has improved almost 4 times in just 2 years. Like, you know. But PAT level profitability is not a challenge. That will come in less than 12 months.
Okay. And how will that happen? What is the path to that profitability?
So, like, you know, see, we are a very young company, like, you know, less than 5 year, almost 5-year-old company at this point of time. Like, you know, there are a lot of leverages in terms of marketing cost. There's a lot of leverages in terms of tech cost, you know, and overall, like, you know, student, you know, enrollments will exponentially increase from here. So we need not to increase the prices of our products, like, you know, to achieve this growth. At the same time, if you see the percentage of the people cost as a percentage of total revenue is sharply declining in past 2 years.
Why is that?
A lot of leverages are coming because of the technology automation which we have done. AI is helping us a lot to make us even more efficient from here. Like, you know, AI is solving doubts for the students almost as good as human. Like, you know, along with that, like, you know, for a growth stage company, like, you know, the entire focus was to capture the market share maximum. But since we are now a public listed company, like, you know, our responsibility becomes equally important कि हम bottom line पे भी उसी focus के साथ में काम करें.
नहीं, ये AI वाला बताइए. What is the total number of employees? And you know, I think I'd asked you this question off record. It's quite a large number, but I'd like you to say it. And do you see that coming down because of technology and AI tools?
So, like, you know, अभी total number of employees 18,000 है company में, 18,000 like, you know, people in the company, because we have opened a lot of offline learning centers, more than 300 offline learning centers at this point of time, and you have to deploy people there to run these centers. AI, like, you know, will not, because of AI, there will not be like, you know, iteration, but for my future growth, I need not to hire extra employees. Like, you know, from last year to this year, like, you know, we have grown almost.
So the rate at adding employees will be
reduce.
Will be lower.
So leverage will come from people cost. A lot of leverage will come from people cost.
तो जो आपका model है, it is a low cost model, right? So where is then that growth going to come from? Only from wider spread, or will there be scope of increasing fees, more specialized courses that you can charge premium for? What is the kind of strategy there, or will you stick to the? Because we were listening to Alak Pandey today, we were talking about the Einstein who might be today selling chai, or Marie Curie जो मोमो बना रही है, लेकिन fact is अब listed company हो तो थोड़ा premium आपको उस दिशा में आप जाने वाले हो?
तो लेकिन अगर आप देखेंगे हमारी जर्नी को, हिस्टोरिकली जो विजन है कंपनी का कि यार एजुकेशन का एक्सेस भारत में हर बच्चे को मिले और उसके लिए प्राइस का कम रहना ज़रूरी है, पर एट द सेम टाइम इन्वेस्टर्स को रिटर्न दिए जा सकते हैं बाय इंट्रोड्यूसिंग वैल्यू एडेड सर्विसेज ऑन योर बेस लर्निंग प्रोडक्ट। वैल्यू एडेड सर्विसेज जैसे कि आपको खुद का टेस्ट बनाने का फीचर मिल जाएगा, लास्ट ईयर की वीडियोस का एक्सेस मिल जाएगा, AI आपके डाउट सॉल्व कर देगा। इस तरह के फीचर्स हमने बैच जो हमारा फंडामेंटल लर्निंग प्रोडक्ट है उसके ऊपर लॉन्च किया, और इन वैल्यू एडेड सर्विसेज को स्टूडेंट्स ने अडॉप्ट किया और इससे हमारे आरपूस भी इम्प्रूव हुए, प्रॉफिटेबिलिटी भी इम्प्रूव हुई। एट द सेम टाइम हमने लास्ट ईयर स्मॉल कोहर्ट टू-वे कम्युनिकेशन प्रीमियम कोर्स लॉन्च किए, लाइक पावर बैच एंड क्यूरियस जूनियर। वहाँ पे भी हमको अमेजिंग स्टूडेंट रिस्पॉन्स मिला। एक और बहुत ही अच्छा इनोवेशन हमने इस साल किया है, लेकिन हमें लगता है कि यार 5,000 भी बहुत ज़्यादा प्राइस है एक बहुत बड़े इंडिया के लिए, तो क्या हम इसको मंथली 300 रुपीज़ पे ला सकते हैं? तो उसको सोचते हुए हमने हमारा खुद का लर्निंग OTT लॉन्च किया विद द नेम ऑफ पाई 1 नवंबर को अलख ने इसको लॉन्च किया, और दैट विल इम्प्रूव द एक्सेस इवन टू रिमोटेस्ट पार्ट ऑफ द कंट्री, जहाँ पर स्टूडेंट्स 5,000 रुपए भी अफोर्ड नहीं कर सकते, दे कैन अफोर्ड मंथली 300 रुपीज़। एंड
तो यही तो मेरा सवाल है कि आपका फोकस इज ऑन अफोर्डेबिलिटी विच इज अ वेरी नोबल कॉज। अब लिस्टेड स्पेस में नोबल नीड नॉट इक्वल टू प्रॉफिटेबिलिटी।
सो विद दिस नोबल कॉज पिछले 2 साल में रेवेन्यू 4 गुना किए, इब्डा को हमने 4 टाइम्स ऑलमोस्ट 4 टाइम्स इम्प्रूव किया। लेकिन अगर कंपनी मिशन पे चलती है, अपने कोर वैल्यूज को इंटैक्ट करके चलती है, तो तो प्रॉफिटेबिलिटी इज जस्ट आउटकम ऑफ द गुडनेस वी डिलीवर इन द क्लासरूम। वो टैग अलॉन्ग है, वो बाय प्रोडक्ट है, वो हो जाएगा, मतलब वो हो भी रहा है। मतलब हम हिंदुस्तान की ऐसी कंपनी है जिसने 3,000 करोड़ का टॉप लाइन लेस देन 5 ईयर्स में अचीव किया। न एजुकेशन न कंज्यूमर इंटरनेट, वी आर द फर्स्ट लिस्टेड कंपनी इन इंडिया जिसने 3,000 करोड़ का टॉप लाइन लेस देन 5 ईयर्स के अंदर अचीव किया। तो ग्रोथ इज नॉट अ प्रॉब्लम। बहुत बच्चे हैं भारत में, 30 करोड़ बच्चे हैं इंडिया के अंदर, हम इसका 1.5% बढ़ा रहे हैं अभी। 98.5% मार्केट, वाइल वी आर मार्केट लीडर इन टर्म्स ऑफ टॉप लाइन, नंबर ऑफ स्टूडेंट्स, बच्चों के रिजल्ट्स, बट वी आर barely स्क्रैचिंग द सर्फेस। 98.5% भारत तो अभी हम मोनेटाइज कर ही नहीं पाए हैं।
फोरे इन द साउथ, क्योंकि आपका कंसंट्रेशन ज़्यादा नॉर्थ में है, क्या वो अगला है कंपटीशन फ्रॉम से कोटा एंड कोचिंग सेंटर्स लाइक दैट?
सो साउथ इज अ मेजर फोकस। 11 इंडिक लैंग्वेजेस हमने लास्ट ईयर लॉन्च करी थी। वहाँ पर टीम बहुत एफर्ट मार रही है और डिस्ट्रीब्यूशन बढ़ा रही है, बच्चों को फ्री पढ़ा रही है, एज वेल एज मोनेटाइजेशन भी स्टार्ट किया है। तो अगले 2 सालों के अंदर हमें साउथ मार्केट विन करना है। दैट इज
व्हाट इज द केपेक्स दैट यू विल नीड फॉर दैट?
सो साउथ के अंदर हम ऑनलाइन फर्स्ट जा रहे हैं। फर्स्ट वी विल विन इन आवर ऑनलाइन कोर्सेज एंड देन वी विल स्टार्ट आवर ऑफलाइन लर्निंग मॉडल्स एज वेल। तो हमारा ऑफलाइन इज पार्ट ऑफ द सेम फ्लाई व्हील जो हमारा ऑनलाइन है। ऑनलाइन में हम 93% स्टूडेंट पढ़ाते हैं और उसी का एक सेक्शन हमारे ऑफलाइन के अंदर कन्वर्ट हो जाता है।
प्रमोटर स्टेक आप यहीं तक रखेंगे या कम करेंगे आगे?
सेबी के अकॉर्डिंग 75 तक जा सकते हैं। बट
अच्छा, ये तो आप ऊपर की तरफ बोल रहे हैं। No, you come to the market and you let people into your growth story, but there seems to be no mood over here to reduce promoter stake.
We will not be selling promoter stake, because we want to run this company for rest of our life. So they are not immediate plans to either buy or sell our stakes.
Okay, and now you really do not need, you're capitalized. You've just raised money. What is the first step of that capex? उन पैसों का क्या करोगे? What is the tranches for that?
So अगर आप कंपनी की करंट ट्रेजरी भी देखेंगे ना, तो वो 2,500 करोड़ से ज़्यादा है। तो मतलब वी आर ऑलरेडी वेरी सफिशिएंटली कैपिटलाइज्ड। दिस capital will of course allow us to go into southern market, to open 200 new centers. But at the same time, education is a business of love and trust. अगर पैसों से यहाँ पे बिजनेस बनता तो our competition had $10 billion of capital with them,
कौन से क्या बायजूस की बात कर रहे हो?
all of them put together, उन्होंने $10 billion रेस किए. तो मुझे लगता है sometimes money hides problem, money doesn't solve problem. और एक अच्छा एजुकेशन बिजनेस, अच्छा वर्ड ऑफ माउथ बिजनेस होता है. अगर आप बच्चों को अच्छा पढ़ाएंगे तो अपने फ्रेंड्स को बताएंगे, आपके पास बच्चे आते चले जाएंगे.
Why do you think physics wala succeeded where Byju's failed?
So, not just Byju, I'll take the entire edtech, sector at a glance. सारे players top 5% इंडिया को टारगेट कर रहे थे. 80,000 से 1 लाख तक की इनकी फीस हुआ करती थी. अब टॉप 5% इंडिया को आप 10 प्लेयर टारगेट कर रहे हैं. लेकिन वी केम अप विद द वेरी डिफरेंट स्ट्रैटेजी कि हमें रिमेनिंग 95% को एड्रेस करना है. इंडिया के अंदर रिवॉल्यूशन इन एजुकेशन तभी आएगा जब तक ये एग्ज़ाम के फॉर्म की जो फीस है ये तैयारी की फ़ीस के आसपास नहीं जाएगी. लेकिन जब तैयारी की फ़ीस एग्ज़ाम की फॉर्म की फ़ीस के पास नहीं जाएगी तब तक ये पूरा मार्केट ऑर्गेनाइज नहीं होगा. तो हमारा तो विजन ये था कि यार कितना अफोर्डेबल बैच को बनाएं, लर्निंग को बनाएं और ऐसे स्टूडेंट्स जिनके पास में गुड क्वालिटी लर्निंग का एक्सेस नहीं था, उनको एक मौका दें, एक फेयर अपॉर्चुनिटी दें. आपने अलग को सुना होगा आज, और वी आर अ वेरी यूनिक लिस्टेड कंपनी ऑल्सो, जहाँ पर जब NSE सेलिब्रेशन के अंदर स्टूडेंट्स आके स्पीच दे रहे हैं, स्टूडेंट्स बेल रिंग कर रहे हैं. तो एवरीवन एट NSE ऑल्सो टोल्ड अस कि यार इट्स अ वेरी यूनिक एक्सपीरियंस, आप लोग कुछ अलग कर रहे हो.
Why is Alak so media shy?
So he is not media shy at all. So he is in front of camera all the time because.
No, but it's different when someone's asking you a question.
So Alak is specifically want to address academics part of the business, want to address impact part of the business, and the path to profitability, the numbers questions is my responsibility.
You've done very well in your first interview post listing, Prateek. Thank you so much for joining us here at NDTV Profit, addressing all of your new investors. Your stock is doing very well, but like you said, वो एक दिन का exam ये चलते रहेगा as far as the stock market is concerned.
Right.
Thank you so much for speaking with us.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Market ends lower to snap out of its 6-day gaining streak. Nifty closes below 26,000 mark. All sectors finish in red with Nifty Realty as the top loser. Mid and small cap indices underperform the benchmarks. Commerce Minister Piyush Goyal meets with stakeholders to discuss smoothening of FDI, FII processes. Sources say Minister will meet e-commerce firms, startups, venture capitalists and industry representatives. Prominent capital market participants recommend tax tweaks, higher retail participation at pre-budget meet with the Finance Minister. Propose aligning short-term dividend tax for domestic investors with NRI rate. Groww's share price gains over 90% versus the issue price after the market cap crossed 1 lakh crore rupees, daily average volumes at 49 crore rupees. Physicswala ends 42% higher than the issue price after debuting at 33% premium. Founder Prateek Maheshwari tells NDTV Profit that the bumper listing came as a surprise to the team. Government approves a new policy for easier and cheaper transportation of cement in bulk quantity. Tank containers developed by Concord for bulk cement to be used for multimodal transportation. Supreme Court issues notice on a plea by former Finance Secretary EAS Sarma alleging bank fraud of nearly 40,000 crore rupees by Anil Ambani and Reliance Communications. Seeks response from ED and CBI in 3 weeks. Hello and welcome. Good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we'll be taking you through some of the key highlights when it comes to markets, national as well as international news. Let's begin with checking how the markets fared first. Benchmark indices ended on a negative note with the Nifty below 26,000. Markets snapped a 6-day gaining streak with Nifty losing 103 points and the Sensex slipping 0.33% at 84,670 levels. All sectors closed in the red, led by steep losses in Nifty Realty, while the IT index shed more than 1% today. Meanwhile, Nifty PSU Bank, oil and gas also halted their 2-day winning run. My colleague Mahima now joins us with a detailed market roundup of the day.
So it's been a volatile day of trade. Expiries, of course, playing its role. The Nifty is closed below the 25,900 levels, snapping its 6 days gaining streak now. The benchmarks, of course, did do a tad bit better than the broader markets. Broader markets throughout the day have been under pressure. The mid-cap 150 did end in red. SKF India, Grindwell Norton fell the most. For small-cap 250, Keynes Tech and Godavari Power fell the most. All sectors have ended in red today. The Nifty Realty fell the most. Nifty Realty has emerged as a top Nifty loser. Of course, a lot of this was led by counters like Sobha Limited and DLF. Nifty Realty, Nifty IT and Nifty Metal, all of these three indexes fell over 1%. Nifty PSU Bank, oil and gas did snap its 2 days gaining streak, and Nifty Pharma, financial services snapped its 4 days gaining streak, and Nifty Bank snapped its 7-day gaining streak. So this is the overall view as to how markets have done in trade today.
Thanks for that roundup, Mahima. But as we come to a close of this earnings season's, viewers, markets are set to move in line with earnings. And according to Motilal Oswal's head of research, Gautam Duggad, a 10 to 12% return over the next few months is very much on the table. He points out that indices aren't telling the full story. While Nifty earnings have inched up just 2%, mid-caps are delivering a strong 25% earnings growth. Let's listen in.
10 to 12% return in the next 12 to 15 months is a possibility. Now, whether you call it a massive bull run or, sideways market that we have seen for the last 15 months, against that, even a 10% rise in Nifty will look good. But what we are essentially saying is indices are not giving you the correct picture if you look at the earnings. The Nifty earnings have grown 2%, but the mid-cap coverage universe that we have of 97 stocks, they have posted 34% earnings growth. Even if one were to account for OMCs, we are talking about a 25% earnings growth in mid-caps.
And Groww's market cap has now crossed the 1 lakh crore mark as the stock continues to surge post-IPO. Strong October numbers, heavy institutional flows, and industry-leading customer additions have lifted sentiment for this particular script. But questions around sustainability and long-term profitability still persist. Let's bring in my colleague Sharad to break down what's really driving this growth at Groww.
Well, that's the question everybody is asking, and each time the stock is giving a different answer. Grow's market cap, of course, comfortably above the 1 lakh crore mark. And if you look at the important companies, ABB India, Indian Hotels, all these big, large cap companies which we have always heard about, it has outgrown these in terms of market cap. Stock movement, of course, there was a decent listing coming on November 12, a 14% premium, but after that, they see the significant up move. It is now plus 60% now, currently more than 70% growth coming in from the issue price. But the question remains is why the growth is coming in. Institutional interest, HNI interest is still there on the counter. Long only funds are very active, including recently Motilal Oswal increasing stake in the company. And after listing, there was an operational data out for the month of October that was also strong. And just compare the market share, that's almost 26% as compared to Zerodha's 15.5%. Also, October month belonged to Groww as well when it comes to addition of new clients. They were the only one in the green, rest all peers were in the red. Looking at the peers, the revenue CAGR and the profit CAGR last 3 years which we have taken, most of the parameters it is beating Zerodha, Angel One and Motilal Oswal. But the question remains is the valuation sustainable? We have taken the valuations assuming a 50% growth in the revenue for both P as well as price to sales ratio, and looking at that, Groww stands at 12 times price to sales, and the price to earnings that stands at 26 times. Still on the expensive side if we compare that with Angel One and Motilal Oswal. So the question remains is, will Groww grow more, or will we see some valuation catch up happening from its peers?
And moving on, PhysicsWallah made a stellar market debut as the first edtech firm to enter the listed universe. The stock jumped over 42% from its issue price today. We spoke to Prateek Maheshwari, the co-founder and whole-time director of the company, who said the bumper listing in fact came as a surprise to the team. He added that the online business is already profitable, the offline segment is nearing break-even, and the management expects PAT to turn positive within the next 12 months. Listen in.
The man of the moment, and I would say the team of the moment, is PhysicsWallah. The IPO there was some murmurs when the subscription was not that exciting. You know, nowadays if there's a muted oversubscription, people think that the listing pop will not be there. But Prateek Maheshwari, thank you for coming in to the NDTV Profit Studios on your big day, and it is an exciting one. ऐसा listing होगा आपने सोचा था?
नहीं, बिल्कुल नहीं सोचा था।
अच्छा, पहले तो मुबारक आपको।
ना हमने सोचा था, ना एम्प्लॉइज ने सोचा था, और जैसे ही वो नंबर खुला, so everyone was like कि यार सही है या हम हमारा ही स्टॉक देख रहे हैं, किसी और का देख रहे हैं?
नहीं, तो the reason is कि सब्सक्रिप्शन के समय इतना इंटरेस्ट नहीं था, आप लोग थोड़े अंडर द रेडार थे।
तो like you know, subscription I think is not the right metric nowadays. Like you know, what is more important is कि market ने TAM बहुत अच्छा समझा. Like you know, हमारे anchor investors were like you know very solid. और ओवरऑल लेकिन जो हमने ऑनलाइन बिजनेस बनाया है दैट इज़ वेरी प्रॉफिटेबल, और ऑफलाइन इज ऑल्सो ऑन अ पाथ टू प्रॉफिटेबिलिटी. ये चीज़ मार्केट को काफ़ी अच्छे से समझ में आई एंड दैट मैसेज कन्वेड वेल. सो आई थिंक उसी का ही आउटकम है. But a lot of companies did amazing on a listing day. That's just a one-day prize and a number, and like you know, so that will fade away. We have to perform in every quarter, and like you know, every financial result has to be at par. Like you know, we have to beat our guidance. So that is more important.
So then let me ask you the question, which will now maybe become more important than TAM. TAM is of course there, but TAM is, you know, when you're raising money privately.
I can guess this question. This question is about profitability, right?
अरे देखिए आप पूरे नंबर में पास हो रहे हैं आज. Okay, test me. What is the path to profitability? What is the timeline?
So less than 12 months is what we are guiding to the market.
EBITDA, positive.
No, PAT
positive.
So EBITDA already we are there. EBITDA positive, we are already there. And our EBITDA has improved almost 4 times in just 2 years. Like, you know. But PAT level profitability is not a challenge. That will come in less than 12 months.
Okay. And how will that happen? What is the path to that profitability?
So, like, you know, see, we are a very young company, like, you know, less than 5-year, almost 5-year-old company at this point of time. Like, you know, there are a lot of leverages in terms of marketing cost. There's a lot of leverages in terms of tech cost. Like, you know, and overall, like, you know, student, like, you know, enrollments will exponentially increase from here. So we need not to increase the prices of our products, to achieve this growth. At the same time, if you see the percentage of the people cost as a percentage of total revenue is sharply declining in past 2 years.
Why is that?
A lot of leverages are coming because of the technology automation which we have done. AI is helping us a lot to make us even more efficient from here. AI is solving doubts for the students almost as good as human. Along with that, for a growth stage company, the entire focus was to capture the market share maximum. But since we are now a public listed company, our responsibility becomes equally important कि हम bottom line पे भी उसी focus के साथ में काम करें.
नहीं, ये AI वाला बताइए. What is the total number of employees? And I think I'd asked you this question off record. It's quite a large number, but I'd like you to say it. And do you see that coming down because of technology and AI tools?
So, अभी total number of employees 18,000 है company में, 18,000 people in the company, because we have opened a lot of offline learning centers, more than 300 offline learning centers at this point of time, and you have to deploy people there to run these centers. AI, will not, because of AI, there will not be, iteration. But for my future growth, I need not to hire extra employees.
And while that was the management of Physics Wala commenting on the bumper listing, Union Minister Piyush Goyal today spoke on the India-US relationship, saying that the partnership between the countries is comprehensive and enduring. He stressed that every part of this partnership cannot move at the same speed, but the overall bond is growing stronger. The minister's remarks were noted during his address at the 22nd Indo-US Economic Summit. Let's listen in.
A partnership which is as comprehensive as the US-India relationship has many elements. And every element need not run at the same speed. परिवार में भी कभी-कभी थोड़ी बहुत नोक-झोंक तो होती रहती है. And of course, negotiations is a process. And India as a nation has to secure its interests, has to secure the interests of our stakeholders, businesses, and balance it with our sensitivities.
And Commerce Minister Piyush Goyal is in a meeting with key stakeholders to streamline FDI and FII processes. The discussion will focus on making foreign investment flows faster and more efficient, with inputs expected from e-commerce players, startups, and industry bodies. Let's go across to my colleague Rishabh Bhatnagar for all the key details on this.
Right, a very important meeting is supposed to take place at Wanija Bhavan. Today, Commerce Minister Piyush Goyal is set to meet stakeholders from the foreign direct investment institutions as well as the foreign institutional investment companies. That's what we're picking up. What we're seeing is that these discussions, they will revolve around making the FDI as well as the FII processes more smooth, faster, as well as more efficient. Again, all of this is pronged towards ease of doing business. That's been a pillar of this current government. What we're seeing is that the minister is set to meet e-commerce firms, startups, venture capitalists, as well as industry representatives. So what we can see is that certain FDI policies or certain FII policies could see some sort of an easing. Remember, this is just an industry consultation at this point in time. No rules are being changed as of now. But this is an important step towards easing FDI as well as FII investment in India.
And moving on, key market voices have made a strong push for tax reforms in their meeting with the finance minister ahead of the budget. From recalibrating securities transaction tax between cash and derivatives to easing the burden of dividend and buyback taxes, participants have outlined measures they believe can deepen India's equity culture and boost household participation in markets. Let's go across to my colleague Shrimi for all the details on this.
Yeah, that's right. Capital Market concluded its pre-budget consultation with Finance Minister, where prominent names like Motilal Oswal, Saurabh Mukherjee, Sandeep Sikka, people from BSC, MCX, and even in mutual fund industry attended that meeting. And what we have been given to understand that several suggestions has been pitched during the meeting, which includes lowering the securities transaction tax on cash compared to derivative. Now, remember, STT has been in discussion after a PIL have been filed raising an issue of double taxation. So that is something quite a noteworthy, and we will see how that will pan out. The second discussion were around how to sort of increase the household savings and channelizing those savings into equities, increasing the exposure to 8% from current 5% is also something which has been discussed. Other than that, the buyback tax, what market participant pitched, that it should be on the profit portion and not on the total buyback amount. Apart from that, the discussion also being held on aligning the short-term dividend with the NRI rate. Otherwise, the domestic investor has to end up paying higher tax rate of around 42% is what the concern being raised. So in all, the discussion went well, and we need to see how these discussion will be taken up by the Finance Ministry. And clearly, this entire week has been, going to be very busy for Finance Minister as she's meeting people and representatives across the sector. And in fact, the final pre-budget consultation will be on October 28th with social sector and internal officers. And perhaps this will be a crucial meeting, crucial pre-budget consultation, because that will set the tone and the preparation for the government for the upcoming budget. And this is also important, as you remember that a meeting with economists where the economists suggested the need of a growth-led budget, and that also kind of hinted towards that government should focus more on the fiscal prudence. And this is also coming at a time when 16th Finance Commission submitted its report recently on fiscal glide path of government for next 5 years. So very interesting to watch out how these suggestions will be taken up by the government and whether it will be reflected in the upcoming budget or not.
And in a game-changing move, the Indian Railways has launched a new policy to make it much easier and cheaper to transport huge quantities of cement across India using trains. The policy establishes new bulk cement terminals, enabling cement companies to build special storage warehouses directly on railway land. Now, this would save money, as unlike earlier, loose cement will directly be carried into special rail wagons, then transported to terminals near city lands. Fewer steps will incur lesser cost. In fact, Railway Minister Ashwini Vaishnav spoke highly of this collaboration between the railway and the cement industry, especially highlighting the decrease in cement transportation rates due to this policy. Let's listen in to a brief chat with us.
Major railway reforms for cement transportation have come in. Talk to us about what they mean for the consumer.
The middle class families, the transportation cost of cement for the middle class families will substantially reduce by these reforms. These reforms basically, this is a combination of reform and innovation. The innovation part is we have designed a new container, which is a tank container, in which bulk cement can be loaded in the factory itself. Then the bulk cement can be transported in this tank container without any pollution to the point where it is going to be consumed. In this way, basically cement gets transported at a lower cost, non-polluting method, and at the consumption point, cement can then either be filled in an RMC plant or a batching plant, or it can be bagged and then distributed. So this way the cost for middle class families will reduce.
Bitcoin nosedived below the $90,000 mark, extending its sharp recent losses and signaling deep distress across the cryptocurrency market. The sell-off began over the weekend, with the largest cryptocurrency slipping beneath $93,714 on Sunday, erasing all gains for the year. After hitting a record high of $126,251 just weeks ago, Bitcoin's rally has unraveled amid global uncertainty and tariff comments from President Trump. By Monday, the decline deepened. The decline deepened as Bitcoin breached $91,500 and traders rushed to hedge against further losses. This downturn comes just weeks after Bitcoin skyrocketed. The broader crypto market has also suffered, tracking Bitcoin's steep decline as investors weigh the impact of the Federal Reserve's cautious stance and future rate cuts. Could negative momentum push Bitcoin even lower in the coming days? Well, to discuss this and a lot more, we're being joined by Ashish Singhal. He's a co-founder at CoinSwitch. Welcome to the conversation, Mr. Singhal. My first question to you is pretty straightforward. What, according to you, are the reasons behind the fall that we've seen in Bitcoin?
I think there are multiple reasons, but primary being the uncertainty in the US Fed rate cut. Because of that uncertainty, risky assets, especially crypto, has been hit the hardest. But this is similar to how you're seeing in US equity market as well. There are, risk of valuations, AI bubble being called out. There are, ETFs outflows. So ETFs are where, HNIs and institutions can invest easily into crypto. We have seen a lot of outflows and selling or profit booking from there. I think the culmination of all of it is what is causing a dip in the market.
While you have highlighted the cause behind the dip that we're seeing in the cryptocurrency euphoria, but the euphoria in the first hand was created by Trump's victory. Now, is that fading? Because Trump was very visibly, conspicuously pro-crypto. Do you think that trend is now taking a backseat?
I don't think so, because what we've seen in the US is a very positive policies, be it, the stable coin, the Genius Act, regularizing crypto in and, integrating it with TradeFi, the traditional finance, and a lot of banks adopting it, a lot of companies adopting it. And I think that has continued to remain the same. I think it's the uncertainty in the market which has caused a major dip rather than any policy change. To be honest, we expect in the next 3 years of the Trump administration, more policies, more pro-crypto policies would come in, which would push other countries as well to unite and hopefully do positive regulations on crypto as well, especially in India, right? So I think that momentum hasn't slowed down, but I think it's the overall risk factor and crypto being a risk on asset where you're seeing, people pulling off the money because of the uncertainty whether the rate cut would happen or how much of a rate cut would happen in December.
Okay, so Mr. Singhal, you've highlighted uncertainty as the main cause behind the dip that we're currently seeing. And also with decreasing probability of the Fed rate cut, Bitcoin could be more affected. What, according to you, would be the short and the near term, like the near term as well as the long term target for Bitcoin? And do you pencil in more rate, more fall in the Bitcoin price going forward?
So I think in the long run, industries remain to be bullish. Like I said, there are a lot of good policies which has come in crypto, especially led by the US administration. We continue to see that, a lot of adoption would continue to happen in crypto across different jurisdictions. A lot of countries are now regulating crypto and more adoption is happening. So I think that would remain the same. And even on our platform CoinSwitch, the data shows the same. All long-term investors have actually bought the dip. 40% of our investors have bought Bitcoin today, reassuring that, they believe in this asset class and they see it as buying the dip itself. In the short run, there might be some uncertainty because, like we discussed, the rate cut, we are also talking about some, possible risk in the US stock market itself due to the AI bubble talk that has been happening. And I think that is impacting all the risky asset classes. So this is not just limited to crypto. It is actually impacting all the asset classes, but crypto probably is the first one to be hit and to have seen the direct impact today. But in the short run, there might be, some more correction, but in the long run, we stay bullish. And I think the industry stay bullish on the future aspects of what the price could be for crypto and Bitcoin especially.
Okay, so what would your key resistance level, if you had to just give one, for crypto for the next 2 months be, for 2 to 3 months? Because that's how volatile it is. A few weeks ago, it was at 1.26, and now we're seeing it fall below 90. So therefore, that's why I'm asking you.
I think for me, support target would be somewhere around $105,000, not above that, because in the near run, the uncertainty will continue to lie till December, unless we have certainty or at least a reality check on the Fed rate cut. You will not see a sharp increase in the price. So that's my personal view in the short-term support that Bitcoin sees today.
All right, Mr. Singhal, thank you so much for bringing us those points to us. So basically lower rate cuts, lower probability of rate cuts, the AI bubble